Now you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knucklehead. Happy Monday to just you, my son. How are you?
Good morning. Good morning.
You had a lot of things happen to you even before we started trading. You went skiing with your soon-to-be 16-year-old brother. You survived.
Yes. No injuries. Perfect. It was good practice run. I've been watching some ski videos on stretching. So I'm doing some stretches beforehand. Watching some YouTube stuff.
That's probably the best thing you can do, honestly. I never did it. I probably regret it, but I mean, we're the only mammal that doesn't stretch when we wake up. I mean, you should stretch, man. That's especially at your age.
Yes, no, for sure. That was I was with some buddies last night, and that was their big suggestion was, do some stretches. Do some stretches.
Good.
Smart idea.
Good.
So we'll see if I survive. I will be gone for the rest of this week. So don't think that if you don't see me tomorrow, that means that I have a catastrophic injury. I am gone through the end of this week and into next week. So I'll be back Tuesday, barring any sort of problem. So crossing our fingers here.
Yes, 100%, 100%. Now, have you gotten a snow report? Because you're going to Vail.
I'll be in Vail and Aspen. Snow is lackluster, if not horrible for this part of the season. So we'll see. I mean, the things are getting stacked against me. Not only am I a beginner skier, but now, the whole thing is covered in ice and dirt instead of nice fluffy snow. So, we're really hoping that the situation changes a little bit here.
You can't ski on dirt. Remember that, okay?
Yeah.
It doesn't move well. You won't.
I know. I don't want to bail though. I don't want to be that guy. Like, the conditions. Like, I don't want to play that card.
No. You have to go out there.
I gotta make it down the run like once or twice.
Oh, come on! You're gonna have a wonderful time. It's great. Honestly, you're gonna be good. You really are gonna be good.
Yes.
It's gonna be great.
Oh, that's so nice.
You got to take a picture from the top of the mountain, with the sun in the background, kind of thing.
Is that sound effect? Is that John? Is that like a recording of John? It kind of sounds like John.
Let's stick with that. Yeah.
I think it kind of does. It sounds like what John would sound like.
If it isn't, it should be.
Oh,
it should be.
But,
well, that's awesome.
It should be fun.
My home is empty now after Christmas and stuff.
Oh, you didn't want me to stay around? I could have. I could have stayed longer.
Dude, how about our Christmas? It was uneventful. Nobody got bit in the face by a dog. I mean, nobody had to spend the night in the ER room.
No, it was good. Yeah, it was surprising. I think that's what happens. Like, the old age, you stop doing the debaucherous drinking. It's just not, you got babies there now. So it's like, you can only be so crazy with, a handful of children running around. So yeah,
it's true. It's true.
Kind of a surprise though. I agree.
People just ate and had a glass of wine or two, or maybe I mean, it was kind of, I was really surprised. I mean, I was almost proud of us, but I mean, it was good. It was very good.
And Santa came for the entire Batista clan, which is good. So we as a whole made it on the nice list. That's good.
Nobody got any coal. It was very good.
It's quite surprising.
You got a little bit of coal. The potential to have a little bit of coal last night. I saw some trades going through. I saw some.
I was actually gonna take half off. I mean, with all your schmoozing, I can't stop you when you're the train rolling here. So I'll take half off there. But yeah, we got some shorts out in the E-minis and the NASDAQ. And then I'm short silver. I scalped out of the gold piece of the ratio.
So you really took a leg here. Now, futures trading usually went on as a pair, off as a pair, and the pair is actually doing pretty good right now. I mean, back.
Yeah. But it was insane. I mean, the Open. I don't know if anybody was watching. I'm sure you were watching. I'm sure a lot of people were watching. It's been the talk of the town. Even though I was surprised, I was with one of my buddies last night watching the Bears game. I was like, "Have you seen what's going on in precious metals? Like, are you like?" And he's somebody that is, not really in markets at all.
Uh-huh.
And he hadn't seen any of it. So I was like, oh, damn, are we still kind of early? Because
It was like an indication that maybe we weren't as long in the tooth as you thought we might be.
yeah, I was a little surprised.
You were too close to the fire, like watching Twitter and the newspapers. And
Exactly, because it was all over CNBC and it's been the talk of the town. You have all these like people like, oh, we've been bullish for metals for the last, quarter or whatever. Like the people that come on and it's like, oh yeah, of course you bottom ticked it. Like you're amazing. And so I've seen all that like kind of happening. And so the final step was to see if the inner circle, like the inner circle, which is outer circle markets, right? So like your friends that are out of the circle of markets. And once they are in and once they know all the talking points, then it is the tippy top. But I was surprised that he didn't have he didn't have any clue.
so you're worried about your leg a little bit just because he didn't know about what was going on in metals.
Yes, because I closed that before I went to meet up with him to watch the game, and so I was like, "Uh-oh."
Sophisticated scalping technique you got here. Well, it worked for you. I mean, Nasdaq it took about
no, that's it. No. Before we get into that, that was not the technique. The technique was you had this huge move higher on the open. I think we got up to 83.
You're talking about silver now. You're talking about the metals, correct?
Yes. So silver was up like to what, 82, 83-ish?
Yeah, 82.67 is the high.
I think it opened at about it opened 80 on the dot and then rallied another 2 points.
Yep.
And that happened really, really quickly. And, silver, you think it's a small contract, it gets big very quickly or has gotten big very quickly over the last, month or so. It's $1,000 a point. So it goes from 80 to 82 and you have one contract on $2,000.
Then that's on a small contract.
And that's on the small. And that's,
big
it's
contract.
not a micro, it's a mini of the silver contract, which is so it's a big contract. It moves a lot. It's $2,000 in 5 10 minutes.
Yeah.
Right from the open.
Yeah.
Instead of adding to that position and feeling that next $2 to the upside, I closed out of the gold position because gold was basically flat. It was down maybe $5 or $10 or up $5 or $10. It was a small move in gold, and so
so you were long 2 gold contracts against 1 silver contract. It's been a rough go of it.
Yes, and so instead of
you legged out of your gold, which makes you very heavy in silver.
Yes, heavier in silver without putting another contract on.
That's right.
Because you need the hedge, the correlated hedge isn't on anymore. And then, in hindsight, obviously it worked this morning with silver down pretty decently. And then gold is, down 40 or 50 handles.
It was down around 4% at one point. It's only down about 2%, a little bit less right now. So it's actually a little bit. It was down another $2 just a moment ago. Yeah,
it'll be interesting to see what happens here on the open. I mean, we were having some conversations about it offline, but it's one of those interesting situations, almost like I wouldn't say like GME but in that same sort of realm. But just in general, when you think about volatility and you think about these moves and you just think about the implied vol that gets pumped into these markets and the options specifically, you need when and the skew here is through the roof. I mean, the skew on the upside, you had, 1 week calls at the 100 strike in SLV trading at like $2.
Yes.
When stuff like that, and you're talking about, when silver was at 30, the 35 calls would trade at 15 cents. They were that was a 1 delta. You look at the options expiring at the end of
We got a $6 expected move in silver for the next week, 4 days or so. I mean, that's a huge move. We usually have 60 cents.
Yeah, exactly. So when you get this incredible skew to the upside, if that volatility isn't realized, the value of those options has to come out of it, and that is going to in turn change the delta of those options and the gamma exposure of those options, and the necessity to hold them, right? So like if you're long that option and the asset isn't moving, that option's decaying way quicker than just being long the asset itself, and so there's like a kind of a rotation, and that's a synthetic shorting of the stock. There's all sorts of things that happen when you get to these super extremes. It's not, like this isn't a situation applicable to most stocks, but when
it's got 4 times the volatility of the S&P right now.
Yes.
Silver, which is usually something we don't even trade because it's so, I don't know, nondescript. It doesn't move much, doesn't trade very much. We always say it's a directional bias kind of trade.
Yes. And so, it was just it was a crazy overnight session. They moved I think it moved like $7 in 45 minutes or $8 in 45 minutes at one point.
Which
and
again
then bounced back.
Which is $8,000 on the small contract to $80,000 on a big contract, to put it all into perspective.
Yes.
So when we talk about the magnitude of the move, this really is a huge product. Now, the emails I was getting from people, again, when it works, everybody, I didn't realize how big it was. It was such a great trade. And when it doesn't work, I didn't realize how big one contract is. Remember, it's going to be 10 times the size. It's almost like trading. You're an SPY trader and you do a 1-lot iron condor, and you decide to go into SPX and do a 1-lot iron condor. That's the magnitude of the move you're going to get. It's almost 10 times the size. It is 10 times the size of a regular contract that you would have basically anywhere else.
Yeah.
With volatility, that's 4 times as great. And that's why people get lured into looking at that premium, on how juicy it is, and you forget how big it is too. Everything comes with its gimme and its gotcha, and that's why we're going to have Jim on at 8:40.
Of course, nothing says Monday.
Nothing says Monday like Dr. Jim.
That's right.
That's the truth.
Yeah,
there was a rumor about a bank going out of business.
Dude, the rumor mill has gotten. Me and Vecchio were texting. Our favorite one is that the Tomahawk missiles use a pound of silver.
Oh yeah.
Per missile,
right.
And so this is just front running that we're going to war with Taiwan or something.
Yes.
Or with China via Taiwan. Yes. I mean, you got like the cesspool that is Twitter, which I love dearly. But it's an echo chamber of fake news and weirdness.
Mm-hmm.
So you got to be a little bit careful.
Yeah, you got to take everything with a little bit of a grain of salt, and then think about who cares why the move is or what it's doing. How can I benefit from it? I mean, we're opportunists. I mean, that's what, when you're here trading, you're looking for opportunity. You got to figure out one way or the other. What you can do here. Look at silver now down 2.5%. It was just down 1.75%. It moved 0.75% while you were talking about silver.
Yeah, I mean I would expect there to be some wild two-sided action today, because the other component that you have to think about is like kind of year-end, tax loss harvesting, profit taking, that sort of thing is coming this week, and if you rode this up and you didn't have, a lot on the books, you might be taking this off before the new year.
Yeah, and let's be frank here. I mean, if you've been long and you rode this up, I mean, we're down 4 handles, 5 handles from the highs. Where 2 months ago we were in the 40 handle, right? I mean, it's basically doubled. So you didn't miss anything if you've been riding the wave to the upside. So good on you.
Yeah.
Now, I think this is going to help a lot of people if we get back into this range and we not sit, but at least we have an opportunity, with silver, in the low 70s or even high 60s. I think that'll help a lot of people to get out of some positions that may have cost them some money too. So
no doubt. And that, that's the $1 million question of like when to get out. Mm-hmm. I'll probably look to be out of this today. at some point. I mean, I'm still holding it and it's moving, but for me, my thought process is, you know what, I'm going to be gone for a handful of days. It's, I'm on vacation. I don't want to be like thinking about silver. The other aspect is like, you're probably not going to get back all of the money if you've been shorting out all the way up. Like, you're never going to get a scratch here.
Right.
But if you can take a loss from a $3,000, $4,000, $5,000 loss to a $1,000, $2,000, $3,000 loss, you cut it in half or more. That's a win in my book. I mean, you can't scratch everything. You got to kind of take what you get. And I had some hedge on with the gold futures. I closed the gold futures at a good price. That helped. And we were long gold from 4,200. So, you've got a lot in that trade too.
Sure.
It's like, you got to kind of be realistic with your positions. I think a lot of people get caught up with trying to make it all back on this trade. You'll make it back on something else some other time in the future.
Yes, you will. And it doesn't have to be in the same product, right?
No.
Yeah.
No.
Very good.
Yeah.
All right. Listen, do we want to take a quick 90-second break just so we can cut this and we can come back and we can talk about the markets and get to confirm and send? You want to do that?
Sure. And just, we have Vanetta's out all week as well. So if you have questions that you want to talk about on the show, we're going to be here obviously on the YouTube chat, so you can post them in the YouTube chat, but you can send us an email at support@tastylive.com too. If you have just general questions, stuff that you want us to talk about throughout the rest of the week, you got Jamal and Mikey and Liz and Jenny for the morning sessions Tuesday and Wednesday of this week. So if you have questions, send them in. Very much appreciate it. We'll definitely give you a shout out as well, and that'll help out the team. But if you have questions today, comments, trade ideas, whatever, put them in the YouTube chat. We'll get to those during our confirm and send portion of the segment.
Beautiful. Let's take a quick 90-second break and come back. We got more Tasty Live after this with confirm and send. We'll be back in 90 seconds with Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at the market. And what a market we have. Even the S&P is 69.58 and change, down 20 handles. That's the first downtick we've had in about a week of trading. Not a week of, not a 5-day schedule, but really like 7 days of trade. You can see here after we rallied from around 67.50 up to flirting with 7,000, where we sit right now, 20 handles off of that. NASDAQ down 120. That's your leader to the clubhouse to the downside, down almost half a percentage point, as everything else is down around a quarter of a percentage point. Real light volume on Friday, too, on the E-mini S&Ps and all the futures markets, as you would expect going into the end of the year. Down $6 on the Russell, down 66 on the Dow. Volatility up small, about 9 cents, is a 0.5% move to 1690. Never got over 17, got down to 1675. As you can see here, volatility is about as low as it goes these days. And I actually said I didn't think volatility would get under 17 this week, but made a little bit of a liar out of me. Bonds up 11 ticks, 115.28. Been going really sideways. This is the higher end of the range for the last 2 weeks or so. Let's just call it 116. 116.04 is the high for today. The low 115.14 at the higher end of the range. Bitcoin caught itself a bid last night, flirted with 91,000. As you can see here, Bitcoin has been going absolutely nowhere, sideways. But really the high end of the range is around 91. The low end of the range is around 85. And we sit at 87.7 right now, basically unchanged. Ethereum doing the same thing, down $3.50, going sideways. It too has been a rudderless ship. Oil finally catching a little bit of a bid here, up $1.37. That's a 2.5, almost a 2.5% move. One of the larger movers. If you throw out, silver and gold, kind of. I know you've got /PL, which is platinum, down almost 6.5%, a little bit more, $166. Really a hard, almost impossible trading product, just a future, no options. So oil catching a bid, up $1.37. Gold down almost $80, about 20 handles off of its lows, 1.75% move. And silver about $1 off of its lows, still down 3.5% to 74.58 or so, with the CME raising its margins. I tweeted that out on Saturday. I got a lot of pushback from people. What about the Tomahawk missile you mentioned? What about the banks going out of business? What about future use for silver? I agree with you. I'm not doubting any of that. It just typically, when the CME raises margins, it does have an inverse effect on whatever way the metal or the product is moving. Not immediately.
Or anything, just because that's leverage. I mean, it has nothing to do with the validity of the move or the price of the move or whatever. I mean, I guess it has something to do with the price.
It has to do with it's the
leverage.
best margining system in the world, better than what we have in equities, in my opinion.
Yeah.
What it takes into effect is volatility. We just talked about it a moment ago, how silver is a different product than it was 2-3 months ago. And it has a different volatility. Matter of fact, its volatility is probably tenfold, almost tenfold of what it was. So you can't have the same margin of something that was 5 times less volatile, a month or two ago, as it is today. It makes perfectly good sense. That's why it's such an advantageous buying power trade.
Yeah.
And when volatility goes through the roof, it's going to cost more to hold the position. It's really simplistic in its power and the way that they do it. It really is a great margining system. But when that happens, like you said, it costs more to hold leverage. People usually have to lighten up because they're already at their allocation. So it makes perfectly good sense. It doesn't mean that the move is over forever. It just typically means at that point. Now, people were giving me pushback, and so I had to do some research. I mean, the last time silver, I think it was back in 2011 or something like that, or maybe '08 or something like that, when it had this move, there was actually 4 different margin increases before silver actually topped out. So take everything with a grain of salt. I don't think the move is over, but it's certainly going to have a little bit of a ceiling to it, at least in the short run.
Yeah, I mean, there's nothing like the story gets spun as some sort of like nefarious action. To your point, and you summed it up perfectly, just with the way the way margin is calculated and the way risk is assessed is via volatility. That's one of the main components. And when that increases, you naturally have to increase buying power. So, that's just what happens.
Yeah. Yeah. It's a different product that has a different volatility.
Yeah.
Yeah.
But it'll be the metals are now interesting.
Okay.
I mean, I wonder if that plays out into next year. And if you had a stair step higher, not like 10% each day,
Yeah,
you probably wouldn't have had that margin change.
that's correct. You probably wouldn't. Yep. You're right.
Crazy. If you got some questions, you can throw them in the YouTube chat. We'll take some from there as well. But we do have a bunch of confirm and send questions because we had a long weekend. So if you want to get into those, we could do that.
Yeah, let's do it. I'm ready. Let's do it. Confirm and send.
Cool. So, all right. So quite often TP in his pre-market insights, he states out of the money calls are trading over equidistant out of the money puts, indicating that the market sees risk to the upside. What is Tom's approach using the tastytrade platform to identify these situations? Is this a manual review of the option chains 45 days out?
Yeah, whatever option series he's looking at, it's typically the monthly expiration. So it doesn't necessarily have to be 45 days out. Like today he would be looking at, 56 days or so, 53 days or something like that in any other equity product. But yes, he's just looking exactly what you think. I'll just use a round number: $10 out of the money, $10 out of the money, $20 out of the money, $20 out of the money, and you'll notice that the calls or the puts are trading over. That would be where the velocity of the move is expected. If you're looking at an ETF, it would probably be to the put side, like IWM or SPY or the Qs. And if you're looking at silver or Nvidia or something like that, it would be to the call side.
Go to silver. We can just show this real quick on the platform.
Sure.
If you go to the February expiration, you can really do this in any expiration.
Mm-hmm.
But if you go, let's say, it's the SLV, it's closed at 71. We'll go to the
61 puts are trading around $3, and the 81 calls are trading $4.50.
And that's skew. So that's just going equal distance. That's call skew. You can also do it by delta. So if you were to say, okay, let's look at the 20 delta option, the 20 delta on the put side is going to be at like 56, which is about $15 out of the money. The 20 delta call, is somewhere between 90.
It's about $20 out of the money. Yeah,
it's $20 out of the money. So it tells you, that's just that is just where the skew is in the option pricing, which is a reflection of both hedging and speculation. It's people, speculating for bigger moves in that direction or hedging for bigger moves in that direction. And so, the other part of the coin is that you can't, first of all, this doesn't tell you much more than that. It doesn't mean that the asset is going that direction. It's just where the risk is perceived to be. And so with something like SPY, you'll see it on the downside most of the time. Sometimes you'll see it flip to the upside. Sometimes on a 1 day time frame, you'll see no skew. On a 1 week, you might see call skew, and on a 1 month, you might see put skew. That's the vol surface. So that's how volatility changes along the chain. So there's no way to this isn't just a in a vacuum sort of thing. It's something that you have to look at specific to the underlying, specific to the expiration. And so it's not something that you can directly query from anything, nor does it give you any sort of amazing information, but it does tell you where risk is perceived. And that is, that's the kind of key here, is that it's looking at where that risk is being priced.
Very good.
Yeah. And so it is manual. But it's good to it's something to understand. I don't, sometimes, go that way.
What could you do? So it puts different strategies on board for you, right? Like if there's put skew and you're bullish, those out of the money puts are going to be trading a lot more expensive. The spreads are going to be trading, relatively cheap. So you might look for a strategy that uses undefined risk, right? I mean, again, you're just trying to use the amount of buying power in the most, efficient way.
Yep.
Next question, please. What market conditions justify long premium strategies instead of premium selling?
I would say incorporating some sort of long premium / long delta is a must in kind of all markets. I think you have to have some of that baked in. I mean, there's always opportunities for that, whether it's low IV underlyings, whether it's trades that are kind of low IV centered, or at least a little bit more directional, like diagonal spreads or calendar spreads. Having that component allows you to buffer some of the changes in volatility, especially when you vol really, really low right now. You're short volatility if you're short premium right now, and you're also short gamma. And so a big move in volatility, you get wacky poo-pooed on both of those. And so you have to have a little bit of some sort of long premium position to it to hedge that in some capacity. But I think, using long premiums type trades in this sort of environment is certainly where it fits the most, where it's easiest to do those in terms of value. It's cheap to put those on. And the components that you're playing for, which are moves in the underlying and, being long volatility, that's kind of on your side because volatility is super, super low right now. Even though we haven't had a lick of a pop in volatility which has been the kind of my surprise of this morning when I saw silver down, $3-4, I was like, the market has to be down, 1% with a pop in volatility. Like that has to happen today with the craziness that's happening in the rest of the markets.
And you had the opposite last night, right? You really had silver kind of hanging in there, at least on the opening. You had the market hanging in there on the opening. You had Bitcoin hanging up in the market too. You had a completely different market last night on the open than you do this so far this morning. You know what? I'd be happy. You know what I'd be happiest? When maybe CNBC says wacky poo-poo. Like wacky poo-poo.
Oh, you don't get that sort of,
but wacky poo-poo is everybody knows what wacky poo-poo is. If they watch the show, they know, no, please tell me we're not getting wacky poo-pooed. I mean,
this is high level stuff we got right here. We got to cut down on that. Yeah, it is quite funny. We could talk about vol surfaces and then throw out a wacky poo-poo in there. To tie it all together. The range that we have, Dad, it's super wide. It's super wide. To follow up on this, so from the YouTube chat from Dexter here, what do you do in low IV markets with high IV products like silver? So he's looking basically markets low, implied volatility, silver super, super high implied volatility. Is it a good time to sell premium, and what will happen when the VIX goes up? Is there anything to be aware of? I think this kind of piggybacks off what we just kind of talked about. Vol goes up, it's because you're getting realized moves. It doesn't just go up in a vacuum. And so, when you're looking at products like silver specifically, is it a good time to sell premium? Sure, you stay small, obviously. If you're using the silver futures, you stay tiny microscopic small because those are huge contracts. But yeah, I mean, trading volatility in these products is certainly very interesting. Call ratio spreads, put diagonal spreads if you're trying to trade that side, with a meteor put option. That's the sort of stuff you have to look at here.
Very good. Next question, please.
All right. I'm trading in a $5,000 test account right now. I'm focusing on iron condors for instruments with, around $150 a share, entering them 37 to 52 days till expiration with IV greater than 30%, and then closing them at 50% or a 30% loss or at 21 days. Only options with open interest at the money of about $500 or more. 500 contracts or more. What do you think of this, Dad?
I hate the word test account because every account is, a real account. I mean, if you're using real money, obviously, you want this to be profitable. I know you're saying it's a test account, but this is what you're doing. And you should be good with it. I like the strategy. I don't hate the strategy. I don't like the idea that you're just doing one kind of strategy. It opens you up to a move like what we had in silver. I just because this is an iron condor strategy here, I know a lot of people who watch the show, and I've gotten emails about Captain Condor there with their.
Oh, I got a question in there about him.
Oh, do you? Okay, then I'll wait. Then I'll wait to talk about that. Iron condors are a great use of buying power in a smaller account. So I like what you're doing there. Like, you check a lot of the boxes. Your time frame is correct. I would prefer you look at IVR than IV, because IV doesn't mean anything to me. Like a 30% IV might be quite high in ABC stock. A 30% IV in DEF might be quite low. So look at IVR. I would prefer IVR over 30, and then your closing, everything else is good. The problem that you have here is that you open yourself up into a market move in one direction where, the iron condor is going to get tested or kind of taken out. Now, you're not adding to anything. You're closing it at, 21 days, I would assume, like what you have here, 30, 50%. I mean, the mechanics are sound.
Yeah. No, I agree. I think it's time to put on a couple positions. I think, obviously with limited capital, and to your point of, getting a couple different strategies in there, instead of all of them being iron condors, add a couple short put spreads in things that you are bullish and go a little bit closer at the money, go to the 30-ish delta, right, and get that same sort of extrinsic value and put the same amount of risk on in that sort of trade, and do some on the call side too. Find a couple things that you're kind of bearish on and do the call side. And so you're going to have the benefit of having a handful of neutral positions, but you're also going to have some that play into some directional exposure that you'll be able to more quickly get out of and kind of recycle your buying power, because you tend to see some of those work out as well.
Very good.
So, couple more coming in from the YouTube chat from our guy Mikos. This is from Twitter, so we have to take this with a grain of salt. Could be very much fake news, but the last time silver went up 5% to down 4% was May of 2011. Silver fell 16% the next 2 days.
Yeah, that's what I alluded to earlier when I said there was like 4 increases in margin. But yeah, I listen, take it with a grain of salt. I don't know what it means. All I was trying to say was, if you've had a nice run in silver, maybe it's time to lighten up your position. If you've had a struggle and you have something, that's in the money, and you were thinking about, saving the dollar, and because you've lost $9 on a $10 spread, maybe you hang in there a little bit, because, that's all I was trying to do. I wasn't trying to say that, this silver run is over and done with forever, and, you should get massively short. That was not my point with my tweet.
And that's never, I
never do that. Right. I never want anybody to do that.
Yeah. And of course you'd never want anybody to lose money on anything, but as a trader, as somebody that's watching markets and trading markets every day, like I'm not Michael Burry here. Like, it's not like The Big Short, all eggs in one basket. I sit up all night and think about all the, this one little thing for days and months and whatever. And, I'm betting the farm on this. We're looking for opportunities. And so, you see silver up 40% in a month with implied volatility through the roof. It's an opportunity. And so, it's never like all in every single trade. It's always small trade.
That's correct. That's correct. Good job. Next question, please. Open to operate mid-month when I've closed a number of my initial trades at the next monthly is 58 days away, and I have capital to deploy. Are there guidelines for how to work effectively in this short-term window, which will recover every month? I don't understand this.
Recur.
Yeah. So he's saying.
So he's saying
it's not. He's in the cycle that happens every 4 times a year, right? He's in the longer cycle. Guide. I'm sorry.
So you're kind of in the mid. So it's an interesting question, and you're kind of in the mid. So we try to target that 30 to 50 day time frame, and there's a couple times a year where you have this time frame where even right now. January is 18 days to expiration?
Yes. Mm-hmm.
So it's 18 days to January expiration. That includes holidays and a lot of half markets and just kind of dull markets.
Yep.
And then you have 53 out in February. And, a week ago you were at 25 and 60. The question becomes, how do you operate in this kind of time frame? Do you go to the shorter duration? Do you go to the longer duration? What is your take on this? It's kind of it's an interesting question.
Yeah, I mean, at this point, I'm all in February. I mean, around 21 days, you got 18 days now. I would be fine if you were rolling today. I probably wouldn't push it much more than today. I would be out of my January positions into my February positions. Going back to that person who was doing the test account with their iron condors, I definitely would be, in the February positions. By the way, silver just broke.
I was just about to say that. They just smacked it. Gold too. Holy shit.
Yeah, gold down 105, which is a 2.25% move, and silver down almost 4.5. There it is, 4.5 right now, which is almost 6% move in silver. So,
wow,
big moves in the metals. Metals still in play. Even the S&P is down 22. I would be 58 days. I would be looking to go there more than staying in the front month, which would be closer to 20-ish days. So for me, I would be looking to roll.
Yeah, I think this is a tough question. When you go further out in time, you have a slower moving trade, shorter duration, you're going to be closer at the money. It's going to be a faster moving trade. I don't think there's a perfect answer, right? I mean, it's kind of preference. You can look at it on an underlying specific basis too. You could say, you know what, this stock that I'm looking at has earnings coming up, in 45 days. Rather than go to the 50-day option, I'm going to go to the 20-day expiration. So you could be a little bit flexible here. I think that there's no perfect answer here. I think you got to weigh the risk and reward here, but it's a very interesting question because it does come up a handful of times throughout the year.
Very good. Next question, please.
Do I get back in some of my gold here?
You mean buy gold?
Yeah, like one.
So get back into your ratio of 1/2.
Yeah.
I mean, I wouldn't hate it.
I was thinking getting one on.
Sure.
Because now I'm 1-to-1.
You're 1-to-1 gold silver instead of 2/1, which is
which is the ratio. So you're still. It's almost like a slight profit take on the short silver if the correlations play out.
That's correct. That's correct.
Because this will, if the correlation plays out and these both go down, but silver goes down by more, this is kind of taking off some of that hedge. If that doesn't play out where, these both kind of stop here or go higher, you kind of get hedged on a little bit on the gold. I don't know. I think.
Yeah, and you sold your gold contracts, almost, 80, 90 points higher than where they are right now. I mean, I don't know if you were looking for 80, 90 points when you put it on. I mean, gold's been moving $20, $30, so it's moved 3 times as much as it's been moving. I think it was a great Great trade. Don't hurt yourself patting yourself on the back. All right, what's the next one?
I didn't pat myself on the back. I was just explaining my thinking. My God, but thank you. I appreciate it.
Oh, here you go. Here's your
here.
Captain
Yeah,
Cotter
I'll throw this one to you. So, this is an email that I got. There's been a lot of conversation about the Captain Condor, the guy using martingale strategy on zero DT options. What are your thoughts?
Yeah, so let's just think of what martingale is. You start with 1, you go to 2, 2 goes to 4, 4 goes to 8, 8 goes to 16. You just keep doubling your position until you get back to even or positive. That's really what it comes down to. Now, it works, period, if you have unlimited capital. Now, not everybody has unlimited.
Nobody has unlimited capital, so it doesn't work.
So it doesn't work, right? So nobody has unlimited capital because it doesn't work. I mean, but as a math model, you're going to get the one day where if you're doubling up to catch up, you do catch up, but not everybody has unlimited money. And that's what happened to this unfortunate group. I mean, here, it goes against our cardinal sin, which is increasing your size. We've all been, that person who goes, from 1 contract to 2 contracts or 5 contracts to 10 contracts. But I would hope in Tasty Nation, we're not those people that go from 5 contracts to 50 contracts, in a relatively short period of time, which was 1 week here. I mean, this happened in 1 week in one of the lowest implied volatility moves to the upside. If you were going to say when they were going to get blown out, you would have thought it would have been high
on a half day,
right? On the downside, right? Yeah. Never on the upside. So again, something you can't play for. It's unfortunate. I don't know what else to say about it. It was destined to happen. It was bound to happen. I didn't think it would happen myself at this period of time. But we've always talked about how low implied volatility is really one of the most treacherous when you're selling premium, and you have the lowest volatility. So maybe it shouldn't be a surprise to us.
Yeah, I mean, I echo everything you said, and I think this is obviously a huge demonstration of the problem of size. It also, is kind of a feather in the cap of us that one of the great things that we talk about and that we do in our trading is, managing positions and staying small with positions and being able to roll positions. When you're trading a 0-day trade in massive size, you're going to catch a tail event. It doesn't matter how likely it is. I saw some stat of, it's never had 5 days of losing, in a row or something.
Right.
Well, these are
until you do, right?
Until you do, and it's going to happen at some point. Like it's a probability question of when it happens, and the probabilities don't go away. So it's like it was a strategy that was destined to fail. Like if he would have done it for a year and been like, okay, now we're going to size down. I'm not taking any more money from anybody. We're going to size this down. He'd probably be okay today. And he would do his thing, and he'd be fine. But that's not how things just get bigger, and you screw yourself. But yeah, I think this is I think this is a good. I mean, like for our content and our strategy and our style, this was this is everything we talk about every single day, bottled up into one occurrence that literally everybody saw. You see some flack from people that are like, oh, iron conduit, blah, blah, blah. That's tasty. Mm-hmm. It's like, no. We're not out here doing, all or nothing bets on 8-hour time frames. This wasn't even an 8-hour time frame. It was a 4-hour time frame.
That's right.
It was a half day. Like this is the antithesis of what we are. It's the exact opposite. And so, so it's sad, and it should be a lesson in sizing to everybody.
It should be a lesson in math is really what it comes down to.
Yes, that too. And occurrences are, when you look at coin flips, they're separate occurrences. Like they are different. It's not like your probability changes because four heads have come in a row.
Right.
That's the gambler's fallacy. Like it's still a 50-50 shot every time you flip the coin.
Very good. Yep. Yes, I do.
E-mini's down 31 now.
Yeah, that's the low of the day right now. I mean, you got Nasdaq down 3/4 of a percentage point, which is almost 200 handles. You got volatility up 20 cents over 17. You got Bitcoin down 400 and change, but really this is a metals move with silver down $4.50, which is 6%, and gold now down almost 2.75%, which is $125 in gold.
Are we going to get this pop and vol, or is this going to be a buy the dip? I feel like this is a good day for a nice little vol expansion.
I think, yeah, I mean,
craziness in metals, vol at lows, holiday trading. So it's probably not going to be the most liquidity, except if this continues lower. I'm sure there will be some people that come into the market. But
markets had eight or nine straight up days with no two-sided action whatsoever.
Oh, Friday was a 2-point down move. Come on.
That's right. Yes. That seems like it's going to be a tick today so far.
Yeah. Very good.
Next question, please.
So I have a question regarding buying power and stop losses. I trade a small account and was wondering if buying power is the metric to base my positions off of as a percentage of a total account percentage, or if it is reasonable to use a stop loss on a trade as a means of gauging buying power. And so the question here is like, if I put a strangle on, I sell a put or whatever, and it uses $5,000 in buying power, but I put a stop loss in for $500, shouldn't I look at the risk at $500? That's kind of the question here.
I guess an accountant would say yes. Your risk is $500 because that's where you put your stop in. Let's think about what we're doing here. If you have $5,000 in buying power on a position in a small account, you're using this product is not for you, right? It uses too much buying power. I got to think a small account is something under $25,000. I don't know what the person who wrote this, what small means to them. That's what I'm using, under 25,000. So whether you're putting in your stop loss at $500, you're probably putting that stop loss inside a standard deviation of the expected move. And if you're putting a stop loss inside the standard deviation, you have about a 90 some odd % chance of being stopped out for that loss. So if you're going to do this and look at it that way, you certainly can, but please put a stop profit in too, because at least this way you can have a positive outcome without almost guaranteeing you giving away the $500 that you use in your stop order. That's the way I would look at this, but I think the product is too big for you from the very beginning. What do you think?
Yeah, and if you're doing this, you really have to do stop market orders, which puts in a whole other potential issue for you, because if you have a big move, like we just had, you might not get filled on a stop limit. Like
right.
It's not a given. Like it's not an auto, it's not a given that you get filled. I think the first part of your response was perfect in that, I think you're just a little bit too big. Like you can't have the best of both worlds. You can't have, okay, I'm going to be in this big position that, I'm going to make sure that I only lose the X amount. Like things happen, you martingale for 5 days and now you've blown up your whole fund. That has a $5 wide spread.
Right.
I think you gotta size it down and kind of keep a little bit more realistic of an expectation.
Very good. Very good. Next question, please. How do option strategies behave differently in liquidity-driven versus illiquid markets?
So I think the question here is kind of like bid-ask spreads getting filled. I think that's kind of the answer to this question here. When you have a lot of liquidity and when you're looking at products that trade heavily from the options and share and futures, if you're trading futures, whatever the case may be, if there's a lot of liquidity, you're getting filled and trading probably quickly at or around fair prices, mid-price, within a penny or two. When you get into illiquid markets, like these wide markets, in stuff that doesn't really trade, the problem is getting filled. You get filled at crappy prices when you're selling, and you're buying at way higher prices when you're trying to buy it back. And so that's the biggest issue here.
Yep. Totally agree. And your entry price is also another thing subject to a lot of discussion too. I mean, I know they're only nickels, maybe dimes in the liquid products, but they add up. They add up. Next question, please.
My question is, if the research shows you should have a neutral bias, then what makes the team use certain strategies such as put or call spreads or jade lizards, butterflies, instead of just putting on naked strangles or iron condors every time?
Let's be clear. The research doesn't show like a neutral bias. A lot of the studies we do will show you on a neutral bias because, I mean, how do you cherry pick something? You're looking back, what the product did. Should we say we're going to get bullish here or we're going to get bearish here? So we just do the neutral bias. The reason why we have these strategies like jade lizards and credit spreads and maybe a neutral butterfly or a directional butterfly, instead of just putting on neutral, naked strangles, is because of buying power restrictions. Trying to be everything to everyone, showing that, it doesn't matter how much buying power you have, you can participate in this market in any product, and no matter how big the stock might be or the ETF might be, you can use these strategies to get small and get big in a small product. Same the opposite way, how to use leverage by using synthetic stock type positions that would use like 1/10 the amount of buying power. So you can participate in this market, not leaving you out at the door, and instead just looking to, buy 6 shares of a stock because you can't afford to do anything else.
Well said.
All right, next question, please. Even the S&P's down 26. Do you ever have times when you get into the straddle, but if try to buy the guts and selling wings to reduce wings, do you give me the ones that aren't written properly just so that I could look like a schmuggy?
But if you try and buy the wings and buy the guts and sell the wings, you're trying to roll these out, and you can't do it for a net credit. Do you stay in the straddle or roll forward a month in the straddle, or do you prefer to widen the strike? So basically the question is, if you are buying back a straddle and going to sell the wings, and you can't really do that.
You're not going to be able to do it for credit. You're going to do it for them.
Yes.
And you might be doing it for a net loss if you do the math where even if that strangle that you're selling goes to 0, you can't get back to even.
Yes.
Yeah, you still do it.
Yes.
Especially if, going back to the confirmation question a moment ago, where you're in a 5-week cycle and you get into a little bit of trouble, should you go to, 65 days or should you stay in the 30-ish days in the front month? I'd be staying in the front month, the 30-ish days. Anything above 25 days to, 18 to 25 days, I would be staying in that month. And yes, I would be doing it for a mathematical net loss, even if the strangle that I eventually am selling were to go to 0. A lot of times when we get in trouble on something like this, it's going to take 2 or 3 cycles for you to get back to even or profitable on this trade, and 2 or 3 cycles of perfect conditions for you where it doesn't move so much outside the expected move. That's trading though. But if you take a loss that was $2 or $3 and you take it down to $1 or 50 cents, that's trading also. Like, you took something that was going to take you 5 trades to get back to even, and now it's only going to take you 1 trade to get back to even. That's trading. It's all part of the master plan of having different type of strategies, different kinds of delta in each one of those strategies to fit your assumption. It all works out, hopefully, in the end. And that's what we're looking to do here.
Good stuff. Next one, please. Yes. How do you access?
And the last one, we had a bunch of them today. So good job out of everybody for helping us with this. I'm going to try to do this for you. Okay.
Yeah. I'm sorry. I did. Well, the first one you just didn't read well. You kind of gave it a Zoolander read. That one was a little messed up. I messed that one up. I usually try to edit. Some of the peeps, they, it doesn't come out the brain exactly as you're thinking.
All right, I got one that's not going to come out of the brain as you're thinking right now, too. How do you asses, whether rolling duration... is adding edge or simply deferring loss realization?
It's good. Yeah, so you know, when you roll, you are closing and opening a new position. So there is a realized profit or loss.
Yeah, that's the accountant. That's the accountant saying you realize the loss, right? You close
Yes.
something, you open a new one. Go ahead.
Yes, there is that transaction. The fact of the matter is that you're rolling forward value and you are getting paid to roll that value forward. So yes, you are realizing that loss, but you still have that value potential in that trade. Like that trade, that value doesn't go away. You're extending the duration of that value. And so are you deferring a loss? Yes, potentially. Are you deferring potentially a gain? Yes.
Mm-hmm.
You know, potentially. Those are both, you know, you're rolling forward profits and losses.
Correct. I mean, you said it, I think, summed it right up right in the very beginning. You know, you're closing a trade, it's a loss, and you're opening a new one. You're going to look at it as a rolling P&L, but the P&L is absolute. Just like I would challenge you, and by challenge you, I mean all the viewers out there, just like the P&L that you have in your account is an absolute number two. You might not have a realized loss, but that's how much money you have in your account right now. That's real. And in my eyes, it's a gain or a loss because I have the risk on, right? I mean, like, you know, if my account started at $10,000 and now I have $10,100, I've got $100 in profit. Whether I took it off or not, it's unrealized, but I have $10,100. If I close all my positions, I'd have $100 more than I started with, and the same thing on the way down. So they are real. The numbers are real. Whether you realize the loss or realize the gain, the numbers are real.
Good job out of you.
All right, let's take a quick 90-second break. But before we go, let's take a look at the market here. We're going to get to an option jive, and then we got the skinny on options abstract applications with Dr. Jim at 8:40, and then we've got a market measure. Even the S&Ps are down 27. NASDAQ's down 160. NASDAQ's about 40 handles off of its lows, down around about 5/8 of a percentage point. Even the S&Ps are about 7 handles off of their lows, down a little over 1/3 of a percentage point. Russell's down 8, and the Dow is down 106. Volatility up 12 cents, back under $17, $16.93. Bonds are catching their little bid, up 13 to 115.30. Bitcoin's been hanging steady with all the volatility in the metals. Down $200, almost $300 to 87.6, but you can see here it traded up to 91,000, just under 91,000, down to its lows where it is now, about $600 off of its lows. Ethereum doing the same kind of action. Oil up $1.20 to almost 58. It did trade over 58. That's $1.22 higher. The big movers today: gold down $130 to 44.20. That's almost a 3% move, and a twice as much move in silver, down almost $5 to 72.26. It flirted with going under 72 just a moment ago. You can see here a big move on the right-hand side of the screen in silver, still at the high end of its range. We'll take a quick 90-second break and come back. We got more Tasty Live after this with a option jive.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's option jive. Niggy, we are back, son. And you know what that means? Time for a little bit more Tasty Live with an option jive. Even the S&P is down 30. Close all watertight doors.
I mean, you have volatility perking up, but I'm hoping we get, I want another, let's say 6,900 and vol futures up to like 18. I think that's where we should be.
Ooh, vol futures up 18. That would be a very
up to 18. You get a point.
That'd be a 10% move, right?
Yeah. No, it would be a big move in vol. I think vol was just too low. I mean, through the last month of hoopla, you have a VIX below 15. I mean, it's
a lot of hoopla in Whoville.
Yeah. It's a lot of who-ness. A lot of things going on. Anyway, I don't know. I just figure you gotta have a little bit. You can't just grind higher every day, all right?
Yeah, and you got silver. It just went under 72 a moment ago to 71.57, down to 72.17 right now. That's a $5,000 move in the small future, $50,000 move in the big future. Just to put it all in perspective for everybody.
And that's after last night's 80,000 and 8,000.
That is correct.
So from high to low, it's been about a $10,000 move. I think from 82 to 72.
Yeah,
10,000 per contract on a SIL, and on a big boy contract, it's $100,000.
That is correct. That is correct.
So size matters. Yeah, you got to be careful. All right, let's do it. Option jive.
Option jive.
The best of 2025, part 2.
Actually, we could sum this up in one slide. You're the best of 2025.
No, you are.
No. I've been here all year long. You know, you came in, filled some big shoes, and you've done a good job. All kidding aside.
Thank you. I couldn't do it without you. You're a great Robin.
Evidently. Evidently, but sure. Go ahead. What's the best option jive of 2025?
Market analysis following Liberation Day. I think we have 2 on each of these segments that we're going through today. We're doing kind of a best of recap, give you some food for thought from some of our favorites throughout the year here. So this was our market analysis following Liberation Day. A lot of people were liberated from their money for that quick period of time. But the rest of us, it was Liberation Day, April 8th, 2025. Is when we aired this segment here. Let's do it. So over the 44 days leading up to Liberation Day, the S&P 500 and the NASDAQ fell 17 and 22% respectively, levels not seen since the COVID era sell-off. So, this was yet another one of the Armageddon type situations where it felt like, we were dead. This was a wild move when you look back in hindsight. Some of the older folks will tell you, you've never traded through a crash. You've never seen this. You get a chart like this. You could show them this and say, hey, Grandpa, I had 3 of these in 5 years.
Right. You're right. Right. I guess I'm the grandpa side. Yeah. Yeah.
But it was a huge move, obviously. So historically, only 11 occurrences where the NASDAQ fell 22% or more in 45 days. So there's only been 5 occurrences where the S&P fell 17% or more. So, these are, I think this is good context for people to understand because, the hardest thing about markets is like that fear of the unknown and the fear of the crash and the black swan and the Michael Burry and the blah, blah, blah. And so if you traded through this and if you traded through COVID, you've kind of experienced some of the worst moves. I mean, you're in the top 10 historically, it doesn't get a lot much more worse than that. Like that's what you should expect as kind of your big moves. Can it be bigger? Of course. And there can be more extreme moves. But I think this puts a little bit of context for you to kind of, quantify what it feels like and what it looks like to have that black swan type event. I think April and COVID in my book qualify as black swan events.
Okay, yeah. I mean, there is no real definition to it, so it's a personal thing. I tend to agree with you.
I mean, 87 was the event, and that's the biggest one.
Sure, that's what it's going to be. That's what it's going to be measured by. Sure.
Yeah. So can we have another one? Of course, that is a probability. When we look back at what we have had, these have been pretty severe, relative drawdowns. So, I think it just adds good context. I think that's why we included this good one.
That's right.
Next slide here. So following Liberation Day, the S&P 500 dropped over 10% in just 2 days, with similar moves across major indices. Such extreme 2-day declines have occurred less than 0.1% of the time historically. So, when you see these 10% moves in a 2-day time frame, these are very rare occurrences, 2, 3, 4 standard deviation type occurrences. And so, that's kind of it's a good data point for you to understand, what your what the downside risks are. A realistic expectation for downside risks.
That's correct.
I don't think anybody can play for the next 1987.
No.
I don't even think if you are bearish, it really is a good thing for you either. I don't think anybody really benefits from, that size down move.
You're right.
When you net it out, quality of living, emotions.
I would never like to see it again in my
family,
lifetime.
friends.
Lifetime. That's correct.
Yeah. Nobody wants that. Next one here. So the VIX, go back. This one, yeah. The VIX had a substantial move on 4-4, jumping to 45 from 30 in just 1 day, the 6th largest single day jump in the VIX. The following table shows the top 6 largest VIX single day upside moves since 2004 and their causes. So, this goes back the last 20 some odd years, 21 now, because we include this year.
That doesn't even get you into 2000s.
Yeah.
Get you into 2000. It's amazing.
Yes. Which is wild too. But, this is, again, this is just some context to, give you, and we have 08 in there. So you have 08. That kind of situation is baked into this data as well. But these are huge moves in the VIX, and they happen. And here are the number of occurrences where it does happen. And if you survived, that's a feather in your cap. It's way different than the trade from 2010 to 2019. That was 10 years where really nothing. You had no real event. You had the Volmageddon kind of spike and that whole thing that kind of blew up, but that wasn't like market down pain. That was vol squeezing. That wasn't even a big move in vol. That was a 10 to 20 move in vol. These were big events. And so I think this is really good context.
Great content. Totally agree.
So a couple takeaways on this one. The April correction was one of the largest in decades, behind only 2008 and 2020. The VIX reaction was extreme, showing heightened fear and uncertainty. Diversification and risk management became critical, of course, and using risk-defined high-pop option strategies can help manage volatility and reduce tail risk. You can define the risk, and that will greatly help in these situations, especially if you are trading futures. I think the takeaway for me from this year and through the last couple of years of any futures trade, even if you have the capital to be naked, with the margin that you get, the span margining, it probably makes sense to buy 1 or 2 or 3 type tail puts just to hedge the vol explosion. There were so many people that did the 1-1-2s or other strategies where the vol, or even the silver situation that we're in right now, where had you bought tail cheap calls, you'd be able to hold this position. You might even be up on it.
Sure. Or you traded a product really, really small, like SLV, as opposed to SIL futures. Sure.
Yes. So that was a good one.
Yes, it was.
So next one here, trading small cap indices. This was February 21st of 2025. Let's get into this one.
Mm-hmm.
So over the past 25 years, the IWM has outperformed the SPY 14 times. The QQQs 11 times, and both 10 times. So you have seen some outperformance in certain years here. The median annual return for IWM is 12.5%, surpassing the SPY's 11.2%. So you have more volatility in IWM, obviously, is kind of what you're getting here to both directions.
Right.
Next slide here. So the Russell 2000 volatility is consistently higher than SPY and Qs. IWM volatility is greater than Qs 68% of the time and almost 90% on SPY. And so when you have and this goes to the conversation we've had about silver all day today. When you have volatility, higher volatility, you do tend to get realized volatility that is is higher. I mean, that's just bound to happen. The question becomes whether it's going to be greater than what is implied. When something has a high implied volatility, you should expect bigger moves relative to something that has low implied volatility.
Very good. Yep.
So most of the time, their IVs exceed their historical volatilities or their realized volatilities. Among the 500 stocks in the SPX, 100 stocks in the NDX, and 2,000 stocks in the RUT, a larger percentage of the small cap stocks show more overstated IVs compared to historical volatilities than those in SPX and NDX. This is basically a story of higher volatility. Implied volatility tends to be overstated more than lower implied volatility. This is exactly what it's telling you. It's telling you, it validates and tells you why we look for things with high volatility is because they tend to be overstated a higher percentage of the time than when volatility is low.
Yeah, you said it right. This is all about volatility, period.
Yeah. Next slide here. So despite the higher volatility and weaker underlying performance in recent years, selling options in IWM remains robust, offering returns comparable to the Qs and slightly better than SPY. This is just another kind of example of volatility. Higher volatility is going to be a higher potential risk, higher potential reward. I mean, that goes hand in hand.
Yeah, not too much to add. Totally agree.
So a couple takeaways here. Small cap indices and the components are more volatile than large caps. Their implied volatility is even higher, creating an advantage for option sellers. Selling options in IWM provides performance similar to the Qs and slightly better than SPY on a return on capital basis. So, diversify, trade them all. I think they all warrant positions. If you have the capital, you should be in all of them.
And diversify by strategy too, right? Probably one of the
Yes.
most important things we talk about all the time since we're doing recap is to diversify by strategy, not only the products that might be uncorrelated as best you could find. You certainly can get everything uncorrelated by using different strategies, which is really the key to trading. Even the S&P is down 33 and change. NASDAQ down 185, volatility up 14 cents, just under 17. The big moves really are the metals. It's been the market. It's been what everybody's been talking about as record highs have been taking, record highs in the equity markets have been taking a back seat to the record highs in the silver and gold metals markets. Today, you got a big move lower in silver, almost 6.5%, a little bit more, and gold down 3%. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell, the moment you've been waiting for. We'll be back in 90 seconds of Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Shedding my ego, watching my tongue. If it ain't kinda necessary, then I will be done. I am human, and I am flawed. My skin is thin, and sometimes I bear my claws. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love will love you. What would love do? Love will love you, love you. What would love do? Love will love you. What would love me? Love will love me. Love will love you, love you. Put down my halo.
Nicky, we are back, son. We got about a minute and a half before the market opens. Even the S&P is down 31, about a half a percentage point, as is the rest of the market. Maybe the NASDAQ, the weakest of the group, down 164, a little over half a percentage point. And the Dow only down a third of a percentage point, 160 and change. But this is all about the metals. Silver down almost 7%, traded to 71.5. It's under 72 right now. Gold down $140, which is a 3% move. Big move in the metals, big move in the overall markets too. I don't want to mention because it's a hard product to trade, but platinum down even more than everything else on a percentage basis, down 11.5%, $286. This is a woodshed type environment, and maybe even get back to even or less of a loss in other products. Maybe don't look a gift horse in the mouth, and maybe, if you had a 4x X loss and you've got a 1x X loss, maybe it's time to get out of it and realize that, it's not the product for you. Stick where, stay in your lane kind of thing. And if it's something where you have a huge profit and you've been waiting on something, maybe it's time to lighten up there too. So don't look at the high watermark. Just look at it as a trade. Every trade has two sides. There's an in and an out and in. Book them both. What do you think?
It's got to be the hardest thing for new traders to come to grips with. It's gotten easier to do as it's happened more often.
Isn't that always the way it is though? The more you do something, the easier it is.
It's the greed.
Yep, for sure.
It'll get you.
It certainly will. The greed definitely will get you.
Yeah.
There's our opening bell, my friend. GLD down almost $14-15. SLV, if you're looking at that, is going to be down $6. Let's take a look at some of the market's movers across the board here. I'll go to the watch list. I'll go to the downside. It looks like AppLovin down around $12, Tesla down around $8, AVGO down around $5. Some of the Chinese stocks, BABA down $5 and change, Meta down 4 and change, Oracle back under 200 to 194 and change, Nvidia down around $4 or so. Let's see what's trying to keep this market a little bit higher. Lilly, always one of the leaders, one of the hardest products to trade. So even I'd like to throw it out of the high option volume list. I think it's deceiving to trade Lilly. It's almost impossible on the option side. Up $4, and then some of the oil and volatility related stocks. That's really all you have there. What are you thinking here about the overall market?
I think we go lower. I think we need volatility. I mean, I want to go lower. I want volatility to expand a little bit. Like I think that would be good. I don't think we have it in us to just bounce right back from this. And I think the move in metals at some point is going to spill over into the markets. I think that's why you're seeing a little bit of the move right now. But that's where I'm at. What do you think?
I tend to agree with you there too.
Like, I don't want to buy them. I don't want to buy them here.
Right. I agree. I tend to agree. What about
I just closed the 1x3 we did in Rocket Labs last week.
Oh, nice.
So I took a couple bucks out of that.
Oh, beautiful. You done good.
Yeah.
What else here? I've got a little silver position I've got to take a look at too when we get time here.
Yeah, do your thing, dude.
Oh, I will. Right now I'm looking at the overall market for everybody else. You know me. I'm just a giver.
Yeah, I mean, you're not getting I guess Bitcoin's getting a little bit of a bid. It's up $300 and change from futures. Spots still down 2,000 from the highs. Volatility not moving. You got bonds up, 12 ticks here. Oil moving. We kind of missed the oil move over the.
Yeah, I kind of missed the oil move. I agree with you.
Because we on a short week and volatility got pretty low, and it was a hard. I was looking at puts, the 52 strike puts. We're trading at like 39 cents, which is $390 is what I think I was looking at for the, let's see what those are trading at right now. 16-day. I think it was 53. Yeah, so that would have been a nice trade, but yeah.
Woulda, shoulda, coulda.
Woulda, shoulda, coulda. I mean,
right.
What other trades? I got this HUT position too. Do we take this one off?
Oof, you certainly can. Why not? It's not a very liquid product. I mean, you really play it for directional, right?
Yeah, so the stock is up. We bought the stock at 42 and change. This goes out, shout out to Shark. We bought this at 42 and change. We sold 2 of the 50 strike calls. And we sold the calls at like $3. Those calls that are now at the money are trading at $4.90.
Yep.
What'd you do there?
Oh, I rolled my silver from Jan to Feb.
Oh, look at you.
Oh, I got a $5 move. What am I gonna do? You gotta do something, right?
Yeah.
Yeah.
I like it. Oh yeah, ring the register, baby. Woo woo.
Well, it's still a loss. It's just not as big a loss as it was before.
I get it. But basically, the moral of the story is, we lost about $1 or about $2 on each of these calls, but gained $8 on the stock. And so you're up, $400 or $500. The calls really didn't explode that much because volatility has come in. They're at the money here. We've had a couple days of chop kind of at this 50 mark. It's kind of a shot trade. It was something that we don't trade that often. So I think it's one that kind of makes sense to close. You do have, almost $1,000 of extrinsic value, but this stock has, 100% implied volatility. So you could wake up middle of next week and the stock's at 20. That's the expected move here. So another exercise in trying not to be greedy here. So I'm going to have to close this one to one and then leg out of the other call. And the markets are, 40 cents wide. So this is another reason why you might.
That's me just closing the tail of it.
Okay, and I just closed one of them. Let's see if I can get filled below the mid.
This is HUT, right?
Yeah.
Got it. You closed your RXLB too, right?
Yeah, that was Rocket Labs. That was the 1x2.
Mm-hmm. Beautiful.
Come on. Giving up dollars here.
Yeah, it's when markets are moving around like this. Look at the E-mini S&Ps; they're only down 15. They've given back half of their loss. Volatility only up 2 cents to 16.83. You look at silver; it's still down 470 or so. Really is Russell just turned green. Can't keep a good spoo doggy down. It looks like here. Gold has rallied, at least GLD. If you're taking a look at that, has rallied about buck and a half off of its lows. I guess its lows were, let's look at it, 401.30.
I just added another of the micro gold here. So I'm now back in the ratio.
The ratio 2 to 1.
Yeah, 2 to 1. And I think I'm going to lay out another micro E-mini here and another micro NASDAQ.
Completely directional on the futures here, just trying to short-term moves, right?
Yeah. But I mean, I had 2 of them that I had overnight. So we took, 100-ish handles on the NASDAQ and then like 20-ish handles on the E-minis.
Yeah.
So, I'm just kind of playing the game here. I'm not trying to get married to this position, but I mean,
you're trying to trade, right?
I'm trying to. Well, that's what we try to do here. Is the purpose. So yes.
GLD back down 14 and change. It just moved a point in about a second or so.
Yeah. Let's see here. What else do I have?
Volatility up 4 cents. Taking a look across the board here, let's see what's moved to the upside a little bit since the market has rallied a little bit. MSTR up $2.50. Reddit up a buck and change. CRM up a buck and change. Just to give you an idea, CRM opened right about here earlier. So let me see. Go back to coin, and everything's moving around so fast I can't even keep up with it. To be honest,
it is. It's funny because after a week of
everything staying kind of stagnant,
you get one of these days, you're like, "Whoa, I remember this.
Yeah,
I remember how this goes."
I remember volatility.
Yeah,
and volatility is up 4 cents, right? I mean,
I know that's what is weird to me. I don't know if this is a fake out, if it's a buy the dip. It has me we're in a very weird spot here.
Yes, we are.
You got the metals just going, looking like doo-doo. And now what was my other one that I threw out? So I've thrown out doo-doo and wacky poo-poo.
Wacky poo-poo, yes. You've used a lot of adjectives today, really taking that designation, using it to its fullest.
I was never a reading, writing guy. Okay. That wasn't my forte, Good.
I never was either. So
good vocabulary wasn't my spot. I try.
You do, and you do a good job. 9 times out of 10, you definitely do.
What do we got here? How about this AVGO position you got?
Taking a look at that, I think I'm working in order at 720 and change. AVGO is what? Looks like it's
You're right there.
Down around 280. Yeah, I mean, I could take it off. I have a couple of dollar profit in it. Let me take a look exactly what it is. AVGO. It's almost I was trying to close it for a $3 profit. I have around a $2.50 profit. So maybe I'll look to close that today. Put in a cancel. AVGO doesn't have the best prices to be honest with you.
Yeah.
I'll put an order in below the market and see if it gets filled.
I'm closing out of some ETH calls and also some IBIT calls. These are just cheapy calls. I've been doing like ratio spreads and kind of scalping the shorts and leaving the longs on and trying to scalp the longs, like doing them for basically zero. You know, these ratio spreads for a negligible credit or debit, basically no credit or debit. You have these options on. You can scalp out of those shorts. You know, these I'm closing at 37 cents. I don't know exactly where I've sold them. I've sold them between 60 and 90 cents.
Yeah.
You know, you're not talking about like big money moves here. But you know, just kind of trying to make something out of nothing here with, you know, crypto kind of just chopping around, selling the moves and kind of reducing a little bit of delta, and you get these kind of pullbacks, you buy back that delta. The core thesis still leaning long on these positions. So, you know, that's just part of it. I'm also debating.
Who are you having this debate with?
Myself internally. I have a ratio spread in gold, the 405, 415 that I did for like 75 cents.
There's my AVGO. Took it off for you. Took about $2.50 profit.
I mean, you got an IV rank of 14. Stock is pulled back. Got a holiday coming up. You know, I'm going to be on the mountains. I can't, you know, watch all your stuff for you, you know.
Understood.
Yeah.
Thank you, son. Appreciate it.
You're welcome.
Appreciate you looking out for me like that.
This gold position, so I did it at a 75-cent credit, and today it's marked at a 75-cent debit. You know, on Friday it was $3 in the money, and it was probably marked at like, you know, $3 debit or something like that, $2 debit. You're out like, you know, maybe $150, $200. So it hasn't moved all that much, but just to put the context, you know, it's been a huge move in metals. Do you take this position off, or do you like buy in the risk on the upside, like buy the 425 call, put this into like a $10 wide butterfly?
Again, you're going to be on the slopes, you know, you can't watch your positions, you know, maybe it's just a close.
All right.
You want to turn it into an iron condor, don't you?
No, I want to do a butterfly.
Oh, then turn it into a butterfly.
Yeah.
That's like having nothing on.
Yeah, it's nothing. It's closing the position, but you get a shot on the upside. I kind of like.
Yeah, I don't mind it. You're just playing the market. See me the S&P's down 20.
And I'm sorry to the people there's a couple Mr. Analysis in the YouTube chat calling this too early for a wacky poo-poo. So I have to wait till, you know, later in the day to throw that one out. I'm sorry to give you that. So
it's okay. You're allowed to wait on the wacky poo-poo.
Cool.
Very nice. All right, you ready to take a quick 90-second break?
Sure. Sounds great.
Let's take a quick 90-second break. We'll come back. We got more Tasty Live after this. What do we got coming up next? Ooh, nothing says Monday like this, man. Dr. Jim, and it's Monday. We'll be back in 90 seconds. It's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Diggy, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right. Nothing says Monday like this, man. I'm talking about Dr. Jim, the skinny on options, abstract applications. How are you, Dr. Jim?
Man, what's going on? What's going on? They did it. They took my guy out. They put him to pasture. The Phillip Rivers experiment is over, gentlemen. It is over. It is over. And so, congratulations, Nicky Batista, on your 49ers there last Monday.
Whoa! I don't know about that. Oh,
I'm just saying.
The Bears. That was a good loss.
Game.
That was a good loss. A good battle. You can't take nothing but good things out of that game. I mean, the defense could come and play a little bit more, but overall, that was a great game. Two really good teams.
Yeah. So now going into the final weekend is this weekend, right? Is that right?
Yeah. Oh yeah. Yeah. The Bears are pretty much locked into a spot. It's just it'll depend on who what happens this weekend. Will determine who we play, which is looking to be increasingly like the Packers first round, which I'm actually happy about because I think the Rams and the Niners are just better teams. But, playing the Packers first round of the playoffs, it's a little spooky.
That's crazy, man. And that would be in Chicago or Green Bay, or that's still up for grabs?
Chicago, yeah.
Yeah, okay.
Yeah, right. You got to come in for it.
Yeah, there you go.
We'll use the Tasty box.
Yeah, I like it. No, I like it a lot. Yeah, there you go. So, Tony, how was Christmas for you, my friend?
You know what? It went well. I said to Nick at the beginning of the show, it was amazing. Last Christmas, we had to go to the emergency room. My dog bit Nicky in the
scratch, bite. It was like a little, something mistake.
Nobody had any arguments. It was a kumbaya moment. Also, we had little babies running around. A completely different Christmas. I got my
Don't spoil it for Jim though, because Jim has like a handful of years until his kids are grown up and they start like drinking and doing debaucherous stuff. Like our Christmas experiences are way different. I don't know if Jim's ready for the rest of these stories, but go on.
That's it. It was beautiful.
Yeah. No, that's good. That's good. No, I can't believe it, man. Like Penelope, my oldest, is going to be 11 in a couple weeks. Like I can't believe it. Oh my gosh, I can't believe it. And so it really happens fast. And so now, I mean, we got the New Year's this week. And so are you guys doing anything fun for New Year's, New Year's Day, New Year's Eve?
I hopefully come back unscathed from
he's going
Aspen.
Up out west.
Oh, like Colorado type stuff?
Yeah.
Okay.
I'm not much. I mean, Jim, I've done this 2 times in my entire life, skiing. I'm going to, the mecca of skiing here. So I'm hoping things go according to plan here.
Yeah. And how old are you again, Nick? Are you 30, 37, 38?
35, but
wow.
30, okay. I wasn't sure. Yeah, 35. No, you're good. 37, 38. That's where the wheels start to rattle a little bit.
That's what I've heard. Heard. Is like when you get when you're no longer middle 30s, you're like, closer to 40 kind of age. That's when.
I was superhuman. It took me to get to 50 or so.
Yeah.
Before I needed glasses. I still haven't broken down.
That's questionable.
It is questionable. I will give you that too.
Well, speaking of breaking down, let's break down some math here to kick off.
Oh no!
You guys ready to go?
Let's do it.
Let's do it.
So today, let's apply the law of large numbers. And so, we like to lean on quantitative principles, so we like to lean on these different statistical properties. Let's talk this morning about how we can use the law of large numbers and how the law of large numbers actually just kind of inherently helps us as premium sellers. I thought this would be a great way to kind of ring in the new year. So Beth, go ahead and kick us off on the intro slide. So leaning on another statistical theory, the central limit theorem, we learn that actual results tend to converge on expected results over time. But in order for this relationship to be present, there must be a large number of observations in the distribution. So typically like 200-300 or more, which is precisely where the law of large numbers comes into play for us as active traders. So today what I want to do, let's unpack what the law of large numbers means, and then I have a very, very simple example that kind of encapsulates something that we see coming out of the Tasty research. I mean, almost every single day, whether it's looking at strangles, looking at other strategies, looking at whatever. I mean, this is something we see on a very regular basis. So, Beth, go ahead and hit us on the next slide. So when it comes to the law of large numbers, you basically have 2 different types of laws, if you will. You have the strong form version and you have the weak form version. When you have an application of the law of large numbers that implies a strong form convergence, here is what that means. As your number of observations goes closer and closer to infinity, so as you feed more data points into the distribution, the probability that your actual average results, which is X bar, becomes equal to your expected results, which is mu in this equation, that probability actually converges on 1. So in other words, if you have a law of large numbers where you have strong form convergence, you literally have, when you get to a certain point of n, a certain point of observations in the distribution, you have absolute certainty that your results are going to fall in line with what you expected. Do you guys think that is a realistic outcome for us as premium sellers?
Oof. What do you think, Nick? By the way, Dr. Jim, you didn't compliment him on his scalp there of the MS and NQ. He took a nice little scalpy there. Before your show started, he sold them. He bought them back down. Near the lows again.
See, sometimes I think he says it with love. Sometimes I think he says it like, oh, it's so small. He's trading the micros. Like, congrats, Johnny.
No, I think it's actually excellent. A lot of times you scalp in the, 8 times out of 10 you scalp in the right times when there's something going on. Sometimes you push it a little bit, but that's how it is with futures trading. Yeah. You do have to push it because it is a leveraged product, and you don't know what the market's going to bring. So good job out of you.
To get back to the content.
What do you guys think? Absolute certainty. What do you guys think? You
Never.
think we get to that point?
Never. You can't get to absolute certainty. And there's, even if you have strong, probabilities and the those have played out, it doesn't mean on a small number of occurrences that those probabilities will play out. And so I agree with you. You're never going to have absolute certainty, or at least that's my take here.
Tony, what do you think?
I have to agree with them. When is anything absolute, right? I mean, it never happens.
I totally agree. And this is one of those things where, this is a theoretical boundary. Like a lot of times when you dig into like high level math and advanced stats and whatever, you end up with these theoretical boundaries, right? Which is like, okay, we're never going to get there. But that kind of gives us the parameters. It gives us the endpoints for what to kind of expect in, day-to-day trading and kind of real life. All right. So Beth, hit us on the next slide. So that brings us to what I think will be a lot more applicable to us as active traders. Where do you have an application of the law of large numbers that is weak form convergence? So what does this mean? Well, it sets up similarly, but there's some important differences that we need to unpack. So here, as n approaches infinity, so as you add more observations into the distribution, the probability that the deviation between your actual results, so x bar, and your expected results, the probability that that deviation is greater than epsilon, which in this context is the error term of the model, essentially approaches 0. So what that means in English is this.
Thank you in English, please.
Yes. You have deviations, right? Obviously, I mean, we trade, we sell premiums. Sometimes they work, sometimes they don't work, whatever. What we're, in any given trade, any given scalp, any given, short premium, anything can essentially happen. So you have deviations around what you expect to happen. But over time, as you add more observations into the data set, the discrepancy in that deviation, the difference between what you expect and what you actually have, actually gets to a point where it shrinks down below the error term in the model itself with a probability that is approaching 0. It never gets to 0 because, again, that would get us to absolute certainty. But we get to a point where the error term in the model, also in English, that's just the noise. That's just a little bit of noise. There's always going to be a little bit of noise. There's always going to be a little bit of, you got to let the market breathe. You got to let the thing, kind of move around. So you'll never know with certainty, right? But this gets to a point where all of a sudden the deviations in my results have been shrunk down to such a small number that they're not even bigger than the error term in the model itself. And so for us as premium sellers, like, this is what we want. Like, this is what we're after. So what do you guys think? You guys think this is more realistic?
Yes.
I mean, definitely.
I mean, yes, of course.
Yep.
This is a much more reachable. All right. Oh, you guys lost my video.
It's okay.
Oh, no.
Yeah.
But you guys still got the audio, right? So you got the sultry voice.
Yes, you are perfect. But built for radio.
Okay.
Built for radio.
Perfect. Click us on the next slide there, Beth. So short premium and the law of large numbers. Here's what this essentially means, right? And we see this in the research constantly. Everything we do corresponds more closely to the weak form application of the law of large numbers because we're always analyzing things probabilistically. Okay. When we sell a 30 delta put, right, going in, we have a theoretical pop of 70%. But what we see coming out of the research constantly over and over again is our actual results actually exceed that. We actually end up with, 71% or 73% or whatever. And so this is essentially the law of large numbers being shown in the empirical findings where, the deviation between what we expect and what we actually achieve, shrinks down below the error term. But it actually, because of overstated volatility and the difference between realized volatility and implied volatility, it's actually in our favor more oftentimes than not when it comes to the results. And a similar finding with, a short 16 delta strangle. We know the theoretical pop there is 68%, but our realized pop, these are just examples. But if you look up any market measure, any options jive, whatever, you're going to see numbers similar to these. Maybe I actually realized 72%. And so now I'm in a situation where, I've converged on my expected values, and because of overstated volatility, I actually exceed my expected values. But the only way to get there is with, a high number of observations.
And this is why there's never any certainty. This can also go the other way on a short number of occurrences. Like, you could have the realized pop be 60% on a data set of 10. And that's because you have it's not, there's no perfect certainty here.
That's exactly right. That's exactly right. And so that's why I wanted to point out, and I did this a couple minutes ago, the number we're typically looking for is, a few hundred observations. And so, some traders that are highly active, they're going to get there quickly. Some traders that are, taking their time and kind of moving a bit more slowly, it's going to take them a little bit more time. But just remember, it's not a race. It's not a competition. Right?
It's not a race. It's not a competition. You're exactly right. And you need to keep that in mind for sure.
Yes, 1,000,000%. And so, so when we think about the law of large numbers and how to apply it, this is how we use it as premium sellers.
Beautiful. Good job.
What do you guys think? A few takeaways? The audio only version of the takeaways? Here we go. Much of our trade analysis is grounded in quantitative principles and statistical properties, and both the central limit theorem and law of large numbers play a vital role in interpreting actual results versus expected results, where the law of large numbers demonstrates that with enough observations, the likelihood that the actual results will deviate significantly from the expected results approaches zero.
Kazaa. So you're really talking about number of occurrences here, right, Dr. Jim?
That's it. That's really what it is. It really is. Looking at the market measures, looking at the options, looking at all the studies, right? What you notice is, there's thousands of observations that are fed into those data sets. Mm-hmm. And so you got to keep in mind when you do 5 or 10 or 20, it wouldn't be that surprising for you to be off from what you expect. You got to give it time. You got to give the probabilities a chance to work.
Very good, my friend. We're going to let you go because we got a picture of Dr. Jim up there about from the length of his hair. I'm going to say 4.5 months ago. About 4.5 months.
Yeah, right. More like 2 years ago, 2.5 years ago. Yeah.
We're going to take a quick 90-second break and come back. We got more Tasty Live. We'll go over the markets and everything else right after this with a market measure. Good job, Dr. Jim. Appreciate it. Bye.
Great. Thank you.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out Cboe's Retail Trader Suite at www.cboe.com/minis.
Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right, with a market measure. But before we do, let's take a look at the market. The market is not the market that we've been trading as of late. What I mean is, right now, the equity market's taking a back seat to the overall market, which is the metals. I mean, let's take a look at the old market, which is the equity market, for a minute here. Even the S&P's down 28. They're about 8 handles off of their lows. IV rank is 13 on the E-mini S&Ps. Volatility is up small, about 8 cents. Not really a big move, about a 1/4 to 0.5%, staying near the low end of its range. NASDAQ down 150 and the Russell down 15. The Russell actually turned green intraday today while the market was open over the last, 35 or 40 minutes. Bonds are up 9 ticks, 115.26, really kind of doing nothing, going sideways to the higher end of the range. Even Bitcoin hanging in there, 87.6. It is off its highs of almost 91 last night when the market looked completely different than what we have right now. Oil up $1.30 and change, been sitting there for most of the day. The market, what I'm talking about now, is really silver, gold. That's your market. Gold down almost $200, 43.50 and change, just a skosh off of its lows, down 200 after trading all the way up to 45.80. That's 230 handles higher than where it is right now. Silver with an even bigger move. That's a 4% move, a little bit more than 4% move in gold, about a 7% move in silver, almost had an 8% move a moment ago. 71.60, just a skosh off of its lows. You can see here on the right-hand side that big candle in silver to the downside. That's where all your volatility is too. IV rank of 91 after being over 100. It's actually coming in ever so slightly. Gold volatility quite high too. You can see gold volatility was in the IV rank was in the 30s. Now it's in the 60s. So gold volatility percolating too. So markets percolating, volatility in gold and silver. Maybe if you're looking to put money to work, your GLDs, your SLV might be the place to look at over the E-mini S&Ps or SPY or IWM at this moment right now if you're looking to add to positions or put money to work.
Yeah, with this move in gold, because gold was basically flat, most of the night and into the open. And so the ratio, the gold silver ratio has moved to about 60, which is a 5-point move, a 3-point move. It was at like 56, 57-ish in the overnight session.
Which is extremely low, right? We were talking about it
13-year low
just a week ago, right?
Yes. So the ratio hasn't really moved all that much, because of this move in gold that we've had since the open, this 200-point down move in gold. The ratio, with silver kind of near the lows, the ratio's only moved about 4 or 5%, about 3 points. So it is it's still a little interesting to me. I mean, I think you could see both continue lower, but you're playing for the bigger move in silver, or at very least gold, to kind of get bid / stay here.
Correct.
I mean, those are the kind of what you're playing for here, but yeah, we'll see.
Very good. We've got a market measure coming at you.
Cool. Let's do it.
So you got two segments here too?
Yes, we do. So this is the best of. Again, this is our part 2 of our 0-day best of series. So we're talking through some of the 0-day content that we've put on this year. So turning 0-day profit targets, or tuning 0DT profit targets, this one from June 12th of 2025. I thought I was correcting a mistake. I was actually just not reading right.
I do it all the time.
Oh God, it's giving me the womp womp. Next slide here. So in a fast-moving, high-risk, zero-DT trades, fine-tuning our approach can meaningfully impact performance. This study examines how different aggressive profit targets affect the outcomes. The study here is a zero-day trade, obviously. We did this at 9 a.m., which is 30 minutes after the open, plus or minus 5 minutes. Each day, the strategy is 20-point wide iron condors using 40 and 20 delta strikes. $10 wide iron flies, so very tight iron flies, and then iron condors with 40 and 20 delta shorts. Winners close very aggressively, 10, 20, and 25% of the max profit. Losers, we let those run through the end of the day. So we'll take a look at the stats that we've got here. So the iron fly, you see, obviously, a lot of these are centered around a 50-50 probability with more aggressive management, right? So when you're taking the quick profits, which is what we've been doing with our SPX trades, we didn't end up doing one today. I kind of forgot about it. It was a little bit of a fast market today.
I forgot about it too. But you've been scalping nice with your NASDAQ and your even the S&Ps too.
Yes. So, but just overall, the quick management has been good for us, and obviously through all these, your mean P&L is pretty good. Besides the no management aspect, which just opens you up to a lot of tail risk. We've seen this time and time again with all these studies. No management on a two-sided trade with hours to go until expiration, you're going to have these big deviations of returns. Here with an iron fly, there's only so much you can lose. And so your CVAR is basically the same across the board, but you end up, the reason the no management is so low win rate and P&L, but has the same CVAR, is because you're basically realizing the max loss on all of those because you have no management there. And so, that's really the key here, is that by managing early, you're reducing your variance of and your deviation of P&L and tightening that up, and so you end up having more consistent positions overall.
Mm-hmm. What do you think about the targets here? What is your go-to?
I mean, we've been doing 10, 15, 20% is kind of our wheelhouse. It's right in this range, 10 to 20%. But it's not our core trade. This isn't. Right. It's kind of an engagement.
Right. Trade. And when it does work for you, we've been able to do it in 10 minutes to 30 minutes. And when it doesn't work, it usually takes about 2 hours or so to get back into that range, at least from our experience of us doing it. And we've been doing it sparingly. Again, volatility is extremely low. The optimal time is when volatility is high.
Yes.
Next question, please. Next slide, please.
So looking here at 40 delta iron condors, we're doing $20 wings. Again, we're looking at the win rates, the mean P&Ls. You can see, again, as you get into no management or more aggressive management, if you're looking at 75% or 80% or 90%, they probably all fit in that no management bucket. You have a lot of max losses, and so your mean P&L is going to skew against you. And that's just the nature of the beast here. It's an interesting time to be talking about these because of the Captain Condor situation, but this is what happens. This is why you have to manage trades.
Correct. This is why you have to manage trades. You can't just set it and forget it. It looks good on paper, and this is why, and you went back to Captain Condor again, which I can't stand that name, but that's what everybody knows him as. The martingale of 2, 4, becomes 8, 8 becomes 16, 16 becomes 32, and so on, so on. It goes against everything we talk about with size. You cannot increase your size to that magnitude, especially in such a short period of time, especially on such a big product.
Yeah, it's just,
it's silly.
It's silly. Yes,
I
exactly.
mean, it sounds silly. Like, how many times would you go to a roulette table and, bet black? You think, it's going to come out red eventually. Yeah, it will, but you're going to run out of cash before it happens, or you could run out of cash before it happens.
Yeah.
Don't even
I
get me
mean,
started on the green one.
yeah. Now there's like triple zeros.
Are there really?
And I've seen some casinos do triple zeros now.
Wow.
Yeah.
I've been out of touch.
Yeah, you got the casino needs a little bit more edge.
Of course.
Couple takeaways here. So over the last year, the last 2 years, selling 0-day XPX premium has been highly profitable, particularly for traders who secure profits quickly. I mean, this is there. There's obviously, you watch these trades and you're like, oh, I should have held that. I would have made 100%, or I would have made 75%. There's always a gimme and a gotcha, and you see it in all of our slides of like no management. You're going to have wider distributions. You're going to hit that tail more frequently, and you're going to have those events where multiple tails occur in a row. And that is why you need to manage trades. It's not about leaving profits on the table. It's about minimizing the tail losses. That's the key to all these management segments. No single profit target emerged as universally best. I mean, there's a gimme and a gotcha. A lower profit target, like a 10%, is going to be a tighter deviation of P&L. When you get to the no management, that's kind of the extreme end of the curve. 10, 20, 30%, they're all kind of justifiable. And you can do it on a day-to-day basis if you want to, but the key here is that doing something is optimal. A 10% target produces the highest win rates and the strongest performance. It was 90% of the traders it trades into wins. For iron flies, accepting a lower win rate to capture more credit led to better overall results. And that's just because the nominal amount you can lose is so much lower with those iron flies. And so, if you're doing out of the money stuff, you should be a little bit more aggressive with your management. And if you're doing at the money stuff, you just don't have, it's an all or nothing type trade.
Yes, it is an all or nothing type trade. You're 100% correct. Unfortunately, that's just the way it is.
Yeah. That was a good one. So the next one we have is the Impatient Bulls selling 0DT put spreads. This was in October.
My wife says I'm impatient. Are you impatient?
No, I'm pretty patient.
Are you?
Yeah, I think I got good patience. Yeah.
Okay. All right. Well,
still a bull.
Okay. Fair enough.
I'm not that age yet,
All right. Fair enough.
As the markets continue to rally, traders may wonder what happens when we take a directional stance. This section analyzes how different approaches to selling daily 0DT SPX put spreads have performed. So the study is we sold one put spread daily using the at-the-money short strikes, compared multiple long strike widths. Every time we were tested, entry times tested, where the market opened within 5 minutes and 9 a.m. So we did this at 2 times. Mm-hmm. And trades were closed at either 10 or 25% of the max profit. So these are going to be much meatier spreads because you're selling right at the money. It's the last 2 years, so it's been significantly skewed bullish. And so this data, you have to keep that in mind here.
Very good.
So opening at the open, closing at 25% of the max profit. You can see your win rates across the board very, very high, higher than you would expect. You'd expect these to be like 60 or 70% because you're selling an at the money spread. So you're going to be a little bit better than 50%, but you're not going to be 80% on these. And, because the win rate is high, it's telling you that the market has generally gone up. You do increase that win rate by managing in some fashion. So that's going to increase it as well. But again, for a lot of the last 2 years, it's been pretty much up. And so you see that reflected here.
You definitely see it affected here. I mean, but you can't tell what the market You can't tell the market what it's done, right? I mean, you can only do it what's here and now.
Of course.
You can only look
Of
at
course.
what's here and now.
Of course. So here we're looking at 9 a.m. So the 9 a.m. 25% profits, basically the same thing that we've looked at before. There's really no meaning. Everybody asks for like, what's the perfect time to put the trade on?
I mean, isn't that what everybody's looking for? And there is no perfect time, right? I mean, there could be a bad time. And we've found that after 12 o'clock seems to be and it's noon central, seems to be not as advantageous time as putting it on earlier.
Yes. But there's no perfect entry. There's no perfect delta. There's no perfect, there's no like, this is the one trade. Yes. They're all priced for whatever the risk is on those trades. And you hyper focusing on the best entry is less important than understanding the management and understanding the risk. Like that's where you should be focusing on. It's less about the perfect spot. And so you can see across the board here, the numbers are basically the same, whether you entered at 9 a.m., which is 30 minutes after the open, or right at the open. It's basically the same numbers here.
Very good.
So during the study period, SPX rose from 3,800 to 6,600. So you had obviously an upside move. And this kind of goes with, any small data set you have to, and any back test in general, you have to take it with a grain of salt because, the market did what it did. It's everything that you're studying is in hindsight, and it's not necessarily to continue the same way or same magnitude into the future. So, that's good context, but we have to just, kind of pump the brakes. I think that's kind of what we're saying here. Higher profit targets captured more total P&L, but increased the exposure to larger drawdowns. This is across the board. Like if you are targeting more profits, you are going to have more risk. Like that is just the nature of anything. Like more risk, more reward. It's a very, very easy thing to understand. And that plays out here. This study being, on the last 2 years skews the market skewed bullish. And so, this looks like the free money glitch. Of course, we know that there's risk to that. The main takeaway here, there was no meaningful difference between entering trades at the market open versus, 9 a.m. It's one and the same.
It is one of the same, and the market is still the same. It really is a metals market here. You've got silver now down $6.40, making new lows at 70.50. That's an 8% move to the downside. Gold is following along too. Just was $15 lower than that. Gold is now down almost 5%, 480. As even the S&Ps really haven't moved since the last time I've quoted them, down 26 handles. Nasdaq's actually caught a small bid off of its lows by about 20 handles, down 130. Russell down 14. Dow down just about 200. Volatility hasn't moved, up 4 cents, 1680 and change. And the bonds are up 8 ticks. What do you think about the overall equity market with this move in the metals? Now, let me give a little context or a little bit of backfill here. All markets have been going higher as the metals have been going higher. All markets have been going higher as even the S&Ps have been going higher. Bitcoin is hanging steady here, down $100. Actually catching a small little bid. What do you think about the resilience in the equity market with this big move in the metals market to the downside? The first big move in some time.
I think it's a lie.
You think the market's
I think the market is lying to us right now. The equities.
The equity market's lying to us. You think that?
I think there's more downside. I mean, I'm surprised vol isn't reacting. That's what is the weirdest part to me, is that vol has stayed basically flat. I mean, the VIX is at 14, and you have, gold is down 5%, and silver is down 8%. Bitcoin is moving, 1 to 5% a session. Equities just chopping around here. It feels like, equities are kind of behind on the rest of everything.
How does it feel to you?
I
tend to agree with you, and doesn't set up for a good Jan 2026 if the market hangs in here going into the end of the year. I'd actually rather see the market sell off a little bit here in conjunction with the metals, and actually maybe shed a little bit of light to the overall market in 2026. Otherwise, it seems like it's an artificial inflation right now of the equity markets. Although it is a very quiet session, even the S&P's volume has been quite low.
It's a short week, holiday week.
Short week, holiday week. Yes, yes. All right, my friend, let's take a quick 90-second break. I think we've got our friends from the Tasty Trade World Headquarters, the trade desk, Quentin, coming in. We'll take a quick 90-second break. We'll get to him after this. We'll be back in 90 seconds. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Yeah.
Yeah, enough fun on the block all day, all night. Is in there, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat. Yeah, it's homemade, no drama. Just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, roll up, yeah, we all chasing. Pockets on lead, but the vibe's still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke is a spot.
Nicky, we are back some with even the S&P is down 24, but gold down 207, about $30 off of its lows, and silver down $6.47, about 14 cents off of its lows.
Do we take it off? Do we take the ratio off?
Probably.
I think you're right. I had some people in the chat, talking about like it, it's basically it's come back, if not been profitable with the scalping and getting out of the gold at highs. Like we've kind of massaged this from a really big one to a nice day.
From a dismal loss to a nice day. I totally agree.
And I think given just we have a holiday coming up. I'm gone. You're gone. This was about as good as it gets.
This is about as good as you can get. It's trading at about 61.5. I just did it real quickly. All I did was get the price of gold around 43.40 and the price of silver around 70.50. Divide that by each other and you get around 61.48. You were talking about it being down around 55. It ends up being it moves $6,000. It ends up being a very
per percent. It's $1,000. I mean, that's like really what your move is, and so I don't know if this is the bottom tick of it, but it's a good spot. If we go lower, we can assess the situation. We always get back in.
Yeah, you can always get back in, and it does open up a lot of premium selling too with volatility so high in there now. So it really is the world becomes your oyster.
Yeah.
Did you do something in gold too, or is that
gold? I just bought that call to make the butterfly.
Gotcha. Thank you very much. Appreciate it. So it's more of a hedge on that one. Thank you.
Yeah, I own so I have the GLD 405, 415, 425 butterfly on for like $1.
Mm-hmm.
I mean, but again, this goes back to like we were $2 or $3 in the money last week.
Right.
Today we're now fully out of the money. I figure I leave the position on, buy in the risk, and give myself a little shot trade. Small, a nothing adjustment relative to, the gold silver ratio or some of my other positions that I have on here.
Very good, sir. Very good.
Yeah.
Hey, you know what? Enough about you, because we've been talking about you all day. That's right. Quentin from the Tasty Trade World Headquarters. How are you, Q?
Fellas, how's it going?
Yeah, you know what? Every time I see you got a little thing going on here. What you got going on?
Oh, yeah, I like that. A little holiday flair.
Thank you. You know, I just need something different, so I decided to shave. It was very cold this morning. I don't really subscribe to the belief that like people who have facial hair are actually warmer, unless you've got like a really high beard like going up on your face and it's like really long. I think that might keep you warm, but my beard was not keeping me warm anyway. But just need something new, and I was like, all right, let's have a little fun. You know, just have a mustache.
This wasn't influenced by.
You got a new thing going on. You got a little glow up going on.
Yeah.
I was gonna say, was this influenced by a little lady friend or something like that?
No, it was not. It was not.
Okay.
This is the lack of a lady friend. I've been through this numerous times in my life.
This is what happens. You know, you start experimenting with, you know, all different looks and stuff.
I understand. I would go through it too. Hey, Q, Nick, should you ask for this video or should I ask for this video?
You asked for it.
Q, my Taiwanese sources were able to procure a video of you, which I think is one of the more impressive things, honestly, that I've seen. All kidding aside, this is a video of Q. What are you deadlifting 500 pounds?
Yeah, deadlift of 500 pounds. Yeah, huge PR for me. So I've been trying to deadlift 500 pounds a couple different times in the past. I failed it on grip, failed it on strength and positioning, but got it yesterday. So that was a really big, like, lifetime milestone PR.
Deceptive strength here, ladies and gentlemen. Please give it 30 seconds to check this out.
Or you'll want to zoom forward a little bit.
Nah. The buildup is good. The buildup is good.
Yeah.
Okay.
Look at this.
Good form, from what I could tell. Out in plain view of everyone.
Yeah, commercial gym.
No attention to football games on.
Well, let me just be clear. I did not yell in a commercial.
Yeah, no, we can hear the voice. You were very.
I would never do something like that. It's just me mouthing and getting my aggression out. But I would never yell in a regular commercial gym like that. I just want that to be clear.
Yes. Yeah.
I'm in awe. I'm impressed. I'm actually 100%. I'm actually fanboying on you. That's very, very cool.
Yeah, for sure. Yeah. You know, I find like powerlifting is very similar to trading as well, because it's like whatever you do in powerlifting gives you the exact outcome, you know, when it comes to like your strength and things like that. And it's like when you're trading, however you manage your risk and things like that will directly result in your P&L, you know? And so there's a lot of similarities, you know, when sometimes, you know, training is not going very well. There's a lot of times where the market's dull. Things like that. There's like an infinite amount of similarities actually between the two microcosms of life there in trading and, you know, working out, things like that.
You're gonna be our representative when Dr. Jim comes and talks his smack. The next time he's in the office, we'll be like, "Oh yeah, you want to keep talking, Jim? We got something for you right here." You're gonna be the young guys.
We got some really strong people on the brokerage side. Actually, we got my man Andre, the Russian, and then we've got Adam, the farm boy. We've got two very strong big guys. Like, cause I'm a good pound for pound guy, but those guys are just like straight up super strong.
Totally, those guys are huge. If you run into them in the office, those are our margin call guys.
Yeah, like Andre's pretty scary. Show up at your Adam door. Barr is super nice. Andre's pretty scary though. You don't want to mess with Andre.
I got it.
But so I got some market stuff.
I am impressed. My legs are like twigs. So anytime I see somebody do that, that's good job out of you, man.
Thank you. Well, I got some market questions. So we're getting a lot of questions about the metals and things like that. So when you're trading silver, are you usually trading the outright contracts or are you also trading options? Because the futures options, I was scrolling on the strikes. I felt like I was scrolling forever. There were so many strikes just because the implied volatility is so wide now. It's like, you know, you're 10 points away and it's still a 30 delta on silver futures. And there's also like the ETFs, like SLV, right? What do you guys typically trade? Is it usually the outright contracts, futures options, or the ETF options?
We've been trading more just a futures contract. We've been trading the gold silver pair to be quite frank, which makes it about 85% less volatile. Although in this market, probably really made only 50% less volatile than the futures themselves. So we're making a small product a little bit smaller. I do have an SLV position. I thought volatility was upticking there. I had no idea that volatility was going to get as high as it has in SLV now. I mean, the IV rank was over 100, meaning it's never been higher, and we're at the end of the year. It's never been higher all year long. So when the IV rank got into the 60s and 70s, I thought that was a good place to start, and it doubled from there. So for me right now, if I was looking to put on a position, I would probably be looking to sell premium in an SLV type product over trading the futures, which are moving around, 8% today. $6 moves is a $6,000 move, even in this small future. So I would be looking for the future and like sell future, sell put, buy future, sell call kind of thing. Anything to reduce the risk in there with volatility so high. I think premium selling is probably the paramount play today. I wouldn't have said that 2 weeks ago.
You got to be careful with the silver futures options too. There's a lot of vol in those options, and they're very, very big. And the bid-ask spreads can get.
I talked SLV. I wouldn't go into / Yeah, go ahead. I'm sorry.
Of course, no. I'm just putting it out there. Like, even if you think you're really small in silver futures options, the bid-ask spreads can vary widely. They get very, very big. A 1 point wide spread is $10,000.
Yeah.
They get very, very big. And you got to be careful there. So, there's a point where volatility gets almost too high for most people to be trading it. And silver kind of got to that point with the big boy futures, unless you have the capital, to really trade there. And by capital, I mean, the amount of risk you're taking, you can handle it, not the margin requirement capital. Like, the margin requirement is one thing. The amount of potential risk on the table is another.
Yeah, for sure. Yeah.
Like,
and that's something
we talked about, like the $12 move in silver today in one futures contract is $120,000.
Right.
That's a big contract.
Yeah, and that's something we see on the desk a lot too, like cautioning people of the wide spreads between the bid and ask, because especially with the futures, when the multipliers change, it's not just like 100, like, a regular ETF, and it's different for every future as well. And so when we see that, we always want to make sure customers know that, like, $1 spread's a little bit different in the futures than it is in the equities.
No, totally agree with you, Q. Totally agree with you.
Yeah. All right.
Yeah,
well, let's get to my list.
We got some
here.
people asking for the weight, 500 pounds, right?
Yes, 500 pounds. Yeah, I had to do the math a couple of times, like on the calculator before I was about to do it. I was like, because I can't be wrong here. I don't want to do 495 or something like that. I was like, I can't be wrong. And then I was like, if I do 505, it's like, God forbid I fail 505, like, and I was that close, then I'd be so pissed. I'd be like, all right, because then 500 was there. So I had to do the math a couple of times. But
I'm not going to lie to you.
Pounds.
It looked like you had some room to run too. I mean,
yeah. Maybe like 5 or 10 pounds. Like not much room to run, probably. But and also, like, when you're using plates like that thick, like the bumper plates, you get a lot of slack pull in the bar as well. So that also helps too. Because like there's
are you done now? Are you done now with the personal bests?
No. Am I done?
No.
Are you crazy? That never stopped. Road to 600 now. We were on the road to 500. We got to our destination. Now it's the road to 600. It'll take a little bit longer, most likely. But,
all right. Yeah. Listen, as a father figure here, I would say, I think you accomplished something that is commendable, and nobody got hurt, and everybody's feeling good, kind of thing. That maybe you just concentrate on your style, like you got now. Concentrate more on the mustache. Still work out, do your thing, kind of. Keep yourself all groomed, nice, kind of thing. Difference between 500, 600, does it really matter?
That's actually a great point. Like when you tell someone like you deadlift 500 pounds versus you tell someone you deadlift 600 pounds, to them, there's no difference. I mean, it's all like, wow. Like, I mean, even like 400 pounds, anything over 400 pounds. I mean, anything over 300 pounds is really heavy, you know?
Yeah.
But it's, to me, I enjoy the training. I enjoy training for powerlifting and things like that. And then also, you know, there's a lot of like, you know, at least within like the powerlifting community, there's always like, oh, like, you know, you're never good enough. Like, you can always improve and stuff like that. I think it's important to think that like you can improve, but what you did is also very impressive, like you said, you know? So I think it's like, you know, understand your accomplishment and be grateful for it, you know, be very proud of your training, take pride in all the work that you put in. But then it's also like, yeah, there's still goals to achieve out there if you want them, and still, you know, more training to be done.
All right.
Love it.
Fair enough. Get to your list, my friend. Thank you so much. That was a great video.
Let's get to the list. Thank you. Thank you, guys. Top 20 symbols going through the system and their IVRs. At number 1, you've got SLV 88, Tesla 12, GLD 67, NVIDIA 9, Palantir 14, SoFi 13, iBit 35, Amazon 22, Broadcom 14, AMD 26, Netflix 32, Robinhood 14, Meta 25, TQQQ 17, Oracle 42, GDX 71, Google L 26, Micron 35, MSTR 30, and Nike 14.
Good job out of you. Good job out of our traders out there too. We've been concentrating more in the metals and the futures part. Matter of fact, we made very few equity trades today, with the equity market really not moving that much today, right? Even the S&P's down 22. If you asked me what they were doing all day long, I would say down 22. If I looked across the board on the rest of the market, meaning the metals and even some of the other smaller products, smaller products relative, but the oil products of the world, they've had a little bit more movement than the equity market. So for our world, and we take a look here at what's been holding us higher, it's been Reddit all day long, up around $3, and any kind of oil-related stock, XOM, up $2. Not the stocks that you typically want to see leading the market, but the downside is few and far in between too. I mean, AppLovin moves $15 to $20 every day. As a matter of fact, the expected move in AppLovin for just the week is about $25. So $23, a big move in AppLovin today. But across the board here, when you look, it's really gold down $16, $18 now, $18.02. Is your lead in the clubhouse. Tesla down 8 and change, and some of the other NASDAQ stocks. Today, it's about the metals, and scary type market when it's about the metals, when the equity market's not the leader of the group. You guys agree?
Yeah, and then volatility is not really moving on top of that, you know?
Volatility is not moving in the equity markets. The volatility is actually contracting a little bit when you look at, like, you know, gold products. You know, it's down to about 66. It was 100 and something, but still elevated by all means. No question there.
And then one more thing.
I don't have too much left to go ahead.
One more thing. I've got a new show for you guys. It's called the Copenhagen Test on Paramount Plus. If you're into like thriller action type shows, it's really good. I like it.
Awesome. What's it called?
Yeah, the Copenhagen Test.
You heard of it, Nick?
It's new.
I think it's
no,
new.
I haven't.
Oh, okay.
No, it's
All
new.
right,
I really like it. If you're into like, you know, thriller, spy, action type shows, I think that would be right up your alley.
Beautiful. All right, my friend, we're going to take a quick 90-second break and come back. Sit right there, my friend. Happy New Year to you and everything else if I don't talk to you, but be very good. Nick, you be good on the slopes. Be careful out there. And everybody else, be careful out there with your trading. This market's got a little tinge of
stay small
with nothing going on. So be careful. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next up. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We just living it up, yo, that's real life.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. And you think it's still Christmas, Jenny? We're still wearing red.
Hey, I thought I'm going to keep going. We've got a lot of red in our closets because we've been on Red Shirt Thursday for 15 years. I'm going to keep going with Christmas red as long as I can.
As long as you can, for 3 more days. How was your Christmas?
It was nice. I mean, the whole holiday was nice. It was crazy to be off for so long. I don't know what to say. It was a whirlwind. It's like I don't remember it all because it felt like so much so fast, and the days were all blending into each other.
Hey, honestly, Jenny, I would wake up and be like, "What day of the week is it? What is happening?"
Yeah,
it was crazy.
Yeah, you know how when you're on a cruise and you look down and the elevator says Monday or Tuesday, and it tells you what day of the week it is because you wouldn't know if it didn't tell you. That's how it was.
That's what I need in my house, my front door to say what day of the week it is. You're right. It was like that. But it was fun. It was a good holiday had by all. We were off for an extraordinary amount of time.
I know.
I actually forgot. I did trade a little bit on, was it Friday? Whatever. It was a full day on Friday. So I traded a little bit in the morning on Friday, but I totally forgot that the market was open all day long. So I was wandering around and at 3:00, the bell rang. I was like, oh, okay.
I traded a little. I was out shopping. My daughter wanted to go shopping the day after Christmas, which I was concerned about. I was worried it would be very crowded, and it wasn't. There was only one store with a line too long that I didn't want to wait in, but nothing. I was at Orland Mall, and it was not that bad.
Really?
Yeah.
I'm surprised by that.
No, it wasn't bad at all. Honestly, like were no line at Lululemon, no line at Sephora. Well, like 5 people at Sephora. I mean, I've seen 30. No, the only store that had a long line was Lush.
There's a Lululemon in Orland Mall?
Yeah.
Speaking of Lululemon, listen to this segue. The original the OG of Lululemon is trying to take it back over.
Well, let's check. You know what? Let's hop in the platform and take a look at Lulu. See what's going on.
So how crazy is that? So that was on Market Watch this morning because it's lost like 45% of its value from top to bottom in Lulu, and so they're trying to rebrand, and the original creator of Lulu is trying to come back in. Look at that!
Okay,
look at how the mighty have fallen. 420 all the way down to 210.
Hey, well, let's take a look. See if this could be. I don't know. I don't think it has dollar wide strikes. No, no. And the crazy thing is $10 wide strikes at the top. This needs more strikes.
Well, can you do me a favor and go? And I know we shouldn't do this, but go to Jan, because I was looking at. It's funny. I was looking at it this morning. They have 250 wide strikes, which I know you shouldn't do, but it's a lot easier to play with.
You could do. I mean, we're kind of like breaking the rules. Like 18 days, wide markets. Let's jump into Lulu.
No, it was just topical that you brought it up because there was one of the headlines this morning about the.
Yes, they opened. Okay, so I'm gonna look. I'm just looking for a jade lizard in Lulu, and here's where we're risking a little bit. Like a 250 wide call spread and a naked put. The bad part is the $2,800 in buying power.
Yeah, so I just looked it up. Lululemon founder Chip Wilson, which I never would have guessed that if I was on Jeopardy. Chip Wilson launches proxy to fight to change the board.
Okay, all right. Well, what do you think of I want to see how much this is. Just $1. It's just $1 on the 190 put.
Yeah, no, close it.
I don't hate it. Like if someone's got capital lying around, like if I got like tons.
Well, if I was doing just a put because I was looking for strikes, I'd go to the 56 day. Do you know what I mean? Who cares if it's $10 wide strikes if it's just a put? Because you can go to the 190 in the next one.
Okay, so I was getting $1 on the 190 there, and here the 190 is giving you 3. Yeah, you're right. You're right. And honestly, at this point in time, if we're just selling puts, I would do the February. It's funny. Somebody emailed me, and they may have emailed you too, asking about. It was interesting. I was answering this after the Bears game, and I don't know if my response. My response was nice.
It was after the Bears game, so.
It was after the Bears game, and I don't know if I would have had a nicer response if it were before the Bears game.
Or after the first 10 seconds of the Bears game, it would have been a nice response.
No, but so she asked about like, what can you expect your profit like percentage on a portfolio to be year after year? And I'm curious as to how you would respond to this. But my response was,
I'm gonna love this. I feel like I'm gonna love this response.
No. It's totally different, right? And I've got various accounts, and those returns are all different. So something like my parents or my in-laws who want a very safe, secure account because they're, much older, and they don't want to. They're too much money at risk. They've got, some long underlyings like T-bill or box. They also have some high dividend paying stocks with covered calls. They have, they're looking for a different percentage at the end of the year than you or I might be looking for, where we'll have years where we've made, a huge percentage. Or we'll have years where we're negative. I'm not going to lie. Like I've had negative years, but I've had years where I've got like a huge percentage. So it's different if you're going to be like very risk averse, or you're selling aggressive puts and high vol products. Like it's totally different. You can't just say, because every trader is looking for something different.
I agree. And the percentage of the account goes down the larger the account is. And I'm glad you brought that up, because I manage, 5 different accounts, and one of them I can't lose. Not meaning like I've traded it so well I can't lose. I mean, I can't lose that money because it's earmarked for something, right? So I trade that very less aggressively. You're right. I'm looking to beat the market. Or not beat the market.
And I want to clarify this, because we've gotten in trouble before to say like, you can't lose. So that's what
I'm saying. It's not something you can't lose. I'm saying I can't lose that money. So I'm very conservative with it. Like I don't want,
like maybe it's in the box, right? It's in the SPX box, or it's in something where it's just an interest rate play, where the money's not at risk. It's an interest rate play.
Correct. Yes.
It's so funny. I don't want to be.
Very conservative. It's in a very conservative, like to the point, like kind of with your in-laws. It's very conservative. It's a very conservative account.
Yes. So it's different versus like someone who's really looking to make big returns, and they're trading high vol products. And when you're trading high vol products, they move and they can move. So you could have an amazing year or you could have a losing year. It depends. You often mention how Bitcoin has got a really high vol. Well, it's priced to move. There's juice in those options. It's priced to move. Just like Oklo is priced to move. I can't be surprised it went from 200 to 70. It's priced, the vol it priced it to move.
It's true. It's true. I'm just glancing at the chat, and Ajit, I see you. And he's like, we're 7 minutes in and no talk on metals. Did you see silver?
I didn't want to bring it up because I know you're like a metal bull. So I wasn't even.
Jenny, you have to bring it up because it went through the roof. Did you see? Look
on Friday. On Friday.
That's what I'm saying. We shorted it on the 23rd, which was.
So it's
no, the 23rd. So keep going down. And then look at it. Look at how high it got.
I know.
Crazy. So I consider that a victory. It's still higher than it was on the 23rd. That's what I'm saying. I'm a metal bull, but yes. But this is, and it's still got an 88 rank. Take a look at our SI. When you go to the chart on this, this got up as high as 79.
I know. I saw that on Friday. And then this is like, okay, so 6 days ago we put this on and we're pretty much right back to where it's a $46 loser, but it's not far from where it was when we put it on 6 days ago, this actual spread.
Yeah, but check that chart. It got up as high as, even today, it was as high as, I think, 79.
Yeah, look at that.
79. It's insane.
82.
Whoa. Yeah, I mean, that is bonkers.
But is this it? Is this the end of silver? I thought, on the
16th, on the 23rd, we were trading around 69 or something. It was the 23rd.
On the 23rd, I said, I'm finally putting in short metals, short silver position. I haven't been shorting it. I finally, for the first time, putting in a short metal. And you said on the show, like, we can't expect to call the top. We can't expect to be calling the top. So on Friday, I said to myself, I didn't expect to call the top. But But I
didn't expect that move. When it got up to 80, I saw our silver futures position. I was like, you got to be kidding me when I looked at it.
Yeah. And today is kind of nuts. You're going to have to read me the percentage because my little Zoom sign is blocking it.
7.5%. I'm sorry, 7.2% now.
Yeah.
Yeah. Crazy.
And I mean, when you look at this SLV down 570, a big move down in SLV, but again, just losing the rally it had on Friday.
And that's what I think is fun is looking at because silver was open before SLV was open, right? So that's why the bars look different because you could have traded SI this morning at 82.
Right, and this didn't open until 8:30 Central Time.
Yeah.
So yeah, Ajit, I know what's going on in the metals, but if it were up, I would have shown Liz. I didn't want to show her on a day with the down move.
It's hysterical because I think trading options. I didn't want to show you how far up it has been since we.
I was going to bring attention to it.
It's funny because I can say it's still higher than it was when we shorted it.
Yeah. Yeah. So, and what do we have in silver? Just still our little short 14 shares. That was part of our pairs trade.
We took off the Iron Condor for a loss and put on the other short in SI.
And put on the other SI short call spread. Yeah. And this, honestly, this will be one that I think at the 21-day mark, if it hasn't won, if we're not winning on it. It's funny because this morning it was winning. I saw it like up $50 or something this morning, which we wouldn't have taken it for up $50 because I think our profit potential is $800 on this. Is it 800 or what's the multiplier in SI?
No, it's pretty small. And I never saw it up.
Oh yeah, I did. That position was up $50.
How low did it get? How low did it get?
So we got to 70.25.
Wow.
And again, it could be wide markets on here. It could be wide markets.
That had to be wide markets because that's still not even really, I guess 70.25 is good.
So I am curious as to.
So the question is, and they're asking it up there and I didn't see the answer. Do you think silver is going to see, and stay right here in SI, do you think it's going to be 70 or 75?
Do we think what?
Silver. Do you think it's done? You think it's going to breach 70?
I mean, I threw on the short position saying, hey, I'm going to get short. If I need to roll it, I'll roll it. But I have the same position on in my account too.
Frank seems to think it wants to see 72 again. 72 is not that crazy. That's 30 cents higher, Frank.
You know what? In options, like we don't care if these bounce around. We just need like one day where we can get out.
Yeah.
Or time decay, because this is right now still out of the money. It wasn't out of the money Friday. It's out of the money today. So here you can see 155 debit here says 777. So like this multiplier 0.5, five times the multiplier.
Yeah, it's big. So that's 50 cent wide is $1,000, right? Or I'm sorry, 25 cents wide is $1,000.
5 times multiplier. So I'm gonna bust out my calculator. But you could just see from the other one. I think we've got $800 in profit potential. Or well, no, it'd be only 400 if it's a 5 times multiplier. It's not 860. It'd be $430 in profit potential if we took in 0.086. So we have $430.
The one thing I wanted to look at too while we're chatting on this, and I know we have a couple things we want to address, and we are taking live tweets with the hashtag LIZJNY. Nike, we just have a long position in Nike. We have a long call.
Here, a short put.
Sorry, short put. Okay. For some odd reason, I thought we switched it over, but we've got a short put. Do we want to take 50%? Let's take it.
Yeah, we haven't been in this account in a handful of days. See, okay, did you see this? It's wide markets because do you see how this is bouncing around?
It's wide markets, correct. Yes.
It's wide markets. And honestly, because they're wide markets, now we're not because it's moving around so much, we should put a GTC in for this.
For sure.
But what do we want to take?
I'm going to take 10%, take 20%.
20%.
Yeah. We can always, if you close it, we can always get back in.
Yeah. So this will tell us if we take 20%.
Our GTCs cannot be canceled when the market's between sessions. I'm fine with that. That means that if it gets hit and when it's over.
Yeah. Okay. So if we.
I like the polls, Frank. He did a poll, and 75% think it's at today's price. I think 75% of the people think it's going to be under 70, and 25% think it's going to be over 75.
All right. If we paid 0.086 and we buy it back, if we took in 0.086 and we buy it back for 0.069, we've made 0.017 times 5 would be $85 only.
I mean, we only can make 400. We can only make 400. Yeah.
Let's make more. Let's put in, I'm going 50%. I want 50% GTC.
Put it in because it's bouncing around.
We're not going to hit 50% GTC now, but.
No, just leave it in GTC, yeah.
Okay. And that's in.
I mean, with that, if it's moving around, you could get out of it because it's a one-way trade.
Yeah, it's a one-sided trade. Speaking of one-sided trades, spoos are down 30. I did sell, I sold a put spread in SPX today. I did my calendar on the open at 8:30, and then at like 9:15, I did a put spread. I don't know, what do you have going on in SPX today?
I did put spreads, and I did them in different accounts in different varying lengths.
Yeah, so I've got those going on. I don't know if JT is on break or if he's selling his SPX today.
Oh, he's sleeping.
What?
He's sleeping.
He's sleeping? Not JD, JT, Jack Tucker.
Oh, Jack Tucker? I don't know if Jack Tucker is sleeping. Let's see.
Jack Tucker, I did see him responding to someone earlier. Happy New Year, no need for apologies. This is responding to someone. We are all learning. I post the trades as I don't have a trading partner. Jack Tucker, we're all your trading partners, right? We love.
No. We all aspire to be you, Jack Tucker.
Yeah. We would could be lucky enough to be your trading partner.
Yes. That's so funny.
Yeah.
Okay, so that came in. That came in yesterday, 22 hours ago. Okay.
Right, and then Jackie came in talking about potentially.
Jackie, I feel like we haven't seen Jackie in a long time.
I know, and look at this potentially life-changing product, but liquidity does not look great. He's talking about the new Mag 10. So the new Mag 10, awesome. It takes a while after something's brand new. It takes a little bit of time for it to gain steam and get some liquidity. You need more players in the game. It takes a little bit of time.
Yes, it does take a little bit of time. And then Frank the Great comes in 3 hours ago from the SIBO. Friday's option volume, 50.6 million contracts, was 14% below. And you'd expect that. That's with calls leading puts 3-2. Among the 500 most liquid single stocks, 30-day implied volatility was higher for 275 and lower for 160. Okay, that makes sense.
Yeah. So Friday, when we were shopping, when we were Black Friday shopping, Lily was in the dressing room trying on bathing suits, and I was sitting outside of the dressing room, making some trades from my little waiting room chair.
I don't know if it was Black Friday because that's the day.
Oh, not Black Friday. But in my mind, it's probably Black Friday is probably the busiest shopping day out, and then the day after Christmas is probably the second busiest.
I think you're right.
All right, what do we have going on? Not too much.
I don't know if there's a lot of things this week.
No, I don't think so. It's a holiday week. It's a slow week. We only have, we've got New Year's Day coming. Liz and I will be on the morning show New Year's Eve.
So Blue Wackadoo, this is from How I Met Your Mother. You've got to watch the show. It's really good, Jenny.
Oh, we are watching it now. You
are? It's so funny, isn't it?
Yeah. I do like it. I was always a big fan of Doogie Howser.
No, he's Barney Stinson. He's the best character on TV in How I Met Your Mother. I love Barney Stinson.
Yeah, and I was lucky enough to see him in person. When we did the candlelight processional. If people have never done it, it's amazing. In Epcot, they do this in the holiday time, and they have someone famous do the performance. And it's someone you can always see the schedule of what famous person is doing it this day. And we had Neil Patrick Harris.
That's awesome.
Yeah, it was very cool.
When Annabelle just went to New York, she saw him too. He's on Broadway right now. So he was coming out. They waited, like the groupies that they are, for him to come out of that back door and took a picture.
Oh, cool. Did she get a picture with him?
Yeah.
Very cool. What's he on Broadway?
It's a two-man show. He's with another famous guy. I don't remember. I'll have to Google it.
Fun.
When she wakes up. But yes, I love it. Okay, so what does Eric do? Blue Wackadoo. Happy last Monday of 2025. It is. Who made 485 shorting gold leaps? This guy.
Nice.
Also added 4 DTE SPX Iron Condor to the 10-day-old 7 DTE Jade Lizard, but the analysis looks wacky. That's true. When you layer them on there, sometimes the analysis does look kind of funky.
Well, nice. 485. So now, I think. So this morning, Tony and Nikki were saying, what's the market now? It's not the equities anymore. It's the metals. The market's the metals. So Blue Wackadoo said, I'm not just going to make my daily money selling SPX. I'm moving on to GLD. So 485 shorting gold leaps.
Well, I mean, that's like a natural trend. Take a look at this. SI has an 85 rank. We are rank followers, right? We are implied volatility chasers. That's basically what we're doing. We're like tornado chasers, but for implied volatility. And that's where it is right now, right? So when that moves, we'll move. So gold, GLD, and ETF has a 66 rank. And when it moves into, I don't know, your oils or your softs, then we'll move too.
So let's talk about this. Going out to the leaps, I'm just going to go out a year. So we're almost in Jan 2026. I'm going to go Jan 2027. So he's talking about gold leaps that. This is considered a leap. Do you remember what leap stood for? It's long. LEA. I think each letter stood for something.
Longer expiration, something. Yeah, I know what you mean. But S was in there too. Yes.
Yeah.
Some people tell us this. Frank the Great. Frank, please tell us what leaps stood for. You know what? I'm going to use Google. Hold on. You stay right there. Talk amongst yourselves.
Okay, so look at this. Gold's trading 398, and it has never been higher than 418. And if I just sold, let's say I went to the 35 delta. I'm gonna go 35 delta 35, and sell this 455 call for $21, using $4,000 to make $21. Now, this is a 382-day trade, and you could be stuck in this for a long time. But if it drops down, you can buy it back. I've traded plenty of leaps before, and they move when the markets move. So if gold drops down, you can buy this back. Not for 50% right away, but if vol comes in, if gold drops down and vol comes in, you can get out of this.
You can, for sure. And it's not a bad way to do it. I mean, you're putting up a lot of capital for the long term if it goes against you. Jenny, if you gave me 1 million guesses, I would never guess what leaps stood for.
Leaps. Like you said, longer expiration. I don't know what the A is. No idea.
Long-term equity anticipation securities.
Where's the P?
I have no idea. Maybe the AP was the same thing.
Anticipation. Anticipation. I took the A and the P out of the anticipation.
Yeah.
Well,
I mean, Ian, we lived through the era with the leaps, and if you gave me a million guesses, I never would have came up with that.
And I'll tell you, like, honestly, from trading on the trading floor, I hated leaps. Hated leaps. Loved the nearer term. Hated the leaps because it was very hard to price them. And you can see here, like, look at this. We've got gold, 41% implied volatility in the 0 day, 30% implied volatility in the 4 day. Then you've got 27, 28, 27 in the 18 day. 25% in the 53 day. You got to the leaps and you're looking all at 22. It was very hard to price that vol. Was the, what kind of vol do we want to set for the leaps? It's tricky. It's tricky. And as a floor trader, I hated when the big orders came in for the leaps because we knew we probably didn't have it priced right.
Yeah, because we were a market maker, not a market taker, right? So back in the day, you were given what was handed to you and you had to adjust the price accordingly. It's not now, if Blue Equity wants to go out and do something in the leaps, he's deciding what he wants to do in the leaps.
He's deciding what to do. When we're sitting in the pit, like if I'm sitting in the pit and like this big broker named Ogre comes in and Ogre comes in.
He's not making that up. That's a real person.
Yeah, that's a real person. So I'm sitting there in the pit and Ogre comes in and he's like, yeah, I'm going to buy 5,000 Jan 15, 2027, 358 puts, on your offer. Then we know we don't have these priced right. Yeah. Yeah. And then so as a market maker, I hated the leaps.
Ogre is still on the floor. Have you seen him?
Is he?
He's in the VIX pit.
Is he?
I think so, yeah.
No, I don't know. I mean, I should have seen it. Well, we don't go over to the VIX pit.
You don't go over there that often.
Yeah. That's funny. We don't pass it on our way to the SPX pit. We pass the rut. We pass the rut and the Mag 10, but
it's not on our way to the drink station.
All right. So, did we ever finish the discussion on year-to-date P&L and what your goals are? You talked about your various accounts, the safe ones. Then
I think your goals are different. I mean, I have 5 different accounts and I've got 5 different goals in all of them, and I guess what? They've all achieved different varying results. So it's kind of different. I mean, some I swing for the fences, some I take bigger chances, some I trade in higher vol products, and those are going to give you bigger wins and bigger losses. So it depends on the year.
Right. Yeah, it depends on the year. And I'll never forget. I remember like we were younger to Tasty Trade, and once I heard Tom say like, I want to make 100%, or I don't care if I lose, and I was like,
what? It's lost to see in mind.
But that's how some people trade, right?
Yeah. No, I agree.
Yeah. Okay. I have other emails I wanted to talk about, but let's close this Nike put. We're up 48%, almost.
Yeah, because I was just going to go push out our trades, and we've got a big fat goose egg right now.
Oh, okay. Let's see if I can buy this Nike put back for 106. I don't know how I'm going to do it getting filled at mid market because I don't know how busy. There it is. There's my 106 bid. Come on and hit me. I hated to pay 109. The market was kind of wide.
Do you want me to sell it to you? I'll just get into my account. Come on.
Yeah. You want to sell that 60 put?
No, but I will, and then I'll get out of it immediately.
Go sell that 60 put. Let's watch this. Trades in action. No, just keep it. It's only an 18-day trade. Sell that 60 put for $1.06. Come on, hit my bid.
Hold on.
This is going to be exciting. This is going to be.
I'm selling it. Hold on, I got to switch my accounts. I'm putting.
Sell the 18-day 60 put in Nike in Jan for 106. Hit my bid. That was the most exciting part of my morning, Liz.
I was like, what if there's other people there? And I had to penny it down. I sold it for 106 when they were trying to make me sell it for 108.
You had to sell it for 106 or it wouldn't have hit my bid.
I know.
I don't know that things are that busy right now. People are still on market vacay. So normally things would be filling mid-market or you even get price improved. Right now, the only two fools trading the 18-day 60 put in Nike are Me and you. Let's look at the daily volume. It's going to say.
I thought that would make you happy.
Oh, look, 1.8.
Well, but that part of me was like, it's not going to be her in that wheel, and I'm just going to 106.
Oh my gosh,
that was fun.
Yeah, did you see silver? Just like the way these are bouncing.
Yeah.
Huh.
Yeah, look, and it's so funny when you're like, we were up. I was like, no,
we're up 800. We're up $858.
I know.
$440. So like, I logged in and saw something like that. I was like, whoa.
It's so funny because that's why you're like, I don't want to bring it up to Liz. I saw something like this, and I was like, I can't bring it up to Jenny.
Yeah. Well, we're getting back near the lows.
Yeah, we are getting back near the lows. It could get hit. I mean, that's insane.
Yeah, it is.
But that's why we have a GTC in. If it crosses through and for some odd reason we get hit, we get hit.
I mean, maybe I shouldn't have been so aggressive with the 50% because we could get hit on something. Like maybe I'll take it up to 0.05.
Because you could get out. I mean.
Yeah, we could get out.
I mean, that's the bid right now. So we'll see. We'll see if that works.
If silver keeps dropping, if this is the end, if this is the start, if this is the beginning of the end of silver.
This could be.
Who knows?
This could be.
Who knows? Okay.
But to your point, and I'm glad we talked about this, kind of on the heels of the discussion of portfolio versus things like this, silver is priced to move right now. It could go up and down. This is very similar to when you were watching like Bitcoin. Bitcoin has a high volatility, so you see it up a lot and down a lot in the same day.
And silver's got a high val now, 69%, 63%, 60. So that's silver right now. I mean, BTC right now is still, it's lower than silver. Bitcoin val is lower than silver.
Yeah. Isn't that crazy?
Yeah. 87,000. Come on, Bitcoin. I was hoping. What is going to happen?
Even look at that. It's got those little blips, even intraday when you go. I can barely read those.
I thought it was almost 91, high 90.
That's what I'm saying. You're getting these intraday moves that are pretty big.
I know. Okay, so I have some other emails to answer. I don't think we've got anything major going on here. We do have our Oklo is losing. We just have a put spread. So
it's right in the middle.
18 days to go. I don't know if we should move it.
I mean, you could. It's something we want to stay in, so just keep the same strikes if you're getting anything for it.
You're getting a small credit.
I don't care if you want to push it out in time. I really don't.
Yeah, if we can take in a small credit to push it out in time. Okay. Yeah. So that's out in time. That's just a roll. So we're out to fab with that put spread.
Yep.
And okay. Now what else do we want to?
I mean, I don't know. I kind of glanced earlier. There's not much else to manage. I mean, I bet we've got our GTC in for, I believe. That's working according to plan. So we just sit on that. The rest of it, let's put on new trades. Let's put on a wheel trade because we're talking about it.
Oh yeah, so I want to talk about the wheel. I got an email about the wheel. So the wheel is like you sell a put and you keep selling puts until they end up in the money. And once they're in the money, you take the stock. So let's say you sell one put. Once that put is in the money at expiration, you get assigned, you take the stock, and then you start selling calls against it. And the question is, what do you do on, like, I think he called it a wheel tragedy. A wheel, instead of a real tragedy, he called it a wheel tragedy.
Okay, so the other thing too is when you think about it, this was years ago we used to do this. We called it the Wheel of Fortune, to your point, the wheel tragedy when things go down, because it is a bullish trade. And it was easier for us to explain it to people with the stock component to it. Meaning, like, right, you sell the put until you get put the stock, then you're gonna sell an out of the money call about it. And it's just the wheel. Now we know capital changes differently when you're long the stock versus short the put, yada, yada, yada. We're not gonna go into the nuances of what you should do or shouldn't do. But we're just gonna talk about it from the perspective of what happens if it goes down. Now, if you have a bullish position, even if you're selling premium against it and the stock goes down, what happens, Jenny? You lose money.
You lose money. You lose money. So like this is one of those. Again, we were talking about certain accounts, safe accounts, not safe. I don't want to say safe accounts or risky accounts, but my in-laws wanted some higher dividend paying stocks to get in. And if we start with the wheel, I pulled up Clorox because there's a higher dividend paying stock. And this sometimes people who want the wheel are looking for this because they don't mind getting in the stock because here you see it's paying a 5% dividend. So if I started here, if it's trading 99 and I sell this 95 put for 3.
I mean, in full disclosure, look at this. The dividends on February 2nd. Close it up and go in the GN.
No, that's earnings.
Oh, okay. Sorry.
Okay, so let's say I start here and I say, you know what, I'm going to sell this 95 put. I'm going to keep my $320 and I'm going to do this every month until. And I'm going to let it go till expiration. I'm going to let it go till expiration. I'm going to do this every month until it ends up in the money and I just take the stock. I take, 100 shares of Clorox stock. And then I have my 100 shares and I start selling calls against the stock instead of selling these out of the money puts.
And you would be selling, keep in mind, don't look at the strikes, because if it's gone down, the strikes will be different. You would sell the first out of the money call against it until it gets called away from you. And that's how you chip away in your cost basis. And we know plenty of people who've been doing this for years and years and years and years and keep their stock and just kind of keep selling it and get their cost basis to very low.
Now, what is a wheel tragedy? A wheel tragedy is, and it's hard to decide what to do then. It's very easy if stocks, the wheel is amazing if the stocks stay in a range. But here's what's hard. Let's say I sell this 95 put for $3. So then my cost basis in Clorox, if I have to buy 100 shares, is 92. So I took in my $3, have to buy 100 shares, my cost basis is 92. What happens if Clorox is 70? And I own it at 92. And in order to get anything for a call, I've got to sell like the 75 or 80 call, which is below my cost basis. I don't want my stock called away from me at 75 or 80 when I bought it at 92. And that's the wheel tragedy. And that's the conundrum. And that's the question in the email. Like, what do we do with a wheel tragedy? And he says, like, one of his real wheel tragedies, this Archer Aviation, ours too. Here we bought it at 1283 and at 775. So what do we do in a wheel tragedy?
But you'll notice we haven't sold anything against this because our cost basis is so much higher than that. It's interesting when you say wheel tragedy, sometimes the wheel tragedy is in reverse, where you sell a call against it and say you sell the 95 call and then Clorox is trading 107. You're also
and then you're just done with it. You're done with it. You find something else. You find something else. You made $300. You find something else.
And so that's kind of what we're at here. So you have to ask yourself, do I want this stock? Do I not? I made a bullish play and it didn't go my directions. Do I still want to stay? Do I want to stay with the bullish play? Then you just leave it.
And that's what I wrote, like, there's no right or wrong. If we were to sell a call in Archer, if I went to the 9 and got 40 cents, I'd rather not get the 40 cents. I'd rather just stay long.
No, but a lot of times what we will do is I'll sell the 9 and the 7.
Right.
80 cents on an $8 product isn't bad. That's something I will do.
And I will too, but I hesitate.
That's doubling out.
Like, you're doubling down. Then you're doubling down, which is why we like to not start with our full amount. Let's say my full amount in Archer would be 1,000 shares, and I started with 5 puts, and I got put 500 shares of stock. Well, then I could do 5 of these against my 500 shares of stock because I am okay getting long another 500 shares. But if you start at your max, you can't add more puts.
You can't. That's true. So, I mean, the wheel methodically, mechanically, if you can remove all emotion, which I can't, and I don't know anybody. I understand in theory it makes sense, right? In theory, don't trade emotional. And when it goes down, keep selling it until the stock gets called away from you. Bring it all the way down, sell the 8, right? Fine. Mechanically, you're still chipping away your cost basis. You're not doing it for life. You're not saying, so I'm just playing devil's advocate here, Jenny, right? Because you're not saying that you think it's going to be above. You're just playing the odds here. You're using extrinsic value to chip away your cost basis. If it goes through 8 and it gets taken away from you, then you jump back in with the 9 put. There is something to be said about that. But that is if you can remove emotion. It's hard to do.
And so I said, like, he brought up Archer. I have Archer. I'm going to look at mine right now. Look at yours right now. I just want to see right now in Archer, all I have are shares. That's all I have. I have shares. I have no extra puts because I hit my limit. Like, I have shares and I'm at my limit. And I set a mental limit of like, I'm not going to get more shares than this. And I'm at my share limit. And I did continue to sell some puts on the way down. But on the way down, I got more, right? And so now I'm at my limit and I have only shares. I have no puts and I have no calls against it. I have only shares. What do you have right now?
I have only shares as well.
So it's like at some point you might get to a point where you have only shares and that's it. And if you want to stay long this product, you just stay long the product. And I'm kind of waiting. I'm kind of waiting until we can maybe get back up to 10 or so before I would start selling some calls against it. But I can't sell any more puts because I'm like
No, but mechanically and the way that it has been trading, if we would have sold, that's what I'm saying. It's very, for me, it's hard to remove emotion. But if you would have sold, the 8 put 3 weeks or the 8 call 3 weeks ago or the 9 call or whatever, you could continue to do it. It fell you're doing something to your cost basis. But then you just jump back in with the puts. You don't have to double up with both.
And again, that's like an easy thing to say, which is why since we're both in it, I wanted to see like, what do we have? And we both just have shares.
Yeah, we both just have shares.
Which I think that like, as far as being honest and realistic, that's all I have right now. I'm not doing anything to help my cost basis. That's all I have.
But it is different because like Archer, like I said, removing emotion for me is the key because Archer, I care about, not that I care about, but I care about this. I want that stock. I'm keeping that stock and I have faith in that stock. It's very similar to Lululemon was back in the day for me, right? It's something that I believed in. Now, if you look at it and say, what do you got in, I'm just making it up, but like, what I don't care about or what I'm trying to do is like Royal Caribbean. When I wanted the stock in Royal Caribbean, I'm aggressive. Or when I wanted to get out of Meta last week, all I kept doing is selling calls that were right on top. Instead of me saying I'm tapping out and I'm done, I just stayed right on top.
Right. If you want to get out, like I think I had that in Upstart and it's like, and even XYZ where I would just start selling things against it. If I get out, I get out.
Yeah. You're close. You're just close because you're like, okay, it's going to take it from me or I'm just going to keep this profit.
And so he asked about SoFi as well. And it's funny because SoFi
has gone up so much.
Is one of those, and I used to, and he said he's been in the wheel in SoFi, and SoFi is one where I was in SoFi, but I'm not anymore because at some point in time it just got too high, and I tapped out. I was like, I'm tapping out of SoFi. Like I made enough for the year in SoFi. I'm not gonna trade it anymore this year. And I'm out of SoFi. And if you were selling calls against your stock and your calls are so deep in the money, let's say your calls are here at 23, 24, and you've got a Jan 23, 24 call. It's like having that put. If you'd buy that put back for a quarter, maybe you close the whole thing. If you don't want to get rid of your stock, if you don't want to sell your stock, then sure, you can roll an in the money call out in time and still collect something. Like you could roll the in the money call out and you're still getting $1. It's not terrible.
Roll it out and up.
Yeah. Still taking a small credit and give yourself more profit potential.
Yeah, there's lots of things you can do with the wheel. But that's, I think, the first thing, and I know we joked around about teaching everybody, we're going to teach them the SPX, Iron Condor, the teenagers. But this is something that I think people can grasp because people understand owning shares of a stock, right? So, right. And so owning shares of a stock and starting with a covered call makes sense. It's almost like we started backwards with it. We always start with a short put because we understand what we're doing. But the Wheel of Fortune is a very easy thing for people to grasp.
It is. I think the struggle, and I remember like your father-in-law, the struggle, like let's say he had the stock and his call was in the money. That was the struggle. It's like, well, I'm winning on my stock, but I'm losing on the call. When you sell.
Yeah, do you remember that? I was like, that's good. You want to, because you are bullish. And if you're losing on the call, that means the stock has gone up. And Jack Tucker just came into
But that's only good if that's when you're starting. It's not good inside of something like Archer Aviation. If we started at 12 and now we're selling that 9 call and it blows through and we're like, geez, we're making money back on our stock, but we're losing on that 9 call. That's when it's not good and you get super frustrated about it. So that's why.
And that's why when you said a wheel gone wrong, that's what I think the wheel gone wrong is. People have a harder time with their being long stock and they sold the call against it versus selling the put and it goes all the way down.
And sometimes if I get to the point where it's like, okay, this stock is through it one way or the other, I'll try to still get something. If I want to still get something against it, I'll just do like a baby. I'll be like a little baby. Like, okay, I'm gonna get 50 cents every couple of weeks, and I'll do like one strangle around many shares just to try to improve my cost basis a little.
That hurts That 30 call hurts more than when it gets up there, you're like, gosh darn it. But yes, I get it.
But that's just like, let's say I'm at my limit or whatever. Like, let's say I've got 1,000 shares and I'm not going to sell 10 of these, but I'll just do like one, just so I feel like I'm doing something, something. Yeah.
I do. Okay, can you please go to Twitter because Jack Tucker has entered the tweeting. Go top down. Yeah, there you go.
3 tranches 0DT SPX collected 32,900 premium, 6,900 puts are being tested now. Just watching the show and positions today. So my puts are probably being tested too. Let me see.
I mean, I wish I could say I'm Jack Tucker, but I have the 6,900 puts and they're being tested too.
I'm going to see what my puts are in my spread. Hang on. I got the 68.85s. 68.85s, but I don't know, Jack. My position's smaller than yours, so much smaller.
Yeah, I have Jack, I'm with you. I have the 6,900 puts. They're being tested as well.
So when you're big by big, like for me, I don't need to like roll down calls or make adjustments or do anything. I kind of just let it go and hope for the best. But when you're so big, you might, I think we see Jack make adjustments.
He does, but he's pretty good at it too. I mean, he knows what he's doing. So 69.
Hey, he's been doing this. Yeah.
So SPX is 69. I'm sorry, 680.95. I'm just going to use that. It's 95 right now.
Oh, okay. So he's still. Yeah, 68.95. Yeah, he's still out of the money.
Yeah.
Got the 68.90s. We may have popped down there.
No, it's the 6,900s. I'm reading his tweet again.
It's he's got 6,900.
Okay. Yeah, that's fine. I mean, but you're still within the realm. To me, I mean, when you're tested like this in the 0DTE, it's kind of like you expect to be tested at some point during the cycle. I
wonder what time you put this on.
10:20. 9:45, 9:50, and 10:20. And how can I see that?
Later.
9:44, 9:50, and 10:20.
Yeah.
Okay, and I appreciate it, Jack. Thank you very much for watching. And
thank you, Jack. Good luck, Jack. We're rooting for you. Mikey, hello, ladies. So, what were your favorite gifts from Christmas? Also, Jenny, I do think Clarence needs a friend. Oh, Mikey, I know Mikey's got the cutest puppies.
Oh, that's what he's saying. I was like, Clarence does have a friend, Sophie.
Oh my gosh. Liz, Mikey has the cutest puppies, these poodle puppies. He said they're only going to be about 30 pounds.
Oh, that's adorable.
Yes, I know. I was trying to get one of my friends to buy one, and they are so cute. So cute.
They are adorable.
But I can't have one more pet. We've got 2 poodles and a cat in the house right now. Can't have one more.
How was the cat on Christmas?
The cat had to be.
How's all the allergic people?
The cat. Actually, I lied. I don't have 2 dogs and a cat in the house right now. The cat had to be relocated to Michigan City. So Logan and the cat are living in Michigan City.
Why? What happened?
The Sophie and the cat do not get along.
Really?
Yeah. The cat and Logan had to go. So now Logan is living in Michigan City with the cat.
That's taking a turn.
It took a real turn over the holiday.
That has taken a turn. Okay.
So I miss my son. I would have loved to see him over Christmas break, but he's living in Michigan City.
That has taken a terrible turn.
I can't believe I didn't tell you about that.
No. I mean, in my heart of hearts, I did not expect that turn.
No, I mean, I'm pretty sure my husband blew a stack at one point and was like, either I'm taking the dogs and taking them to Michigan City, or you're taking the cat and going to Michigan City.
Well, and I do have to say, I know he's not watching, but it is your anniversary today, so you almost had to get rid of your son. It's your 24th anniversary.
We didn't have to twist his arm too much. He's like, I'll pack up the cat and go to Michigan City.
Oh, there you go.
So the cat's not in the house anymore. It didn't work out. Work out.
Cats and dogs living together.
What about, okay, so what was your best holiday gift, Liz?
I got a lot of good stuff. I would say my favorite was a giant cooler that I got that is royal blue. For all the tailgates that we're going to be doing in the future.
Oh, nice.
So I got a huge, I got a big Arctic cooler. It was pretty cool. Yeah.
Nice. For me, like, there's no question. My favorite holiday gift was what I got from Liz. Liz,
But it was not. I'm going to look insane for giving this to you for Christmas.
No, it was a combination 50th birthday holiday gift. But she wanted me to get it before our girls' trip. A whole luggage set, cherry red for Tasty, and she's got the same one. Now we'll be.
We're going to be matching. Everybody's going to be like, oh God.
We'll be twinning at the airport.
Yes. Well, no, you don't have to bring that because I know you like to check things in, but it's a good carry-on. It's my favorite.
I don't need to check bags anymore.
You get a good solid carry-on, though. It's a good solid carry-on.
Oh yeah, I don't need to check things anymore with this. I'm carrying on to Florida. I'm carrying on the cruise. Fish extender gifts and all. Wheeling this bag.
No, you have fish extender gifts. You can't do that. Have somebody else check your luggage.
But anyway, yeah, I love my new red luggage set. Love it. Love it.
Okay, so then keep it. Jeet, he's gold. Did we get to him already? Gold short strangle from 2 weeks ago.
Short strangle from 2 weeks ago. Just collecting its rightful overpriced bread. So it's such a tasty little Christmas, isn't it? So I wonder, from 2 weeks ago, is it coming off now?
It must be, is my guess.
Yeah.
Yeah.
And Jackie, can we ask Sibo when Tasty will have Mag 10 index for trading? Jackie, this topic has come up, and we're on it. People are working on it. We are working on it.
And then it says XSP has been struggling with liquidity compared to SPX. It is true because SPX does have a lot of liquidity.
Well, okay, so XSP is smaller, right?
Size, yeah.
The size, and if someone wanted naked options, in the 0 DTE, XSP is.
They're still pretty expensive though. So just do me a favor, sell like yeah.
And the hard part is, like, okay, I'm gonna go 1 day out just to give a little more premium. So I'm gonna go 1 day out, and why do we not have Delta here?
I mean, you can spread them off. No matter what you do, you can spread it off so even if you go down to.
Yeah, I can't believe it. Like, why is it 13,000? If this is 1/10, of SPX,
well, SPX is 130,000 for SPX. That's 100% correct.
But then, is a Strangle and Spy's not using 13,000? This should be equal to Spy, right?
Check Spy. No, Spy uses 6. I think it doesn't.
No. SPX is 10 times Spy.
No. I know that, but I think Spy uses 6,000.
Yeah, right. So that's what I was saying. Like, why is that using 13? No, it's using 13 too.
I mean, I haven't done Spy strangles lately. But Jenny, I know you and I both have said this, and I apologize. And you know what? I know Florida 7 is probably going to correct me if I'm wrong on this, or somebody will, and I love it. But as they're nearer term, they hold up more capital. That's happened to me with my SPX. I've closed a spread before that was holding up a lot of capital.
Yeah, because I didn't remember like a Spy strangle, and I guess normally
you're pretty far. Like try the at the money.
Yeah. No, it's still. I think it's because Spy is almost 700. We're used to trading it. Maybe it used 6,000 back when it was 400.
Yeah, there's a possibility.
So, if someone wanted Spy, XSP is a cash settled version of Spy, right? Instead of Spy, you got XSP, cash settled version. But I think what's hard.
Can spread it off. So, like when we're doing the $10 wides, can you just go into this? I mean, you almost need the 1 day, but do 10. If you're doing $10 wide, it's the same thing as if you did.
Well, you could just do, all you need to do is a couple dollars wide, though you're not paying anything. So you're getting 75. It's just tough because there's not. I think it's hard because if you're trading, I think if you're using XSP, you're really not using it for 0 DTE. If you're using XSP, you're using it for maybe a little bit longer term.
Yeah, right.
There's just not enough in the 0 day, right? Because like here, let's say I sell this right at the money put spread. We're almost trading 690. If I sell a $5 wide, 1, 2, 3, 4, 5. Okay. And I'm getting 60 cents, and we got the 690, and I've got $5 wide. Or if I go to SPX, and if I want a $5 wide for 60 cents, I can get some room. And get.
Kind of.
Here, I got a little bit of room, 68.85, 68.80, and get 60 cents with the same risk.
Yeah, if you were going to do, and even though it's 1/10, you could take the original SPX or XSP and go 10 times. It's the same risk if it's $5 wide and 60 cents. But here, you're right, you do have some room.
You get some room. I think if people are trading XSP, maybe they're using them more than a day, or maybe they're using them to buy them. Maybe to buy something you don't want to like.
Well, it's pretty interesting because I do that all the time. If I think something and I'm glad you brought that up because that's my actual go-to move. If I'm trying to be like, oh, I think SPX is going up today, but I don't want to spend $600 on the 6,900. I'll go to XSP and buy whatever lots I feel like I want to buy. So if you go to XSP and show that instead of spending $500 on it, I was like, maybe I'll spend 100, but I don't want to spend 500, right?
Right. Yeah.
So
you could go a little bit in the money and give up very little extrinsic value, or spend $200, and you've got a long XSP for the day. If SPY goes up $4 on the day, this will go up $4 on the day.
And that has been my go-to move if it's something that I want to leave, is me buying it, but I never really sell it. So maybe it's my fault.
And I kind of agree. If I want to take a directional move in SPY, I'll buy XSP instead of SPX because you can adjust your size. If I don't want the SPX size, maybe I want half, I could buy 5 XSP.
Yeah, right.
Yeah. And you think about it, if you buy 5 XSP, you've got basically half of an SPX for the day, and the extrinsic value you're giving up is, 13, 14 cents 5 times. Not terrible.
You have a 1/10 of an SPX for the day, not a half.
Yeah. So, no, if I did 5.
5. Okay, gotcha.
If I did 5, if I did 5, you're spending only, you're only spending you've got $2,000 giving up very little extrinsic value, and you've got half of an SPX.
Okay, there you go with 5. I'm sorry, I missed that. Is that what you were saying? But Jenny, it is now almost 10:55.
Let me make sure we got to everybody.
I would go top down, yeah.
That came in from a
G. It's got a short triangle, SLV.
Yeah, so he's got SLV, GLD, SLV, and then Mikey, 2 dogs and a cat. That's Bush League, LOL. Try 18 dogs, counting the 11 puppies and 3 cats, along with 3 fish tanks. Lady H does love her animals.
Wow, I've got 1 dog, and he's enough for me to handle.
Oh my gosh, Mikey, good luck with all your puppies. Good luck selling all your puppies. They're so cute. I showed it to my friend who has poodles. She loves their coloring. They're super cute. So I don't know. I don't know if they're talking about it or thinking about it, but
we'll see.
Right now he's got a full household with the 11 puppies.
It is fun though. It's got to be fun to have like a full house with all the kids, all the puppies, everything. I like to have a full house. All right, Jenny, we are done for the day. We are going to be live from the SPX pit at the SIBO tomorrow.
Mm-hmm. And then, tomorrow SPX pit, tomorrow last call, Wednesday morning show. So we're here for 3 days. We're here for 3 days, and then we're hitting the high seas.
Yes, we are. 2 separate ships. I thought we were going to run into each other at one point. I was very excited, and we're not.
I know. I was telling everyone. I was like, okay, if Liz's family and our family we're all in S at the same time, let's all meet at Baja Mar.
It would be so fun. All right, but unfortunately, we're going to be 2 ships passing in the night. We are literally going to be ships passing in the night.
I'll like put some kind of message for you on the side of the boat.
All right, everybody, have a wonderful afternoon. Good luck with trading, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
What can I say? Ooh, let me see you move your body, see you shake it, make 'em turn it up and drop. Ooh, let me see you get it started, see you working up a sweat. Good, 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 good. I'm all about it. I'm all about it. I'm all about it. I'm all
up, TC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. Hello. And it is a fantastic little Monday we've got here. Got a couple days before the new year and another short week here in the markets and a lot of inactivity, we'll say. Market hasn't really moved since the open.
Yeah. I mean, not surprised. It's December 29th. It's a couple of days before the end of the year. This is kind of usually how things go. I think the only reason we're down is because we just had so many days in a row that we were up. You can see volatility is barely moving here. This is kind of what you would expect with a couple of days to go before the end of the year.
Yeah. 2.5 point range in SPY today. 42-point range in the E-mini futures. But yeah, to Jamal's point, just not a lot of volume here. We are sitting at 500,000 E-mini contracts. If we look at SPY, 21 million. If we look at the Qs, 16. IBIT, 17. So yeah, these are lower numbers, and we're seeing kind of a muted trading day, at least to start. Speaking of muted, if you're wondering if we color coordinated today, wearing our gray sweatshirts, the answer is technically we did not, but we do have this new show that we're doing every single day. The markets are open, and sometimes you just start to wear the same clothes, say the same things, think the same thing. Yeah,
it just happens.
It's cute.
It just happens. Yeah,
it's cute.
It is. One thing that does have volume, GLD and SLV. Holy cow.
Mm-hmm.
I mean, we're not surprised, right?
No.
Especially after the move the other day. That was like kind of it. And there was just so many different things that showed up over the weekend that kind of gave you the idea that some selling was probably about to take place soon. I mean, this is exactly what we were looking for. This is the exact thing that we were talking about and expecting at some point. Sometimes too far is just too far, man. Like, come on. I mean, at some point, look, I love this type of thing. I'm not shit talking. I'd actually love this type of thing. This is how markets are supposed to work. If silver kept going up all the way to 100, I would be like, something's broken.
Yeah.
Seriously. I think you got to have these pauses and these pullbacks. And the only question that remains is this going to be a multiple day pullback? I was looking at the weekly chart of silver in October when they did that. It was like kind of 2 weeks where it was a little bit stagnant or kind of pulled back. So I think that's the one thing I'm wondering now. I mean, sure, we're going to see some short-term bounces here and there. Hell, we might even see a racist move tomorrow. Who knows? But I think basically what you're seeing here, it's on warning. The great Tony Batista tweeted over the weekend about how they raise margins. It's absolutely true. As soon as they raise margins, something's about to change in a product. So just know that going forward. When you see something doing what they're doing like this, especially futures products, and they raise margins, something's about to change because some people are getting squeezed. Some people are going to automatically have to sell. This is kind of how it goes. But I like seeing this because this is a two-sided market, and this is kind of what you want to see.
Yeah, and I think this speaks to not only the crazy rally we saw in platinum and silver specifically, but also we've said this too. Like when you have these holiday weeks where there's not a lot of activity, if there's one-sided trading happening in this illiquid, lack of activity market, like that, this is when you can see the really big moves. Like platinum down 14% could be a fund forced to sell or shorts coming in a huge way without much counterparty action.
Yeah.
Like this could easily be emphasized, we'll say. Like you could still see huge moves, and it's not surprising to see after a big run up like this a sell off, but this move could be more magnified because we're sitting here on Monday on a holiday week coming out of the Christmas holiday. Just not a lot of activity going on. But if you have these specific pockets of activity where there's one-sided selling or one-sided buying, you can see it really emphasized here. So I think it all plays into, the craziness of somewhat illiquid markets around these holidays when you have these situations that have happened and now they're kind of reversing here. But yeah, this is a huge bar for one day, especially considering it was higher today. Same with silver, higher to open, and now we're selling off more than 10 points. Like that's a crazy range.
I know these are probably the only things to trade this week. I mean, I don't know, because I don't know how much I want to do on a 30-point pullback and SPOOs right here. I mean, again, that you always want to go where the volume is, and right now it's going to be in the metals. It has been. I mean, let's be honest. It's been like that for a while.
Yeah. Question from the YouTube chat. Would you get into silver, gold, or platinum now? I personally wouldn't. I think that we played for this to the downside. Like, I have this silver put diagonal spread, so I'm already in it. The 65.55 long the March, short the Feb, right at the money, basically a scratch. It was taking heat into the continued rally last week, for sure. But yeah, I'm in it already, so I'm not going to add more, but this is what we were playing for ultimately. So I would like to see a continuation here. And given the huge percentage to the precious metals, when you look at all the futures to the downside, there's corn, there's soybeans, wheat, all down like 1%. And then it jumps to gold, silver, platinum, all down over 5%, silver 7%, platinum whopping 14% to the downside. So, I mean, these are tough markets to get into now if you're not already in. But if you are, I would just say stick to defined risk, keep it real small. You're going to see a big front-loaded implied volatility, especially when you look at the silver futures and gold futures, like 29 days out, 67% implied volatility. All the further cycles are at 60. So you're seeing a ton, and look at this, an 11-point implied move for the 30-day cycle relative to an 11-point move in the 60-day cycle. So regardless of your directional assumption, you're going to be able to reduce cost basis pretty aggressively here. And you're seeing that kind of permeate through the ETFs as well, SLV, GLD. So yeah, I think defined risk, keeping it small, that's where I'd go, especially in GLD, where you are actually seeing a little bit of an uptick in implied volatility in GLD. We were looking at this, it was like 20% last week, but now you're seeing 5% moves in this product. Like at some point it has to give, and there has to be an implied volatility increase. And we're seeing it a little bit now in GLD. SLV, much higher implied volatility. We got an IV rank of 88, and now we're looking at 75% implied volatility for Jan, which is the biggest number I've seen in silver in terms of implied volatility.
I think that's definitely the way to go. Like, define risk if you're going to do it. It's always interesting, right? Like how, people are tripping over themselves when I don't know, SLV, since we're looking at SLV is 70, but they're a little scared to jump in at these levels, right? I mean, that's kind of how it goes. I think you just got to be defined risk. And, I would say, the January options are obviously cheaper than if you want to go to February. Normally you want some duration, but I think January is going to get wild, I think, in silver for some reason. I wouldn't be surprised, especially after the year that it's had. I think this Jan options are going to be wild over the next couple of weeks.
Yeah, and you can see that you have over a 10% implied volatility differential if you look at Jan, 18 days out, 75% IV, 8-point move projected. And then you look at Feb, which has more than 3 times the amount of time, and you're looking at an 11-point move with a 63% implied volatility. So lots of cost basis reduction to be had there. I'm happy with the one I've got, long March, short Feb. But yeah, going into Jan with a short option and then inventorying Delta in Feb or March, you're going to be able to reduce cost basis aggressively there and take advantage of that heightened IV. But you still have to be right directionally if you're going that route. But yeah, Ryan is out today, so no official crypto update, but it's good timing because crypto is completely flat today. Down 10 points. I don't know the last time I saw it down such a small number by the time we start the show at 11, but ETH too, just sitting flat here. Not much going on. We've had a somewhat of a decent intraday range here, 150 points in ETH, but sitting flat there. And then Bitcoin, similar story, 4K range, which is pretty big, but still the last 3 trading days have been just absolutely flat. Which is always interesting.
Yeah, it is. I wonder if it's finally kind of just consolidating and maybe going to start to bounce again. It has been it's been a rough end of the year for Bitcoin, honestly. But, it's not ugly. It's just been kind of rough, and it's a little bit different than what we're used to seeing from these asset class. So I think honestly, I think this is probably a good time for them to do this because they can start the year off with a bang, probably.
Yeah, coiling here, as we like to say.
Yeah, exactly.
Looking at the follow page, I did post a trade this morning. So I've got the Celsius. I had a long call that was remaining from a call diagonal spread, and I just closed it. There's 18 days left. Long call was up 27 cents into a small rally today. So I was just like, I just got to remove this risk. There's no reason to hold this. So that was a tiny winner. And then last week, got into the put diagonal spread in SLV, and then SPX threw on that 100-point wide butterfly for $500 to the downside. So just in case we see a continuation to the downside, that SPX butterfly is going to be a decent hedge. It's up 50 cents right now. I've got this iron condor on 6,500, 7,100 shorts. That's working out nicely, up $220. And we're sitting right in the middle of that range. So there's only $110 left. I've made $220. So I'm at 70% profit here. I'll look to close this probably today. And then this one, 2 days left, sitting at 6,800. I can absorb another 100 points to the downside. But the upside's still in play. I mean, we're 50 points out from filling this 5-point wide vertical spread. So I think I'm going to leave this one on. And if worse comes to worse and we sell off towards 6,800, it'll be good for the butterfly hedge. But I can always just roll this put spread out to the next month and just sit there with a 10-point wide spread.
Nice.
So I think only thing to do in this portfolio is to just close this iron condor here. I've made 210, can only make 120. Crazy stuff can happen. And this has $700 of risk. So I've got $700 of risk with only $100 more to make. I think we're looking good for this one. So let's work that. And yeah, the SLV trade again got the downside diagonal 65.55. So I want to see more here. But if we do get another 5 points, if we get another 5 points, this will be a $100 winner, and I'll just take it off.
All I really did late last week was remember the butterfly, the call butterfly, 69.50, 7K, 70.50. I was like, man. I mean, I bought this thing for $400. Shout out to the chat, by the way. And I was up 600. And I was like, I got to close this thing. I mean, I just envisioned a day like today, and it was just going to zap all the energy out of it, which sure enough, it would have. So glad I closed that. So I closed that last week. And then SLV, the only thing I ever did was buy a put. I couldn't really remember. I was like undecided. I decided to just buy a put, the 65 strike. After the big move on last Friday, I was like, I'm going to roll this thing. So I put more delta on it. So I have the 75 put. So that's currently the position, pretty in the money. I don't know what I'm going to do yet. It's funny that somebody asked today, would you get long silver here? Well, for me, it's a really good question, considering I have this long put. I might find some type of long delta trade to do with it down here. Considering that it's Feb, I'm not in a rush because, again, last time I looked, I mean, usually these things, they go for like a week and change. So I don't know. I'm trying to decide. We'll see. I mean, I know full well that if I don't do anything, this is probably going to bounce back tomorrow. Whatever. Again, I got Feb put. I think we're about to see a lot more volatile metals. So I feel like I have a little bit of time on my side here to decide what I want to do.
Yeah, and I think regardless of whether you're playing for a continuation or a reversal in the other direction, like for me, I think this move in platinum is so big that this screams like something's going on with some fund. 13% move.
Enormous.
On not much news, we'll say. Like there's nothing that's seismically shifting. Like when you look at copper, this was different. This move to the downside was because of a difference in how it would be used and like the taxation of it. So that like this is a sort of a different story. This is like rocket ship straight up from 1,500 to 2,500 and then tries to go higher and then just like liquidation to the downside. So like, what is that? I think we'll get more info on that as time passes. But for me, I think platinum's a scarier endeavor to dive into, but silver a little less so with the, 7% is still a huge move. Don't get me wrong. But regardless, silver, you have SLV, you can go with options there. GLD, you can go with GLD there for options, and I would just say stick to defined risk. Like you can reduce basis so aggressively with this Jan cycle. I would just go short Jan or somewhere around here, and then long Feb, long March if you're doing a diagonal or calendar spread. I think that makes the most sense.
All of the conspiracy theorists, we're all on Twitter this weekend talking about, China is limiting silver and all I mean, all of the theories you can imagine were coming out. I don't know what's true. I'm not really sure, but it's so interesting how these things come out at these levels. They didn't come out when it was trading, 60 and 65 and 70, but all of a sudden, once it's like almost $80, all of those things come out. You just knew it was going to turn around at some point. So I think it's going to make for an interesting trade over the next couple of weeks. I don't know if I'm at a point where I'm selling vol in these yet, honestly. I just think they're going to move around a little bit too much.
Yeah. And still like GLD, we're seeing big moves, but 27% IV is not that much. Mm-hmm. Like that's why I think you have to go defined risk, pair it with the long option. Like even this, a downside 400, 385 diagonal spread is only $10, and you're reducing the basis on the long option by $350 for 18 days. That's a big number. Like it's rare that you see that much premium priced into such a near-term cycle in something like GLD. SLV, on the other hand, SLV, 75% IV. Now we're getting to a world where like the implied volatility is pretty high in silver, and that's reflected in the IV rank, of course. But at least with silver, it's a $65 product instead of a $400 product. So if you really wanted to sell premium in silver, like now it's actually looking pretty good.
I know. Actually, I'm looking right now as I say that. I'm like, you know what? I actually could sell some vol right now because this put has gone in my direction. I might actually do that. It actually might really make sense in Jan for me to do that.
And because Jan 18 days out, just a classic 60, 75 strangle. I just pulled up strikes that are just like out of the money, near the expected move. $700 in buying power, $300 in premium. And if silver just chops for a day or two, like you could see this premium get cut in half easily. But this doesn't come without risk. Like you're seeing these moves today, like 5-point move in either direction is still a very big move. So still not for the faint of heart, but we haven't seen this sort of premium priced into such a near-term cycle in quite some time. But again, I'm in it already to the downside. So I'm just going to leave it at that. But I think if you're looking to sell premium, I think SLV is where I would go. But I still like the idea of defined risk just because you're seeing such a huge implied move in January relative to February and March. Like the fact you're seeing an 8-point move in an 18-day cycle and a 13-point move in an 80-day cycle, that's pretty crazy.
Yeah, it really is. Yeah, I think I'm going to sell a strangle in here. Working it now. Yeah.
Jan one?
Mm-hmm.
Yeah.
Yeah.
Yeah, it's like a pure IV play, honestly.
Yeah, it is.
18 days is not that long of time, and especially with this week being a shortened week, if silver chops around and settles down a little bit, you could see that IV get crushed for sure. And you're seeing a 10% increase over the last 5 days in implied volatility. So all things are looking pretty juicy there. If you want to join us on the YouTube channel, we're streaming live there. We're answering questions there. Just head over to tastylive. You'll see this video streaming front and center. I've got the Refer a Friend program pinned to the top of the YouTube chat. Another easy talking point if you're seeing family members or friends for New Year's Eve. But if you have a friend open an account with your referral code, you both get $100 if they meet the qualifications, $2,000 initial deposit. But check it out, tastytrade.com/referral. That's pinned at the top of the chat. Let's see, what else we got? Would you do a target calendar spread? 103, 105, 1853.
We talking about target?
The bullseye. Trying to claw back.
Yeah, it's been trying for a while. Jeez. I mean, no.
103, 105.
Target.
I mean, it's small. It's small enough to where it's. If you are.
Wait, what are they doing?
103, 105.
Oh, 103.
I think you got to go. I think you're going 105.
I mean,
The
look,
103 doesn't work.
It's not like a question of whether the trade is good. That's actually not even the question. Honestly, I have a hard time believing Target's going to bounce back. That's really what we're asking here. But yeah, the trade is a good trade, I would say. I mean, it's worthwhile doing.
That's fine. I think if you're trying to play for an upside bounce, you're collecting a good amount of premium, selling the 105 for 90 cents against your 250 cost for the Feb 105. And it's $1.50, but you have to temper expectations here. Like if you do get that move to 105, you're looking at like a 75-cent winner. Nothing crazy. Right. I mean, against the debit paid, it's a great win, 50% of the debit paid, but that's kind of what you're looking for. If you want more, I think you got to diagonalize it and go like the 100 call in Feb and sell the 105 in Jan for $3. Now you've got a $200 max profit if you get a similar move. So obviously twice as risky in terms of debit paid, but that's the adjustment I would make if you are trying to place a bullish trade in Target. It just depends on what your risk tolerance is. Brian, hope you had a good Christmas as well. Year-long SPY trade doing well so far. Yeah, it's almost up 50%. Which is interesting. I looked today just to see like what kind of adjustments could I make if I made an adjustment. I'm going to hold on to this a little bit longer just because we're right in the middle of the range. Still not testing the upside, especially with this downside move today. And 50% is closer to $230. So another 50 cents, and then I'll look at managing it. But I did pull this up. I was looking at buying the 32-day back and rolling to the end of month, Feb 27, 60-day cycle, and just shifting it up slightly on the upside. So going to a similar 6,600 or 6,700 put, but going to the 7,200 as opposed to the 71, and just shifting it slightly more bullish into this little sell-off here. And you can pick up another almost $300 with that adjustment. If you roll to the same exact strikes, and you just go 6,600, 7,100, you're picking up 350, but you're leaning a little short in that situation, which again is not something I want to do in this market. Just long term, I think we'll be up and to the right into next year as well, until something changes with implied volatility or the landscape of the markets. But I don't need to make this move just yet. I think if we get to 50% or past 50%, this week or next week, I think that's when I'll make the adjustment, go into a low 50-day cycle in Feb. And I'll probably do this, just move it up 100 points on each side and still pick up a nice credit.
Market's ticking a little lower here.
Yeah.
What are they trying to do on a quiet day? Interesting.
Trying to scare us.
Yeah, trying to scare the children.
Yep. Crude. Nice move here.
Yeah.
So I have this long call contract with a call ratio on top of it.
You got the same.
Yep, you got the same thing. I think you're slightly higher, right?
Slightly higher.
So yeah, this was just a hedge. We were taking some heat on the long contract, rolled it out to the new contract, which is why the P&L open reset. But really, my basis is at 57. This will be a $200 net winner if we stay above 57 over the next couple of weeks. So looking good there, and I was looking at closing this potentially, but then I looked at the extrinsic value remaining. There's still $150 to get out of this position with the 57 shorts holding on to a lot of value. So this position, I will just let go, and we'll see if we stay above 57 over the next week or so. But once this dwindles down to like 50 cents or something like that, then I'll close it. SanDisk, short iron condor, 18 days.
SanDisk.
SanDisk Corp. The old floppy disks. Short iron condor, 18 days.
These markets are a little wide.
Yeah.
$1 and change. Good
That's
Lord.
tough.
These options trade by appointment.
Yeah, this is tough just because, to Jamal's point, like this standard iron condor that you would expect to be a little more liquid is not. And even if we go to the highest open interest strikes, 280, 290, or the 270, 280, if you're just going by the numbers here, and then the 200, 190, or the 210, 200, like regardless of how you slice it, you're still looking at a $400 bid-ask spread.
Mm-hmm.
So I think it's tough. I think the one caveat is it's 18 days. So if you get in, you're likely holding this. I was just filled on that SPX Iron Condor. So I'll post that to the follow page, closing that position for like 70% profit. But yeah, this one, bid-ask spread's a little wide. You're going to have to hold this closer to expiration to where these become like zero bid to get rid of the issue with the bid-ask spread. But yeah, I think that I'm out on this one for that reason.
Yeah, you'll get eaten up on the way in and probably on the way out too, actually, bid-ask wise.
Yeah. Silver's been in a deficit for 5 years. Huge Chinese ETF buying, 60% above net asset value recently. We'll see.
Sure.
I mean, like silver is moving, gold's moving, but the platinum move is most interesting to me in terms of like what happened here, especially because we opened higher. Like we opened at 25.45, which was higher than the previous close on Friday. And we have dropped 400 points. So something must have happened.
Yeah. Something else, man. Big moves. Big moves.
Smack Lovin', AEM, Iron Condor.
God, I haven't looked at this name forever. I mean, the names that I'm like hearing about again with this gold and silver thing, AEM, I remember this name from so long ago. AGQ is like a 2x silver thing. That's going nuts today, of course. Like I totally forgot about AGQ. I forgot it existed. We used to trade it so heavy. It's untradeable now, honestly. But anyway, AEM.
Yeah, AEM.
Iron Condor, they said? Butterfly? What?
Iron Condor. Short the Feb 155-200 strikes and get 10-point wide wings. Feb is in the earnings cycle, it looks like. It looks like it's pretty undecided where it is actually. But they're pricing it in to be in this Feb 6th, Feb 20th range with a little bit of a IV spike. 42% is a jump up from the 40s you see prior. So I would expect earnings to be around here, which isn't something I love to do with Iron Condors because you're just holding risk without the decay until you actually get that announcement. But the 155, 200, 10 points wide. This is going to be another liquidity issue. The 200, 210, you can see the 210 is $1 wide. The 200 is 40 cents wide. And then the 145 is a little bit illiquid too, 50 cents wide and then 50 cents wide. So with all of those combined, you have a $2 wide bid-ask spread and another situation where you're going to be at the mercy of the slippage here, getting in and out. So I think this one's another pass for me just because I don't like putting Iron Condors on in earning cycles because, again, you're just holding risk without a lot of profit potential until the announcement happens. But the bid-ask spread issue here is a real thing.
The earning cycle is an issue for sure, and the idea of like how much these things are moving right now. I mean, it is a gold name. It's probably going to move a whole lot over the next month and change. It's going to drive you nuts.
Yeah. I think, honestly, if you want to do an Iron Condor in a gold product, just go to GLD.
Yeah.
And just do it there. Like, because at least in that product, you have very liquid markets.
Yep.
And you don't have the earnings issue, even if you go to Feb. Yep. And you can get the same exposure. Like, you can do a 370, 360, 420, 430, or like whatever you want to do. Like, you can get in and have a nice narrow bid-ask spread much more narrow than the previous products we looked at least.
Yeah, I mean, I'm looking at a Feb one right now. I just randomly throwing it together, 430, 440. I just did 369, 359, and yeah, I mean, it's better. Honestly, you just have a better. I mean, again, it's gonna move. So is AEM. So, like Mikey said, this is way more liquid than AEM is. GLD is.
Yeah, I think it's just it's an easier in and out at the very least. Any thoughts on TTD? It's been absolutely decimated in the past year, but seems to have found some support.
As a dog.
Good for a short put. The trade desk. Oh, man. These are tough.
It's a dog.
Yeah.
I think it's a dog.
Yeah, these chart like there's plenty of charts that look like this year where it's like a much higher price. This was trading at 125 in the beginning of this year. Huge gap down, continuation, then a reversal gap, then a lower trend. Then you get a little euphoric, maybe things are changing, and then a massive gap down again. And it's been lower lows since that point. So if you want to take the risk, fine. But I don't love when you there's like no positivity in this chart. You know? What was another one that looked like that? Like Lulu? Lulu's trying to come back, but like still gap down, gap down, gap down. Chipotle, I think was another one. Yeah. They're trying. It's just tough. I mean, you got to be willing to hold through the pain if this continues lower.
Pretty much. Yeah, this is kind of a dog. I don't know. Yeah, Deckers also looks the same way. I bring up Deckers, man, because I'm telling you, for whatever reason, during this Christmas holiday season, that UGG store was like the line for whatever reason. And we went to the movies on Christmas Day. Saw Marty Supreme, by the way. Great movie. You got to check it out.
Oh, I gotta
It's
see
a great movie. It's a great movie. And everybody was there in their pajamas and whatnot and like their UGG shoes. I don't know if Deckers has the turnaround story, but man, something. I tell you. Everybody's wearing Uggs these days, it feels like, or Ugg-like products.
Yeah. Ugg adjacent.
Yeah, Ugg adjacent.
Let's see. For the MES year-long trade, will you always use the end-of-month expiry? No. But yeah, I think in terms of liquidity, the end of month for MES specifically, I think you'll have much more liquidity there. I will likely try and avoid these weekly cycles. If you stick with the end of month and the quarterlies, that's just from a general perspective, they're going to act more like regular monthly cycles versus these weeklies that have a lot less activity. So I might not always stick with them, but generally speaking, I want to go to the most liquid cycles, and those are going to be the most liquid cycles. Can a broke wing butterfly on both sides represent a synthetic bat wing? Yes. Yeah, bat wing is, from an undefined risk perspective, is just a ratio spread on both sides. So a broken wing butterfly is nothing more than a ratio spread with defined risk wings that are further out of the money. So yeah, as long as you're routing it for a credit, both of them for a credit, then you have that middle ground where you can still keep the credit if it's a neutral move. So that's all I would be making sure we're doing there is keeping it a high probability trade by routing it for a small credit. Short put in Netflix.
At your own peril. That's of course. I mean, it's not a bad trade. I mean, obviously, I assume they're looking at earnings cycle, right? I mean, it's the only thing. But I still have in the money at this point, damn near short puts. I have the. What did we decide we're calling that thing? The bullish. Whatever. Delta, not the Delta Buster. What are we calling it?
Super Bowl?
Super Bowl, that's it, yes. I still have a Super Bowl on Netflix. So, I mean, I'm essentially already selling a short put. Of course, it's risk defined, but I don't know. This is I mean, first of all, I think it's a good trade. Despite everything I'm going to say, I think it's a good trade. But there's a lot going on here, and I don't know when it's going to lift off. is the issue.
I think I figured out why Netflix sold off.
Why?
It's because the Christmas Day NFL games were supposed to be an amazing slate, and only one team made the playoffs from all of those games played. So I think I figured it out.
Probably why. Yeah, you're right.
But yeah, $93. So it's much. We have a lot more we can do here because of the post split price. So I think a short put. If you go to Feb, just keep in mind you have earnings coming up and you're going to be in the earnings cycle. But if it's just a short put, you can still, of course, make money on the delta move. You don't need the volatility crush from earnings that are January 20th after the close. But yeah, to Jamal's point, I think if you wanted to, you could do like a short put spread. So like 90-80, just as an example. And then you shift your profit potential to the upside with a call spread by going with like a 95-100 call spread here. So this is what this would look like if we isolate it. Expiration. There you go. So this is a possibility for sure. If you just sell the put, you can still make a good amount of money. But if you want to stick to find risk, this I think makes sense too. Selling the put to finance the call spread, you can make more than just the short put, which is trading for 350. You can make 560 if you get a move to the upside. And yeah, if you're going to play with a short put for earnings, you can do that once the earnings come. I think with that kind of strategy, I might go to the near term cycle once it comes around. So like the Jan 23, you can sell the weekly for a ton of premium relative to time. And then if you get tested to the downside, you still get to keep that premium, and then you can roll into Feb or March and pick up more. So that's kind of how I would approach that if the premium stays bid there.
That's all I'm going to say about that.
That's all I'm going to say about that. Palantir.
Old Palantir.
The old Palantir. March 195 long call, Feb 210 short.
Diag.
Okay. 15 points wide for $8. Love that. And yeah, if we go like Theo here, if we just look at without changing implied volatility, you can see even if you get a move over the next couple days to 210, you can make $350. If we push this out in time, you're going to be able to make a lot more, of course. This is the middle of January. If you get the same move, no change in implied volatility, you're looking at $500-ish if you get a move to 210. So I like the low cost nature of the upside trade for sure. And you're able to reduce basis pretty well here. Selling the 210 for $7, buying the 195 for 15. And you do have earnings priced into the Feb cycle. So you'll see this premium stay bid in the short Feb option, but because you're paying $8 for a 15-point wide spread, it doesn't matter. If you get the rally, you'll still make a ton of money. You can close it.
Can we just point out the fact that this stock started at $75 this year? It's a trip, right? I mean, huge moves for a while there. And then honestly, over the last several weeks, it's been kind of quiet. Like, I shouldn't say quiet, but just not the same animal that it was early in the year. It's kind of wild.
Yeah.
$75 this year to $185. That's a hell of a year.
It's been wild. There's been seismic shifts in some of these stocks.
Yeah.
Like, I don't think we traded Palantir previously, like from like last year or before that.
Yeah, I remember
as aggressively.
I remember when it was like $40-something, sometime maybe the year before, and I started looking at it, but I was like, I don't know. And then it got to $7. I was like, it kind of got interesting, and that's when I do remember starting to trade it like earlier this year. But it's just wild. I mean, man, it just seems like it's had 3 different types of trading cycles within a year's time. I mean, it's crazy.
Yeah, it's insane. And then you have the opposite side of the coin where you have these products that were at 200 and now they're at 50. So it's been wild. It's been a wild year. Question about vol expanding into earnings. So I think it's important to not get this twisted with premium expanding. Vol, the implied volatility reading is based on how much premium is left in the option relative to time. So you're always going to have a situation where, like, if you look at gold, silver, platinum, those are good examples now, where like this thing is moving so much and there's so much premium still in these 0-day, 2-day, 4-day, 7-day cycles that there's a higher implied volatility reading, 34%, 33%, 30%, and then it trickles down to the 20s. But 34% IV doesn't mean that it has more premium than the 2-day cycle. It has way less premium than the 2-day cycle when you look at the expected move. So to put that into context for earnings, what you will see is if I sold this 85 put now for earnings at the end of January, if we come back to this put price and Netflix is sitting right here at 93, this $2 in premium is still going to decay. It'll go down to, like, let's say $1.50 or $1.40 or $1.30, but because there's less time relative to the premium that still exists, you will see a higher implied volatility reading. But this is still going to decay. This option decays regardless, but it just doesn't decay as much as if earnings was not priced into this cycle. So what that creates is a situation where you're taking undefined risk, but you're not getting paid as much as if there was no earnings cycle because you have to wait for the earnings to be announced. So that's why I always say, like, I don't like selling strangles in an earnings cycle with plenty of time left, because yes, it will still decay a little bit, but I'm holding a ton of risk for a lot less profit potential. So I'd rather wait until earnings or after earnings. But yeah, if you want to sell a put pre-earnings, like, you're getting more premium to sell it now, and you will still make money if Netflix rallies. Because if you look at these options down here, these options are way less valuable than this 85. But if Netflix doesn't move, you're just holding risk for not a lot of theta decay, because the implied volatility is going to stay bid until the announcement happens.
Mm-hmm.
So yeah, if you saw the put the day before earnings, that's how you can isolate getting that implied volatility crush from the announcement and not take risk until that happens. Roblox. The old Roblox.
Ye old Roblox. Wow, this stock has had a reckoning again. I didn't realize that. I think it started after earnings.
I think right up here, this peak at 150 was when all the kids were siphoning parents' credit cards to buy the Roblox bucks.
Yeah.
One of my younger brother, he actually stole my stepmom's credit card.
Really?
She marked it as fraud, and then finally realized, like, oh, he's just hammering the Roblox bucks.
Oh my God, that's funny.
It's ridiculous.
Yeah, our youngest plays it quite a bit. He doesn't ask us for as much money as he used to, though. I don't know what it is. I don't know. I mean, he gets some every now and then. We give him some, but yeah, it's this game, dude. You can do everything in this game. I mean, it's kind of crazy. The kids love it.
Yeah. The jump puzzles and, like, the slide puzzles, those are fun. But yeah, 80-90 Feb March diagonal on Roblox. Long March 80, short Feb 90. Yeah, I don't mind it. It's another exact same scenario where, like, you're collecting the premium that's baked into the earnings cycle in Feb, but you can still make money on a rally because you're paying $5 for a 10-point wide diagonal spread. So yeah, I think it's fine. If you're directional without neutral risk on both sides or neutral premium on both sides, like in a strangle, you offset this whole thing we've been talking about with earnings coming up, because you can make money directionally. So yeah, I think it's a cheap way to get delta in here.
Sure is. Roblox.
Any trade in NVIDIA?
It's crazy. I haven't traded NVIDIA in a while now.
I know.
I mean, this was definitely used to be one of my heavier traded names. I just haven't It's been a lot of sideways action in these type of names. That the Nvidias, the Palanters of the world, the Metas, they've kind of just dead.
Yeah. 7 IV rank. So implied volatility is low. 40% in Feb, 38% in Jan. I think I can get into something like this. I'll go with a longer term diagonal spread. So long March, short Feb, I think is what I'll end up doing if it makes sense from a cost perspective, but let's see. Yeah. We could do a 10-point wide, 190, 200 for $8. Or if you want to be more bullish from a delta perspective, you could do like a 200, 210 for $7, but you're slightly out of the money. I think I would rather just have the 10 points, 10 points of a lower requirement for NVIDIA to move to go in the money. So I think I'm just going to go with the 190, 200. We'll play for an upside move into the beginning of next year. 865 can still reduce basis, especially if they open up weekly cycles and the earnings are somewhere in this range. Because it looks like they're not really pricing in earnings in the Feb cycle. They are pricing it in the March cycle. So this might actually decay before a weekly is opened up with NVIDIA earnings, but I'm not sure when the last one was.
Yeah, I think it's usually like late in the month. So I'm thinking it's like late Feb, like maybe I guess later than expiration. Yeah, like the 22nd or something. Who knows?
Let's see. Yeah, February 25th is when it's estimated. So that would be after this cycle closes. So I like this even more because I can roll into the earning cycle and pick up a lot more premium and reduce basis if it's not working out. So yeah, we'll get into it. Instantly filled. Oh God. That's really the worst. Maybe it'll be beneficial. Who knows?
We should have the research team do something on instant fills.
Yeah.
Success
You are
rate on
instantly
instant
filled.
fills.
You will lose 100% of the time. All right, so I got filled at 868. Bought the 190 March, sold the 200 Fab. We're in. This is me saving the market. Just bought a March VIX call for $1.
VIX call.
Yeah, so you're way up here.
Yeah, you gotta be way
35.
Jeez.
But yeah, I mean that's kind of how I would play it. If you're looking for a pop, you just need it to be a big pop. But yeah, I would temper expectations. Like you bought it for $1. If you get a move to $1.50 or $2, like that's a good move. It's a good pop, especially if you consider like when this option was as high as 220. That was November 20th. So where is November 20th in the E-minis? Right here. So that was the day where we opened at 67.58, and then we sold off to a low of 6,600, closed at 6,615. So we had a 150-point sell-off on that day, and you would have doubled your money. So just a nice way to look at it. Like you can and I just got there by right-clicking on the strike. Assuming you bought the 35, you can do whatever. Just right-click on it. You can view the option in the chart and see how high it's gone in terms of value. The highest was October 29th for this option specifically, and that correlated with where? Interesting.
What's up?
The 29th was just like a little bit of sell-off. I'm not sure what may have happened there, but either way. Yeah. The most recent one, you doubled your money if you get a 100-point sell-off. So here's to hoping.
Yeah, there's nothing wrong with hope.
Yeah. Question about futures. If I'm holding a long position, when should I be looking to roll? And is there physical delivery risk?
Oh, the one. I've never traded those. I really don't know much about that one, actually. That's a newer future, I feel like. I don't know. Do you know? I mean...
No, I doubt
that
this is
ounce gold
physical.
I doubt it, too.
Because the micros are all cash settled. So, 1 ounce gold futures. Let's take a look. I'll post a link in the chat to the CME page for it, and you can get all the information there. But I doubt it's physically settled. It's probably cash settled.
Yeah, and I'm going to yell at you for a second. You got to know these things before you get into the trade.
Yeah.
You should know.
Tisk.
But that's what we're here for, so it's fine.
Yeah, cash settled, financially settled.
Yep, financially settled. There you go.
Trading terminates on the third last business day of the month prior to the contract month. So
they will not be shipping you 1 ounce gold pieces.
So this is a Feb contract. So Jan is when this will fall off. But you could also look at like the G6. So what is the G6?
I like a G6. Like a G6. It's like you did it to me on purpose. You knew I was going to do that.
Like a G6. What's the other one? There's the 4. Like I know my pilots. It might be the same song.
It might be.
Something I thought it was something G4.
I can't think of it.
Know my pilots by name, like something at G. I don't know. Either way, if you're questioning like the 1 ounce G6, you can go to the gold G6 and see the options. So the options go all the way through. Like we just said, it's going to expire at the end of January. So the G6 here, options go to January 27th before they turn into the actual contract itself, and then the contract expires a few days later. So basically, for your 1 ounce gold, you have to roll it before the end of January into the next cycle. But it's cash settled regardless, so you're not on the hook for anything. Do any brokers allow physical delivery? You can get physical delivery. It's just more of a headache than not. Like brokers don't want you to get delivery.
No.
So more often than not, they'll block it. But if you really, really, really want delivery, you can make it happen. Last question here. Looking for anything with IV and C Johnson & Johnson with a 31 IVR and earnings coming out is something to play there. 30 IV rank doesn't really mean much to me. I mean, 20% IV when you look at the raw premium that's offered is very low. So 7-point move on a $200 stock is very low for earnings. But I think for this one, it's going to be the same story. Like I'm going to go defined risk. If I'm trading it, I'm going to be long Feb or long March, and I'm going to sell the weekly against it to reduce basis with a diagonal spread or calendar spread. Like I'm not selling an iron condor here or anything like that. Like 20% IV is so low. It's the lowest of the low for an equity, and anything can happen with equities. So that's it.
That's it.
I think we're out of time. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. We have plenty more content coming your way on the YouTube channel as well as tastylive.com. Check out tastytrade.com/referral. If your friend opens an account, you both get $100. So check out that landing page on pinned to the top of the YouTube chat. But yeah, Jamal and I are hosting the morning show tomorrow. So we'll be in bright and early, 7 a.m. if you want to join us there. But yeah. Stay tuned the rest of the day, and we will see you tomorrow morning, 7 a.m. Peace.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. I suppose I'm welcoming myself back as much as anybody else. I missed you all last week in my absence, home to see the family in Texas. It was a great week and some wonderful 80-degree weather, and I have been greeted by a snowy Chicago morning this morning. I'm joined as always by my wonderful co-host Errol. Errol, how you feeling? What's going on?
Doing pretty well today, brother. We got a little bit of snow this morning too, so a little bit of a change in pace. Not 80 degrees. I did check the weather this weekend. It was like 50-something degrees. So waking up this morning, seeing the snow on the ground was a little bit of a surprise, right?
Yeah, no, it was a pretty moderate weekend while I was away, obviously, and then got back and I was scrolling through the Weather Channel app yesterday, and there is just I couldn't find a day above freezing for the entire foreseeable future. So cold in Chicago, but it's hot in this studio, and we got all kinds of interesting action in the market. I'm becoming convinced that it's when I look at the market that it goes down. You know, I leave for a week and we ripped new all-time highs right away, and then I come back and suddenly we're trading down again.
You're doing something to these metals, man, because when you were gone, you got to be doing something. I don't know if you're taking all the supply, not even if that it moves off, whatever it is, but I mean, I'm lost for words with these metals, Gus. So I don't know what you've been doing on the back end, but I assume we're going to get into a little bit of that today.
Yeah, of course. Yeah, I came in and asked you this morning. I was like, "Whoa, is there any? Do we still not know what's causing this?" And the answer is no. There really doesn't seem to be a super concrete reason for it. Silver just ripping, and is it platinum or titanium? That's the other one that's actually
platinum.
Platinum. Platinum
one.
is outpacing silver as well, and then gold obviously. Well, yeah, it's funny. I mean, months ago, I took a silver short thinking that it was going to take a sentiment move with a gold drawdown. But it turns out silver is actually the driver, and gold is what's riding along with the sentiment.
That was very interesting to find out, too. It is seeming that silver is being the leader of the pack right now. So, I mean, that later squeeze that we had saw a couple weeks ago in silver, and then we saw gold shortly after follow along. I mean, good Lord, it must be a lot of shorts getting. I mean, I don't know, but speechless. It's hard to even fathom what's going on right now. But I think one thing we can draw a conclusion to is like, this is odd and this isn't normal. So I guess we'll keep our eyes on it.
Yeah, absolutely. But what's been catching your eye? I haven't put anything new on. Obviously, I've been away.
No, I mean, we can jump to the Tasty platform. We touched a little bit of the metals. We touched a little bit of NASDAQ. We have Netflix on. We have SPY. Have you heard of any news related to that merger, or that acquisition with Warner Bros. And Netflix? Any other news coming out about that?
No, I mean, Warner Bros., the board has backed the Netflix deal, but the shareholders still have to vote, and that hasn't happened yet. But on Polymarket, Paramount actually is creeping back up to potentially land that.
Okay, maybe we should, I'm curious to touch on Polymarket a little bit more often, too, just to get a feel of what the overall sentiment is of these things, too. But got a little bit of the Netflix position in there to kind of just break even, not too much, $5 wide spread, some SPY, and then gold and NASDAQ. We shorted a little bit of gold, wasn't comfortable touching silver last night. When the market opened up, we gapped up, ripped up even higher. And then we sold off a little bit. Then we kind of had like a dead cat bounce. And then we're kind of in this situation like, okay, gold and silver kind of put in a little bit of a crack. And then we started to bounce. And it's like, is this going to rip me back to all-time highs again? I'm not sure. So decided to go with gold since that one was a little bit less volatile and the product is a little bit smaller, so it's a little bit easier to control the risk. So I sat with this one overnight a little bit. I think I woke up a little bit earlier this morning and I took it off. I was like, put the stops in and stuff, but I was like, oh, I wonder what, that position was doing. So we ended up taking it off, and then market ended up selling off even more this morning, but that's all the action so far. It took a stab at gold. It worked out. Didn't want to touch silver. Kind of just sitting on the sidelines now, trying to figure out what's going on.
Yeah, I'm interested to see if this is actually a legitimate move down in these metals, or if it's just another one of these little gap downs before even higher highs, which is so crazy to say, but I don't know. I don't have any reason to believe we couldn't make higher highs.
Right. Excuse me.
No, you're good. You're good.
No, I mean, with that being said, that's been pretty much catching my eye. We can take a quick look at this watch list and see what, premium is kind of pumping in the market right now. We're getting-ish that rally that we were looking for. Shout out to you for kind of giving me the heads up on getting on some long delta in SPY. That's been working out really well. Also feel a little bit more comfortable in that position because it's hedging some of the short delta that I typically have on in the portfolio too. So I was happy you made that comment so I can get that on in there. And that's working out pretty well so far. Going to be a little bit more patient with that. 32 days left till expiration. But we got a few days left to the new year. So we'll see if we get a rally in the indices, but it's looking like that Santa rally was in the metals, no doubt, this year, right?
Yes, absolutely. And I mean, Santa rally came through in full swing, really across the board. I mean, whole market pumped. I mean, new all-time highs. What better gift could we ask for from Santa than new all-time high?
And I mean, with that being said, let's take a quick look at ES. How far did ES Oh, just shy of 7,000. We didn't touch 7,000. Just about 8 points shy of 7,000. I was like, I wonder if we touched 7,000. We didn't. But anyways, we're getting up there. So we'll see what happens here.
Every time we make new all-time highs, I think we're just going to rip straight to 7,000. But it appears to be something of a psychological resistance going on here at the top.
Yeah. I'm kind of shook that we did make it to 7,000, if I'm being completely honest. Again, that's why it was difficult to get on that long delta in the spread. But it's kind of crazy how quick it happened.
Yeah, I was actually pretty unplugged all week last week, just hanging out with the family and enjoying that time. So, is there anything big that I missed?
Anything big?
Anybody declare bankruptcy or?
Chad, let me know what
CEOs, anything?
Let us know what has really stood out to you guys. Any CEOs, yeah. But I think for the most part, the story's really been the metals. I think it's kind of been the same case and just blowing people's mind day after day, day after day. I know another thing is the margin requirements for the silver products. That's a conversation that has been very common, especially amongst social media and a lot of the brokerages and other firms, just talking about these margin requirements for these products too, because things are getting volatile. It was looking like silver and these metals were kind of putting into a parabolic type move, if you will, whenever things get a little bit, that curve gets a little steep relative to where the price has been. So I'd say just the metals. The metal story has continued into today, and I feel like the metal story is kind of continuing into today, and maybe that's going to be the main story heading into the end of the year.
Good question from Steven in chat.
Yeah.
I will kick it over to you as you're the futures man here. But submitted my application today. I'll be ready to start trading futures options next year. Do you have a recommended short list to get started?
Yeah, I mean, the solid. What do you prefer? Do you prefer the S&P 500 or do you prefer NASDAQ?
I prefer
those two for sure.
I generally prefer the S&P 500.
S&P 500?
That's due to my trading style. I just feel like the moves are a little smoother in the S&P.
Yeah.
So I because I'm like a swing trader, I'm usually like 1 week time frame at the very minimum. I'm looking to hold things. The S&P is just more conducive to that for me.
100%. So I mean, /MES, like you said, Stefan. I know Gus likes that one too. /MNQ as well. Two highly correlated products.
Is there really anything outside of MNQ that you like? Is kind of what this question becomes.
I would say maybe just silver and gold. Silver is interesting to watch, kind of like how you'll watch NASDAQ and ES side by side, kind of watch gold and silver side by side. They're not exactly correlated, but they have a pretty high correlation. The products that's going to be interesting to me to check out into the new year is going to be the products like platinum. It's not as aggressive like silver. I don't think I'm going to be touching silver for a while because I was trading the micros and I think like, goodness gracious, I forget. I need to figure out what the exact numbers are. I tweeted it the other day, but silver is no joke. So that volatility is gonna feel super aggressive. But I would say platinum and the crypto futures are gonna be fun to kind of dive into the new year. So I'd say the metals, MNQ, MES, and then some that I'm gonna be keeping an eye on is those crypto futures. I think it'll be fun.
Yeah, absolutely. Yeah, I think those are great answers.
Yeah.
Crypto futures are gonna be a cool vehicle. I'm excited to get access to those. I mean, more products is always good.
100%. No, with that being said, we can jump into the tastytrade platform. We did a little bit today, got stopped out a little bit, but we did get a couple decent opportunities. Oh, I'm sorry, TradingView. What did I say?
You said tastytrade.
Yeah, if we could hop over to the TradingView platform, the tastyview platform. But we're looking at silver right here. This is where we kind of saw that first crack in silver last night whenever the futures market opened up. This is where we got that little bit of a dead cat bounce. And at this moment, you're thinking, are we going to rip our faces off to another all-time highs? Or do we have the potential to actually reverse for a little bit? So whenever we've seen that in silver, that kind of gave a little bit more confidence to take the short over here in gold. So whenever we got that dead cat bounce, you can see right here, we decided to take it on gold rather than silver because it's a smaller product. Woke up this morning, we took it off here. I guess that was about 6 a.m. We took it off about 6 a.m. Market opens up and we dump, even further to the downside. And this is one I didn't really want to overstay the welcome just because silver is so volatile. Whenever we get stuck in those parabolic type moves, everybody and their mom is trying to pick off the top. And I mean, I used to try and do that type of stuff in the past all the time. So I was like, you know what? Instead of doing that, let's just be a little bit more patient, wait for some type of crack and find a way where we can kind of define our risk instead of just picking off the top because it's so easy to get skipped another 50, 100 points in in the blink of an eye when this thing's parabolicing, right?
Recently, yes.
Yeah, no joke. But with that being said, this was the position we took on gold. We'll see. Maybe this is it. I don't know. Maybe we start to cool off a little. Maybe we start to consolidate. I don't know. But that intense rally is pausing for a little bit, for the time being at least. Check out some NASDAQ.
I don't have anything, any major groundbreakers in my portfolio here. Still waiting on a firm to die. I got this stupid lotto on flowers.com from Wall Street Bets.
Yeah.
That's at zero. It cost $20, so whatever. But yeah, nothing really jumping off the page at me. I was fortunate. I was basically just the whole week just opening up my portfolio at like 240 every day and like making sure there was nothing catastrophic that I needed to manage right away. There never was.
I mean, I would. Really not much has happened, to be honest. Like, even in the overall market, the only thing I could think of really is the metals. Like, I think everybody's really, like, a lot of these corporations, I feel like everyone's kind of just taking a pause into the end of the year because the only story really is the metals. And that's the talk of the town on Twitter, especially where there's a massive community over there.
Mathematically speaking, the Santa Claus rally is supposed to continue through, like, the first 2 trading days of the next year.
Is that the case?
Yes.
Okay.
So,
I mean, there's a possibility. This is the only, I mean, the pullback isn't even very aggressive. I mean, the S&P 500 is trading at 6,944. I mean, that's 60 points off of 7,000. So we're still right around the corner. With that being said, we did take a couple trades today in NASDAQ. We took a couple stabs. We had to take a couple paper cuts, but let's just dive right into this. We have a trade on right now, so we'll see how this pans out. But to give a little bit more context for what we're sitting in right now, we got short around our value area high here at 25,726. We got short a couple contracts initially. But then we got stopped out on one. So now we're just sitting in one contract. And pretty much what we're going to look for is to see if this market wants to offer us any more downside. And if it does, this will kind of shift into an imbalance / directional type move. And we're going to try and target this 25,587 area because otherwise we would have already kind of been out of this position right here. So with that being said, we're going to put our stops in over here at about 25,731 or 732. Because if we get some acceptance above here, maybe we can then come back and maybe test some of these intraday highs that we put in. So I don't want to be in that position if that's going to be the case. So we're risking about 12 points so far on this trade. I think at the maximum point of this trade, these ones can be a little bit tough, but since we had some profits on the day, it's a little bit easier to sit on it just in case the market wants to come right back on us and take our profits. Because I mean, right now, our entry over here is 25,720. We got down to a low of 25,652. That's about a 70-point move to the downside. And it's like, if you have 70 points, why wouldn't you just take that off the table? Just because profits earlier on the day and then also a larger narrative play trying to see if we can work that one out here. So that's kind of the justification for holding this one a little bit longer. But if we zoom in here to a couple of these first trades, we did get stopped out a few times. And I think this is a really good case or a really good example of just a risk management and then being patient and allowing the market to show you another opportunity and then being able to capitalize on that. So I think by understanding that it's a little bit easier to cut these trades initially, especially coming off of a break of barely trading last week, taking three consecutive losses on a Monday morning off of not trading for a week is not the best feeling in the world. So with that being said, we were looking to get long off this value area high after we broke out into the morning because we're like, you know what, maybe we have a continuation to the upside. As you can see, we completely failed. We stopped out, flipped the position, looking to get short over here. Stopped out again, just wasn't very confident in the trade. It was a little bit more impulsive, so just took a quick step back. That was for about minus 18 points. Second one was for about minus 5 points. Then we came down here to the lows, was looking to get long over here. Initially got stopped out for 6 points. Was able to get in a couple more contracts over here whenever we recognized the reversal. I was like, maybe this one's going to try and stop me out in the reverse on me. So I was like, you know what? I'm fine with taking another stab at this. Mostly because of I was mostly confident to get long here, mostly because we sold off all night and then we sold off all morning and gave all the gains back. That's why I was just leaning a little bit more long rather than getting short there. But that's pretty much it. Put the stops down towards the lows and then we were able to rally for another maybe 43 points. So we were able to capture that and recover some of the initial losses on the first 3 red trades and then sitting in the short for today. But that's all the context for the day. And we're going to have to just continue to be patient. We've got a couple hours left. I know that was a little bit of a mouthful, but
it's good. I'm happy.
Yeah.
Happy to let you talk today.
Yeah.
Breaking the fourth wall a little bit. It's nausea today, so I'm happy to let Errol do the yapping. But yeah, no, that's a good sequence. It does suck to come back.
No, I mean 3, just bang bang. I was like, bro.
Yeah, and like that. Well, I was like, bro. It's like Oh yeah, and it's in they're like 2 minutes each. Yeah.
Yeah.
Seriously, bang, bang, bang. Mike, in response to the chat, Gus, did you implement a strategy, i.e., order Wingstop over break? I did not order any Wingstop over break, but I did get $200 in DoorDash gift cards for Christmas.
Oh, no way.
Thank you, Mom. Thank you, Uncle Jeff. So I'm well equipped to implement all kinds of strategy, and it's you don't have to implement as much strategy when it's on a gift card because
that's true.
You ain't paying
I gotta ask. You guys do any white elephant over there or what?
No, we don't do any white elephant. It's just me and my parents down there. So, yeah, it would be a pretty boring white elephant.
That's hilarious.
Especially if there's no re-steals, everybody just gets to do it in 2 minutes. But yeah, it's just me and my family, my immediate family, I should say. So we keep things quiet, but I like it that way. It's nice.
That's fire. Checking out some of the crypto markets right now. I haven't been keeping too much of an eye on crypto. I think the metals have really been taking all the attention over here. So let's look at that together. Some Bitcoin futures.
Crypto just staying beaten up, man.
Yeah. Where are we at right now? 88,000.
Keep waiting.
All right, let's get out of this tiny chart. It was looking a little illiquid right here. 88,000. Yeah, we see again to your point. We really haven't done anything. I mean, since you've been gone too. Don. Low liquidity stops you out every time. Yeah, I mean, when liquidity's low, price starts skipping. I'm a little uncomfy. But it looks like Bitcoin it hasn't been going anywhere, brother. So the metals is taking the cake once again.
Could be Don Dad on Don.
Don Dad on Don or Donda.
Don to Don.
Don to Don Don. Don to Don Don.
To Don Don? I don't know.
Don to Don Don.
I like
yeah.
Brief aside as well, as long as we're talking about non-equity products, I have a Forex position, tastyfx.
Okay.
Right within the platform. I have a Forex position. I'm long yen against the euro, and holy cow, is Japan gonna fall? I don't like. Is the nation falling? I don't understand. I've averaged this thing down 3 times. It's so funny. It just every single time I look at it, they're all down $100 more. It's like and it's Forex. It's a cyclical product. I'm so perplexed, but yeah,
it's volatile over there.
It's just on my mind as I peeked at my tastyfx here. This chart is so insane. It looks like the silver chart. Yeah, actually. Can we flip over to my platform real quick? Let's do a little tastyfx.
Let's check it out. Let's check it out.
Yeah, it's ridiculous, and it doesn't show any signs of stopping. I don't know.
No, let's check it out.
Oh, you didn't have to apologize. We like the name. What?
Yeah, I think it's pretty fire.
Yeah.
What's going on, Big Deal? Good afternoon.
What's up, Big Deal? Good to see you.
Yeah.
But anyway, yeah, Japanese yen. What are we doing? Is this currency going to be worth 0? I'm long at 178 yen per euro. It's currently 183 yen per euro. And the average for the last, 3 years is something like 165 yen per euro.
165.
Yeah, so I was expecting that to strengthen back for me. Oh, I like some. Yeah, good. Get some. This is necessary. This is needed.
What's that? Changing name to Mr. Obvious.
That was a good one. That was decisive. Decisive implementation. Changing name to Mr. Obvious. No, that was fun. You gave us 30 seconds of entertainment just by your creativity with your name.
Yeah,
that's
I
awesome.
like it.
My name doesn't do that for people, except when people think my name is Dust. That happens. That happens like often, more often than you think. Like I'll be at a fast food place, like Chick-fil-A. They're like, "Oh, can I get a name for the order?" Gus, Dust. Is it anybody named Dust?
That sounds like what your boys would call you.
Yeah,
just to mess with you. It's your boys. You know?
I guess Dustin is a name, and I suppose you could posit.
I've never heard.
But yeah,
never heard it.
Yeah, we were shortening that to Dust.
Yeah,
yeah.
Yeah.
That's mine. What's yours, Aaron? What do people think?
People. I've heard it all. I've heard Earl. So some of my boys would go Earl because it's funny. Ariel. That was from like elementary school, and girls are making fun of you boys. Ariel. Egg roll. That was one that got in 5th grade. Egg roll. That one stuck for a long time.
I like that. That's my favorite of the ones you've proposed so far. Yeah,
egg roll. I love egg rolls too. Love Chinese food. There's a couple more. It'll ring a bell. But in the time being, until we switch over to the Forex, we can look at that Japanese yen.
Yeah. I'm busy searching for a used car / small SUV. Well, I wish you luck with that, Big Deal. I think inventories are. I think it's kind of a buyer's market with cars right now, right? If I'm not mistaken. I love my Nissan Rogue.
I mean, it wasn't a buyer's market the last.
Dusty? Okay, Dusty is a name. That's a fair point. Fair point.
Dusty's good.
But just Dust, though? Because Dusty is still one syllable.
Yeah.
Dusty. Never mind. I retract.
I don't mean my siblings.
I promise I took AP English in high school.
No, bro, you're one of the smartest guys I think I've met. We know. You're one of the smartest guys I've met, bro.
I got a 5 on my AP.
In the meantime, what's up?
Also, College Board. What a scam. I don't know if you had that same experience. AP classes and College Board, it's such a racket.
Oh, yeah, 100%.
You got to take this whole class. The credit's not even guaranteed. You got to pass a test at the end, and then you get to college, and they give you 1 credit hour for it. Pretty much all these schools have dual credit programs now where you can do a community college class, and all you have to do is pass the thing, and you get 3 credit hours.
Yeah.
College Board is a scam.
Yeah.
So,
I completely agree. I think that was a huge realization too. But I mean, bro, you were probably breezing through those. Let's keep it a buck. You were breezing through those AP classes.
I was.
I know you were.
But it's just dumb. It's dumb. You have to pay for this extra exam at the end of the year, and then you have to pass that thing. And then if you don't, it's like you didn't take the class.
Are you the type to get bored? Like if it's not challenging enough, are you the type to get bored, or would you rather just like knock it out and then free up your schedule and do whatever else you want to do if you were taking those AP classes?
Well, it depends. If it's something that I'm doing for fun and I'm like looking for a challenge, then yes. But I would say academically, if I can get the same amount of credit hours for less work, then yeah.
Well, of course,
I would prefer to not be challenged in that regard. But anyway, that's enough aside about school. We can hone it back into markets here. I just had to speak that to the masses while I have the chance. What else? Yes, wonderful emoji. I was wondering, actually, I guess the moon emoji had disappeared from the gold or silver chart.
Oh, goodness.
Whatever that was.
Yeah, we can take it. I think it did.
I thought that would be some really funny perspective to give ourselves if that was still there.
Let me zoom out real quick.
I don't even remember which of these run-ups it was on. We've been going for so long. It might have been that.
It might have been over here.
Yeah, I was going to say.
It might have been over here, yeah.
I think it was like over there.
3,600
Yeah,
gold.
we were like, oh, gold.
We're at the moon.
We can't believe it. Yeah, now we're what? $700 above that?
Yeah.
It's so insane.
No, it is. I was just taking a look at some of these the platinum futures over here too. Kind of a very similar story to silver and gold right now. Honestly, looking a little more like silver right now in that parabolic-ish type move. And to get a better visual of that, let's go to like the daily chart. And if we go to the daily, we can really see how that move to the upside started to look very like exponential, like very parabolic. And then we can see the gains on the day to the downside. It's like the first crack we're really seeing with a little bit of significance, taking out previous day's lows. So will it hold? I don't know. But if we do bounce and some of the platinum futures, if we bounce a little bit more in the silver, if we bounce a little bit more in the gold, maybe try and take a shot at it. I won't be too shy on the short side, only if we get a bounce. Because another all-time high from here would blow my mind times 10 than it already is, based off of the crack that we've seen. So I don't know. We'll keep an eye on it.
Big deal. What's up with silver? You missed our brief silver conversation earlier, but the short answer is we don't know. Flower Power actually has the most based claim I think anybody's made here in the chat. Why did silver get so high? Yeah, there's potential. I have seen lots about potential foreign influence. Everyone buying silver jewelry for holiday gifts this year. Man,
That's
I
actually
wonder,
funny.
I unironically wonder
one.
how many people would have to buy like silver jewelry to actually have like a tangible impact on the market price of silver. I mean, obviously, okay, I'm not stupid. I understand that's how markets work, is that if there's more demand.
We know that, bro. You're one of the smartest people I've ever met.
The price for the good goes up. But I'm just saying, like, at what point is it like, could they cause something like this? How many people in America have to go into their local Zales and buy a silver necklace for this price action on silver? I bet that's quantifiable.
Yeah.
New iPhone silver coming out? No. It's all, this metals thing is just so confusing to me. I'm happy to see it breathe a little bit today because it's almost like, it's almost shady. Like I've said this before, like I don't even, and this is a baseless claim because I don't know anything about anything, but it just feels like somebody is doing this. Mm-hmm. Like I feel like whether that's a foreign government or one large individual or some kind of firm or something. Is it Michael Burry? Is this why Michael Burry went private? Is because he saw the vision on silver? But yeah, it's odd. It's odd.
It's nuts.
It's odd to see this because like when you look at historic times when we've had moves in silver like this, it's like wars, the gas crisis in the 70s, hyperinflation situations where we have brief and it's and there's just nothing like that, going alongside this.
Yeah, I mean, it really does it feels like a huge sense of a lot of economic uncertainty.
end of your dental work. It's all those Tomahawk missiles for Ukraine.
It does feel like a lot of economic uncertainty with seeing a lot of the metals kind of rally like this. So is something brewing? I don't know. You guys tell me, some of the homeowners, are you guys selling your homes? Are homes selling right now? Do you guys know people that are like, what's going on with because this isn't normal. And I feel like this is going to be one of the most obvious hindsight.
Yes. Whenever
like one of the most,
obviously it was this.
Well, I mean, good Lord, silver has ripped over 200%, like whatever the time frame is. So it feels like a lot of economic uncertainty. I don't know where the weaknesses is within the whole infrastructure. I don't know where it's going to come from, but it's not normal. This is not nowhere near sustainable. And I feel like who knows what's going on, but I think we know it ain't normal.
Yeah,
for sure.
We are pretty close to at our time here.
Yeah.
I wanted to point out Flower Power in chat. Absolutely right. Platinum actually outpacing silver. If you think silver is crazy, go check that out. And to your point, and I don't know that these things are correlated at all, but I did just see that right now is a record ever for the difference between between potential home buyers and inventories. There's
really,
yeah, it's like. I saw some stat like that. I don't want to start throwing out exact numbers, but it was something like there's 585,000 more houses listed than there are buyers for those houses.
Right. A little bit more supply on the market.
Yeah.
I'm not mad at it. Hey, I'm not going to lie.
Buyer's market.
Not mad at it. We have never got our time to even be able to be close to the market for our generation. Yes. So not mad at it at all.
I could not conceive of buying a house.
I mean, we can go on and on, but we'll touch on that tomorrow.
Yeah. All right. You got anything else?
That'll be it from me.
All righty. That's all we got for today. Thanks so much, everybody, for being here with us today. We dearly appreciate you taking the time out of your day, and we never take it for granted. Errol and I'll be right back here tomorrow, same time, same place, 12 o'clock noon Central Standard Time tomorrow. Be sure to stay tuned for Futures Power Hour coming on next. And we'll see you guys next time.
Peace, guys.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
We are back. It is Monday, December 29th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, anything interesting happening in the markets today?
Nothing at all, Chris. No, we can wrap up the show, see everyone.
I was taking a look at silver. I don't think that it's actually changed much since I took a last look at prices on Tuesday, December 23rd. Although that's probably not the story that we're going to tell here today, Mr. Westwater. Silver having one of the largest volume move ever, off 10% now from its open after soaring above 82, nearly 83 in the futures market last night during Asian hours. $70 is a lot closer than $80 at this juncture. Gold, likewise, having a bit of a swing to the downside. But stocks aren't looking too healthy either. This is a day of liquidation driven by a metals meltdown, Thomas. And what rumors are swirling? Ooh, we're going to debunk some rumors today about banks failing and Chinese export bans, CME margin hikes. What's real, what's not real? What do we really care about at the end of the day? Thomas, so there's a lot to get through over the remainder of our hour here, as we get through Futures Power Hour. John, we can go right to the slides as we delve into this. There are some silver stats that I want to cover here at the top of the show, given the severity of this move and my vested interest in long deltas here, which quite frankly, nothing has really changed over the last week in terms of P&L. Today sucks, but it's just a return to where we were last Tuesday, Thomas. I want to point out some things that I came across over the past week, particularly through all of the noise here. One is something that I tweeted out last Tuesday, December 23rd on Silver Stats. The one here on the right is something that a gentleman by the name of tastytrade, whose stats I've referenced here on the show before. I think he's an interesting Twitter follow. I would, not that we recommend other people, but check out what he has to say on some of these quantitative studies. I think it piques people's interest. There's two ways to take a look at this, Thomas. What I put out on December 23rd was, I think we're getting a little long in the tooth. I know Frank put this into the YouTube chat that day as well. The idea there was we had just seen a move where silver had seen its rolling trailing 1 quarter returns exceed plus 40%. And historically, since 1987, the 38 or odd instances in which this has occurred on a weekly basis, the forward returns for silver weren't that hot. A month later, minus 5% on average, minus 7% median. 3 months later, minus 3% on average, minus 10% median. 6, 12 tell similar stories at 0 and 5% averages, and minus 4 and minus 9%, median returns respectively. So we have that occur here, right? And sure enough, we have our bigger run up over the next 2 days. So if you shorted silver on Tuesday because of these stats, you dealt with a very painful Wednesday and Friday, and even potentially a market open on Sunday. But perhaps that's changed because silver prices have now come off, which brings into focus today's session, because Thomas, we did get 10% off the highs or so. From tastytrade here, what happens after it makes a 1-year high and then falls over 6%? That is a rare occurrence. In fact, going back over the past several years, this is the 7th such time it's occurred in history. So n equals 7 is not a statistically significant sample size. We want at least 30 observations. But hear me out on this, Mr. Westwater. This tends to be the washout move to the downside, if history is any guide in these unique occurrences. The 1 week, 2 week, 3 week returns higher consistently. Even the 1, 2, 3, 4 day returns are higher fairly consistently. A week later, 7% higher 100% of the time. 3 weeks later, 11% higher 100% of the time. So we have a lot of tension in the market right now around these holidays, is my conclusion. We have thin markets, we have rumors, we have a lot of speculation going on right now, even though inventories are being drawn down around the world. Is it because of a bank failure? There were no bank failures overnight, as far as we can tell. No government agencies have reported any bank failures, and I'd encourage people to go check on the SEC or FDIC's website to confirm that information themselves. So, Thomas, this is just a speculative market in thin conditions running on fear. We've had big swings over the past week, but as we settle down now, we may have made the retracement, dare I say, and being mindful of the fact that if you are trading this market, you have to be very nimble to get in or out and have enough time to let the market do the move for you. You don't want to get caught in anything short term, which is kind of why I'm chill today. I still got 60 odd days to go on the silver call spread. That's well in the money at this point in time. So no panic. I've said a lot though. What do you think of these stats, both on my side in terms of the market being overcooked last week and now where we are today, having seen such a significant flush out?
Yeah, it's a big flush out. I mean, that's what happens when, you get a market that's a little thin, you've run up a lot, and it's just a little bit of panic selling, it looks like. We're down over 10%. Yeah, I mean, it's a huge, huge candle. If you look at the chart, lots of volatility. I'm going to see it as a buying opportunity. I've been trying to get back in the long silver trade, and I said I was waiting for a pullback, and this is a pullback. So, I'm going to get in a long call spread here, I think, and I think after a move like this, it is, it does give you a little bit of hesitancy getting back in a position. But, I've liked silver all year going into 2026. I want to keep liking it. And I think the fundamentals are still there. This is kind of like the pullback we saw in gold a couple months ago. And, where was it? Back in October. And, I got long gold after that. It worked out. I think silver, I'm going to do the same thing here. And, if this happened in a market where it wasn't a holiday, coming back off a holiday weekend, going into a holiday, would it fall this much? I don't know. But I think once the move started overnight, it really accelerated. And, I noticed that Elon Musk tweeted about silver the first time he's done so in quite a while. I'm not sure if that preceded the sell-off, but I don't think it has any, cause and effect. But it is coincidental that he was tweeting about it.
Yeah, and we're going to go into something more. There was a really interesting article published over the weekend by a guy who goes by the name of A.B. Campbell on Twitter, which I'd encourage people to look into his background. But long and short, he used to run macro, I think, at Citadel and Bridgewater. So he is a very sharp mind and has some interesting insight into the space. And we're going to delve into the silver move in a little bit with some of what he discussed. I think it's worthy of consideration in terms of both the bull and the bear case here henceforth. And obviously it has a lot of interest in the market right now, given these moves we're seeing with the record volumes. But perhaps stocks are even being spooked today, Thomas, by some of these liquidations that we're seeing elsewhere. It is a fairly uneven day for crypto as well in terms of a sentiment gauge, although Bitcoin and Ethereum are barely off anything. They're technically in the red, but when Bitcoin's down 0.1%, you don't consider it that terrible of a session. The S&P at 6950 here, I suppose a quick look at that daily chart is going to be appropriate because today we find ourselves back to our 1 week moving average at 69.49, and that's where price is effectively right now, which I suppose if we were to think about recent price action and a break below that 1 week average today, Thomas, that could be a Morningstar candlestick cluster here up at the high that we had in the middle of December. And for what it's worth, a head and shoulders pattern coming off the lows here does reach that measured move up in that 69.80, 69.90 area. So perhaps it's finished, the rebound that we saw from the middle of December onwards. But either way, there is some recovery here in the middle of the session. And so key technical ground, I don't think has been lost just yet, although IVR is starting to rise in both the NASDAQ and the S&P isn't the best thing to look for. Here's my concern. 25,000, we'll call it 25,650 or so in the NASDAQ. It was a swing level throughout early December. It became resistance in the middle portion of the month and has been support ever since we cracked on through it here on December 21st. So we both have in ES and NQ, Thomas, the 5 EMA, the 1 week in the S&P, and now this clear horizontal line on our screen around 25,650 in the NASDAQ futures. If we're both below both of those today, the bull case looks much weaker for the next few sessions. The path of least resistance heading into New Year's probably becomes lower. And that 7,000 call that I have that expires on Wednesday is going to go away worth absolutely nothing.
Yeah, but if we stay above them, there's a chance for a rebound. We continue back into a Santa Claus rally or whatever they want to call it. I have a order on for a long call spread in ES, just a 1 day. So I'm playing for, if it rebounds, it rebounds. If it doesn't, I'll eat a small loss and move on.
How are you structuring this? You're going 5 points wide here, like six at the money, 69.50, 69.55.
69.55, 69.60, 1 day out.
1 day. I'm sorry, I had that on the 0 DTE.
1 day out.
Let me adjust that. 69.55, 69.60. A little bit better than risking one to make one, and probability of profit under 50%. But Thomas, it's effectively a coin flip from here. And if we find that this 1 week moving average is the support that bulls would presume for it to be, if the NASDAQ is holding this horizontal line here, it's not an unreasonable trade to make, particularly if we're looking for a short-term bounce within the Santa Claus rally window, which for this year's sake, we finally are in it. The Santa Claus rally is, of course, the final 5 days of the trading year, plus the first 2 of the new one. Since 1950, S&P has averaged a gain of 1.3% during that window. This year, given the market calendar, that means December 24th, 26th, 29th, 30, and 31 are the final 5 days. And then we have January 2nd and January 5th as the first 2. So through next Monday's close is that Santa Claus rally window. And as it were, Thomas, the Santa Claus rally window, I don't want to call it a predictor of how future price action plays out. I don't think that's a fair a call to make. But if you don't have a strong Santa Claus rally window, then you typically see a choppier start to the next year. And if you have a choppy start to the next year, you deprive yourself of a January effect, so to speak, right? When the market has gained over 2% in January, its average return for any given year is over 12% since 1950. When January is negative, the S&P 500 has barely returned 2% for the entirety of the calendar year. So the setup that we have here, sentiment-wise, going into the second year of a presidential cycle, a midterm election year, historically speaking for stocks, that is a lot of chop. That's a lot of chop for the first 6 to 9 months of the year, if not correction, not dissimilar from what we saw in 2022, dare I say. I don't know if we'd have the depth of the declines there, but watching how these key levels play out this week and going into the first few days of next year, that 5 EMA and ES, that 25,650 level in NQ, I really do think are instrumental for whether or not we want to stay tilting, leaning long deltas in the equity market, given the preponderance of information we have in front of us.
So this is it for you. It's like this is game time. It's make it or break it for the whole year if we do what we do in the next few days.
It could be. It very well could be. Volatility, of course, is the key guide here. And Nick and I had a brief exchange this morning. Volatility is getting up. He wants to start to see, VIX move up more than where it is right now. We have a 14.26.
It's still low. Still low.
And volatility futures going into their cycle lows again, 16.6 in the F cycle, 18.62 in the G cycle. And this would be pretty close to a new cycle low for February as well. So this is kind of that squaring, Thomas. If I'm in your shoes and I'm thinking I want to get this market to bounce over the next 24 hours, what's volatility whispering? It's not really telling us anything that we should be worried about here, that this is really the start of something. You're not seeing it play out in that manner. And for the record, this has been a conversation you and I have been having for the past week and a half, nearly 2 weeks. Even during the sell-off, vol wasn't doing much. And it kind of gave me faith that maybe the market would bounce back, and it has. So I guess you and I are both in the same boat here. I'm at 2 DTE, you're at 1. We both need a rally. The table is still somewhat set for it. No key levels have been broken. Maybe we can get one last huzzah to the upside.
Yeah, I agree. If we were seeing a event where a lot of fear was coming in and a pessimistic view, volatility, I think would be creeping up a little bit. throughout the session. The trade I put on, it's a coin flip, but I guess the vibe I'm getting is it's a good one. And again, I've lined up a lot of my portfolio coming into the holidays, so this is just something for me to get some skin in the game right now. And there it goes, my order filled. So I'm long ES for the 1 day, the call spread. So yeah, if we could get a little market rebound here into tomorrow, I would love that.
Thomas, I like that trade. It's only 1-to-1. It's a small guy here, really risk defined. I'm going to get myself in the queue. I'm with you. Can we get a 5 or 10 point bounce in ES by this time tomorrow? Listen, if volatility continues to guide lower, it's possible. Certainly better than if vol was creeping up and VIX was sitting at like 16 or 17 right now. When volatility is on the way up, it's a lot more difficult to catch that falling knife. So I very much like the setup here. I like it in ES. I like it in NQ. I see some people ask today, is this silver meltdown related to what's going on in the AI trade? Because apparently this means that, AI, the data centers, you need silver as part of building out the data centers, even though they're not really in the GPUs. It's more about the grid and the connectivity. Okay. So is the silver move lower today related to AI? Is this a terrible day for SMH? IVR is at 8.5. NVIDIA itself looking at a little bit of a pullback right now, 1.7%. I mean, that's kind of your typical move in NVIDIA. Oracle's 1.5%. I mean, I don't see any panic here, Thomas. I guess that's what I'm getting at. I don't think that there's any correlation between the silver move and the price action that we're seeing in any AI related names today. Do you find that to be the case as well? Happenstance?
Yeah, I agree. If there was some, if there was a trigger somewhere in the market that was not well known, and silver was 10% lower because the data center thing or AI, you would see more of an impact in these AI stocks, right? They're down, but they're not down huge, and it just doesn't line up that well for me, that narrative that silver is crashing 10% because of the data centers or whatever, and SMH is just down less than 1%.
Yes, there's a lot of narrative over the weekend, right? I mean, just it's so funny how people are, I don't know how there would be even a rhyme here. In basketball circles, people write articles about the New York Knicks for clicks, because it's going to generate headlines, right? Feels like people were tweeting all weekend for the past few days about silver because they knew that's where everyone's attention was. Someone was spreading a rumor last night. It got thousands of likes, tens of thousands of likes, that JP Morgan is one of the banks that had to, bust out of a silver position. That's where the market's going crazy. They filed an amended 8K. No, they didn't. They did not do that. It's nowhere. I mean, if they did, it's not public. You can search the government databases right now. It's easily falsifiable. There's just so many rumors and nonsense going around. Why was silver going up last week? You know what my favorite rumor was? Tomahawk missiles. There's 31 pounds of silver in each Tomahawk missile that's irretrievable once the missile hits the ground or the target. And so this is the market pricing in World War III because of all the missiles that we're going to have to build. Come on, folks.
Yeah.
Stay grounded to reality. Stay grounded in your process. Don't get emotional about these things. Let's talk about sector performance, because I know that I really am feeling drawn to talk about silver some more, given the propensity of the moves today. And our sector watch list, of course, 25 sector ETFs that we track here on Futures Power Hour. Top of the heap comes the energy ETFs. XOP, XLE, IYE, modest gains up around 1% right now. They round out a list of just 8 sector ETFs that are in the green for today's session. So 17 of the 25 are in the red, led lower by GDXJ, down 7%, 6.3%. There, XME off 2.16%, materials off nearly 1%. It's not a great mix. It's not a terrible mix. There's nothing really outrageous beyond the commodity-centric sectors, Thomas. I don't think we have much more here to say about stocks. You and I are still leaning long deltas here. Russell is looking terrible for different reasons, perhaps. Closing below its 1 month would be perhaps a harbinger of things to come. Do we get those Fed rate cuts next month? The market's telling us no. That's perhaps a conversation to have with bonds, which why not head over to the bond market, Mr. Westwater? Treasury vol is still dead.
Boring.
Nothing.
Yeah.
Although it's a 14.1 IVR in notes. So we're starting to get a little bit of life. I know that's at nearly it is the monthly highs for IVR. So we don't want to shake that off. But these are still very, very low volatility readings. The question is whether or not we're turning a corner. The fact that we have ZB here fighting to hold its uptrend off of recent lows, fighting to climb through that 116 level. This to me is a market that, I know I'm bared up right now, at least on bonds themselves because of that breakdown, but we get through 116 or so, necessarily the technical formation calls for you to change your behavior and look for a rally back up into 118. So I'm on the fence here too, where I might just, having been chopped up, I might just have to throw in the towel in this trade and flip positions or get out of the way altogether. Are you still leaning long deltas in the bond market?
Yeah, I'm in a long ZB call spread, 118, 119. I've had this one on for a while. And yeah, it's not doing much for me now. It's so far below the prices. I'm going to have to eat this loss here. And I've been procrastinating on eating the loss. Maybe I'll do it next year,
Yeah, maybe next year. No, the 118, 120, maybe the timing's off. And I'm at 25 DTE. So no matter what happens this week, unless bonds break bad tomorrow, I'm just going to take the loss in the position and move out of the way. But if we're through 116 here, a falling wedge, technically speaking, calls for return to the base. And the base, more or less, I think we could paint as the recent pivot high up at 117 and 30 ticks. Perhaps that warrants a 117, 119 type of call spread, which is more of that 3-to-1 risk reward, risking 1 to make 3. I could live with that. But I need to see a little bit more price improvement from here before I finally do toss in that towel. Maybe tomorrow, Thomas, silver rebounds and treasuries go off to the downside again, and we resume the price action that we've seen for so much of December. But a little bit of patience, because just like in stocks, it really does feel like we're at a Rubicon, a crossing of sorts for a few different markets here. The ZN trade is something that's working out today, because the idea here with that reverse iron fly, again, when it's put on a few weeks back, we're sitting near 112. Volatility is in the tank, where we're looking at negative IVR readings. So you have to adjust your strategy to the market. And while we are usually the kind of people who look to collect premium, right? We look to sell the volatility here. If you're looking at a 0 or negative IVR, you have to play it a different way. So first off, 45 in, 21 day out, put that in your back pocket for now. You can use the low volatility to get more duration on your side. Give yourself a little bit more breathing room to have a trade work out in your favor. Secondly, we're obviously not trying to collect premium. We don't want the market to stay still. We're going to say that actually this is a low point, a trough in volatility, and things are going to happen here henceforth during our trade window. The reverse iron fly is set up so that you don't need to be directionally committed. It's agnostic. As long as the market goes up or down away from 112, the trade could work. So with volatility now at a 14.1 IVR and prices starting to move away from 112, this trade's looking a little bit better. Long the 112, call and put, short the 110 put, long the 114 call. As long as this thing goes up to 114 or down to 110, it could work out. If volatility expands and nothing changes, it could work out. It hasn't worked out so far. But at 53 DTE, Thomas, unlike the ZB position, this feels like something that is still worthwhile, still has potential. And if notes are starting to get directional here and they're breaking their local downtrend here, you know what? That means a swing towards 114 actually becomes more feasible. And so I would want to have on this position still. I'm liking how it's shaping up now after a few weeks of consternation, but I think it's a valid trade. I don't know if I'd be getting in the same position today, but in terms of holding it, nothing's wrong with it. It's actually doing better than it was a week ago.
Yeah, going all the way from September, we're about at the same price. We've had, a range carved out for quite a while. And if you asked me back then, I would say something different probably with the way the Fed outlook was and everything else. But I don't know. I do like that trade. I'm not sure if I'm going to put it on right now, but I do like, just having to move the price away from where it's at. Because if you look at what the price has done, it certainly moved, hasn't stayed in, a tight range for too long, except through November a little bit. But yeah, bonds or something, I've had this ZB position, so I've been a little unwilling to get into another position, especially since I got out of ZN just 2 weeks ago with a loser.
Yeah. I mean, listen, notes and bonds for me, it feels like it's been a chop fest personally, and it's frustrating. And maybe this is kind of, at least with bonds, that may be drifting into the territory where if the next trade that I take and it doesn't work out, I may step away for a few weeks, just like I did with natural gas over the summer. You have to do that for yourself sometimes. If you don't have a good feel in the market, if you're just kind of throwing darts at a dartboard and you're trying to stay mechanical here, right? What do the technicals say? What's the volatility set up? Figure out then the best fit within that regime. Maybe misreading the market. Maybe I'm operating on the wrong time frame. So always worthwhile to reconsider the process. But I'm feeling better about notes right now. Metals mania. Thomas, we called this section of the show Metals Mania last Tuesday when we last spoke. Today it arrives with an asterisk. Mania is not just excitement and going to the upside, right? To get a little scientific and clinical, when someone's having a manic episode, it's high highs and also low lows, right? It feels like that's what's going on right now in the metals market. It's metals mania. It's not sensical. It's irrational. It's highly emotional. Silver, which was down over 10% earlier, is now down only 8%. So getting a little bit of a bounce. And what would you know here, Thomas? The uptrend from those lows in November, this uptrend that we've been watching, the uptrend that last week saying we're getting pretty close to the highs here. So maybe it's time for a swing back down towards 71 or so. Guess where we are? We are at 71. We are at the swing low that we had here on December 24th. I find this whole exercise so fascinating. I want to clean up this chart for a second, Thomas. We often talk in the equities world of closing gaps, right? If a stock breaks out and then that trend weakens on the breakout, what do traders often look for? They look for a gap fill. We filled the gap in the market from when futures closed for the Christmas day. That close comes in at 71,875. So we ran up after the holiday. We come back in as liquidity returns to the market. We have since closed the gap. I don't know if the silver market is done here. If this was a technical chart, Tom, if we were just being purely technical and not thinking this was a crazy holiday, illiquid driven move, I would look at this and tell you that's a bearish engulfing bar, a daily key reversal, a get the hell out of Dodge type of signal. But this is a really odd market right now for various things. Again, World War III, that's why we're running up. Well, we're coming down today because World War III is less likely to happen, apparently.
That's good, yeah.
Yeah, if you're a believer in the Tomahawk missile theorem of why silver prices were running up last week. What if it's a bank failure? Well, the bank didn't fail. There's still nothing here. JP Morgan hasn't filed an amended 8K. There's still nothing on an SEC or FDIC website about a bank failure. Maybe that changes. I'd be happy to admit I'm wrong if that information surfaces. But it's not surfacing just yet. Thomas, 71.42 is the level I'm watching here in silver. Why? It's our 1 week moving average. It's a 1 week moving average that we've more or less been hugging since late November. It's a very impressive trend line. If we're back above it by the end of today, and we're already back to 71.10, and given how this market's moving, another 30 cents is like, it's nothing to ask for. If you're back through, 71.40, you consider the uptrend that we were in and this being a washout type of price action, given the stats that we shared at the top of the show from Subu, I don't know, Mr. Westwater. It's awfully tempting to add into another long leg.
Yeah, I mean, I'm looking at the options chain right now for silver and trying to put together a long call spread in 57 days out. Feel like that's a good amount of time. I don't know where I'm going to go yet. I've been playing around with it. It's a pretty big product, so I mean, I can't go too wide, but I want to go where there's some volume and open interest. And I don't know. I might have to look at SLV a little bit. I don't know. I'm not seeing anything that just jumps out at me right now.
It really is a tough trade at the moment because it is, one, expensive, two, you're looking around all these strikes. 76.5 strike at the 87 DTE has one contract open interest. There is we have long said, I remember when I first came on, we were talking about metals trading with Tom. He's like, oh, you know what? I actually like copper more than silver. Copper is a little bit more of a deeper market. It has better options. Today's obviously you're seeing that volume discrepancy, but for a number of years, silver options thin. It's difficult to get in and out of. You never want to Hotel California yourself into a position, right? You can get into it, but you can't exit it.
Yeah.
And right now, if you're trading silver options, silver futures options, there is not a ton of great activity as you go longer out in time. I mean, even at 29 DTE right now, I'm looking at 316 contracts open interest at the 71 strike. So we talk about this being thin. SLV is probably going to be the better vehicle for anyone who wants to trade this market right now. Of course, you're going to deal with the lockup of not being able to trade it overnight. And given what happened overnight today, you could see why if you purchased it on Friday last week and you could only get out of the market this morning on the US Open, that could have been a bit of an issue. This may not be the trade for most people, right? At the end of the day, Thomas, this has been a really big winner. It's still a really big winner for me, for folks like you, for Ilya, for the Jamal, right, who've been trading it, but we've been trading it all year long to the upside. We've been giving ourselves those 60 days for this thing to work out. The biggest winners are not as a result of us like flipping a coin and betting on a 0 DTE here on Futures Power Hour. The biggest winners are a result of letting the market do the heavy lifting. As Jesse Livermore said, the hand sitting. So if this past week you had logged off going into Christmas Eve and you came back today, not much has changed. It's a big pullback. We're not going to deny that. But the uptrend's still there. So I have my line in the sand, Thomas. I'm looking at the SI86 contract. I have our swing low here from December 24th at 70.16. It's a level that the market today really tried to and just couldn't breach. Interesting occurrence. 70.16 is held through today's close. I would gander that maybe we start taking those stats that we shared at the top of the show a little bit more seriously in terms of what Subu Trade put out. When you set a new one-year high within the past day and then you fall more than 6%, what happens? Only 6 historical occurrences prior to this most recent episode, and they're almost uniformly positive 1 day, 2 day, 3, 4, a week, 2 weeks, 3 weeks out. So it's a very intriguing setup in a market that's obviously dealing with a lot of narrative, which I suppose there's one more narrative I want to cover here, Thomas. There is purportedly a Chinese export ban going into place on January 1st. Sure. Chinese silver does not really go to the US. It goes to India. It goes to London. I'm not sure this is the driver that people are saying it is. Silver isn't like one of these rare earth metal markets where China controls the predominant bulk of it, and if they decide to stop exporting, then the entire planet's in trouble. Silver is a much more developed market than any of those types of items. Could it be having an effect? Sure. Psychologically, headlines can make people do wacky things. Like maybe the wackiness was last week. We see the run up and people are panicking. And then once they calm down and really delve into the rumors and the truths, and they say it's all nonsense, they say, why the hell was I chasing this to the upside in the first place? I shouldn't be holding this on rumors. CME margin hike is definitely a thing. And I do want to point out why that matters, right? In 2011, the margin on CME futures for silver was like 4%. So it's 25-to-1 leverage. And they ultimately bring that higher to like 10-to-1 and they jack it up in that area. But the point is that all of a sudden you're not laid out 25-to-1, you're laid out 10-to-1, you're laid out 5-to-1. And so you have to put up more capital to sustain your longs. And if you can't, you have to close your long position. And so by jacking up the margins in 2011, you could make the argument that it made it more difficult for speculators to operate in the silver market. And sure enough, with several margin hikes over a multi-day window in late 2011, coinciding with the Swiss National Bank's implementation of the Euro-Swiss floor, September 6, 2011, silver prices came off the board and they came off hard. So we do have a margin hike that goes into effect today. Silver margins today after the CME margin hike, they are lower than where they were a year ago. Still. So could more margin hikes be coming? Yeah, for sure. Is that a problem if you are a short-term speculator? Yes, it is. Could that lead to a bit of more of a flush in the market? Absolutely. Is it a risk? 100%. But this is a market that's moving on all sorts of rumors right now. And if you don't have the stomach for it, if you don't have the risk appetite for it, don't trade it. Just make sure, as always, your trades are structured in the right manner. And as for me, today sucks because watching something go from 82.5 down to 71.05 is never fun when you're long. So the position is just back to the value it was last week. And I'm okay with that because the trade is structured for it to survive these kind of things.
I'm okay with it too because I'm going to get in at a lower price.
Here. Let's hope these rumors and these fear-mongering by clickbait rage influencers on Twitter are wrong. I do want to give one more balanced view here, though, because this is, as always, important to provide. For those that are saying, Chris, you're always a bull, this is too much, there's so many negative stats out there, I'll leave you with one more negative one. This comes from Andreas Stina Larson over on Twitter. It's about volume in SLV. Okay, we just had the dollar value of volume in SLV on Friday, top 9.6 billion. There's only been a handful of occasions in which SLV's trading volume has topped 7.5 billion in a single session. This likewise actually comes from Subu Trade. I guess Andreas posted it himself. But you know what? These volume spikes in silver, look at those returns, Thomas. A day later, minus 3.62. A week later, minus 10.45. A month later, minus 12.76. So kind of party boys here. Maybe that's a throwback for some. Choose your own adventure. If you're a bull, skip to page 6. If you're a bear, skip to page 10. Either way, though, this is the most exciting market in the world right now. Just if you're trading it, you got to be very careful.
Yeah, I mean, stats on both sides are a little scary and encouraging, but I'm going to stick to what I've been saying. I'm just going to get in long, and if I'm proven wrong, I'm proven wrong. But I've been holding to my thesis, and I'm going to try to play it out.
Speaking of holding to the thesis, gold today, for reasons unrelated to U.S. Tomahawk missiles and silver, off 4.5%. So that's a brutal loss unto itself. Back to the 1 month moving average, 43.44. I suppose it's rather to be lucky than good, Mr. Westwater. Last week when we were at the 1 DTE, gold finally broke out and got north of 4,500. So we were able to cash that in. I went out in time and bought a $5,000 call in silver due to expire in the middle of April. So today's not great, but we're holding that 1 month moving average. We're holding the uptrend from the breakout at the end of August that we've been riding. We do have a correction to the breakout points of breakout, return to the former breakout level. I mean, listen, if you missed the first move, gold IVR is still 65.7. This is also one of the things that's throwing me off about the metals move today, Thomas. Hasn't volatility been our North Star here? Hasn't the decline in gold, hasn't the decline in silver been marked by a contemporaneous decline in volatility? And yet you're not seeing the vol fall apart today. I mean, look at the vol fall apart in mid-October. When you get your big down move, vol collapses. Bottom panel here. This is the high IVR marked for the month of December right now. So I question this. Has the macro narrative changed? No. So 43, 44 here. Do we have time on our side? The 29 DTE is looking a little rough now because that is a 4,400, 44.25 call spread. I'll still hold on to that. I'll still hold on to the 5,000, 5,100 call spread for mid-April. Uncomfortable conditions, but nothing that says anything is fundamentally officially broken just yet. Holiday hijinks, unfortunately.
Yeah, it's I'm in the April G6, J6. Where's my position at? I'm in the 45.40, 45.50 call spread, and obviously taking some pain today, but my position, it's only down 10% of the total P&L value. I'm going to stick with it. If I wasn't long gold, I think this would be maybe even a better long than silver looking at it technically. But, like you said, the macro narrative, it hasn't changed really. It's a sell-off that's hitting all metals.
Yeah.
I'll want to, get heavier on my position right now. Maybe I'll look at something, a 1 ounce gold future. That's something I was thinking about this morning, maybe throwing it on. But I think I'm going to, I said I was going to keep my exposure a little light through the holidays, and I kind of want to stick to that because that's the plan I made. So I'm just going to let this position ride. I got out of my copper short put spread last week. I was going to roll that, and I just wasn't liking the prices that day. So I got out of there. But I also want to get back into copper because I think the 2026 is going to be a good year for copper. I think this might have a little bit more room to come out of it. I'd like to see how the price develops over the next couple days and then maybe put something on later this week.
Talk about a gap close. Copper prices closed on December 24th at 557.50. We have our obligatory Friday market open because it's illegal to be closed 4 days in a row in the United States. And here we are at 557. Oh, another gap close, Thomas, in the metals. It's like the people came back in. Everyone was drunk the day after Christmas on Boxing Day. And then people decided to show up sober today and go, what was I thinking on Friday? I mean, there's that weird, we don't get paid to believe in coincidences around here, Thomas. So I find it very coincidental that all of the metals gap open higher following Christmas, and they surge on Friday only to close those gaps here today. And then effectively the sell-offs stop and find a line in the sand. You mentioned the 10Z gold product here. It's going to be the same chart that you see when you look at GC or MGC here, but it's a different size. It's relatively new to the platform. GC has a tick value of $10. MGC is $1. 10Z is 25 cents. So the full point multiplier on GC is 100. For MGC, it's 10. For 10Z, it's just 1. It's kind of like trading spot. So I know that Ilya has been using it a lot. I know that you've been dabbling in it a little bit. I've been playing in GC most of the time. Either way, though, there's a lot of different products that you can use to fit your risk profile, right? Fit your risk tolerance at the end of the day. We need to keep moving on from metals here on overtime later. And I did want to get through that note from A.G. Campbell before. I suppose we should push that to overtime. There's a really interesting set of math in there where he talks about the break-evens on solar companies and their profitability and how far silver would have to rally before it would eliminate profitability in solar, which would be demand destruction territory. And Thomas, it's a lot higher than where we are right now. Maybe I texted it to you last night when me and Ilya were talking about the ridiculousness of the market. Let's go over to crude oil now quickly. The energy sector is firmer here today. Apparently, we have Russian-Ukraine negotiations being conducted through Mar-a-Lago, if anyone watched that press conference yesterday. Ukraine responded to the Trump-Putin offer by sending drones to Putin's residency in Russia today. So Russia announced that they will be changing their posture on the negotiations and ceasefire. Oil prices, which took a big dunk on Friday instead of running up back again today, although it's technically an inside day, It's only a 20 IVR. Thomas, like almost everything else in the commodity world, it had a big move on Friday, and it's attempting to fix that gap that we formed starting on Christmas Eve. I don't know if there's much of a story to tell here in crude or in natural gas, except for the fact that you're getting some more movement on Venezuela and Eastern Europe. And I suppose with respect to the former of those two, there may be some scant evidence that on December 24th, we started to conduct land strikes in Venezuela, given some local reporting on the ground, a claim that Trump said today, which came out of the blue, but there's local reporting on the ground in Venezuela that some incident may have occurred at a processing facility on December 24th. So energy firmer here, worth keeping an eye on. The fact that metals volatility is sticking up with these pullbacks, worth keeping an eye on considering the geopolitical news flow in these very thin, illiquid holiday markets.
Yeah, crude oil, it's a good move for me today. I have a iron condor between 57 and 62.5, so we were getting close there to the put side on my iron condor. So I like this where it is right here. If we could just trade range bound through the rest of the week, that would be really good for me. Natural gas, I'm in a position. It's a short put spread at 3.4. I need some more upside, obviously, for this to do something, but I have plenty of time, 57 days out, so I am fine keeping this on right now. And that's in the H6 contract that I was talking about. So yeah, it's thin markets and energy.
It's thin. But but at least in natural gas, there's a ton of vol. 89.3, completely disconnected from anything happening in metals or stocks. Worth taking a look at, in my view. This has been a rough trade. I think that we got into a position a few weeks ago at 50-something days to expiration here. In fact, let me just check that out real quick. When was this trade entered? Yeah. That was, yep. Okay, so December 3rd, over 3 weeks ago. So we're talking about 50-something days to expiration. This trade has done nothing, even though we're still within the strikes. If I were to liquidate it today, because of vol continuing to go up during this duration and the market testing the lower bound of my short put spread side of the short iron condor, I could barely make anything of this. You're telling me I had to sit through all that for $100, Thomas?
So Thursday, there was a holiday or something happening, and the EIA didn't release their nat gas report, so it came out today. We did I don't know if that's right, negative 166 billion cubic feet for the storage report for the week ending December 19th. That's released today. It was just released 22 minutes ago. That's a bearish or a bullish report, bearish on inventories, but the weather is really going to be the mover coming up. The East Coast, it's looking like a little more normal winter weather. A lot of the Midwest and the West is still looking at warm temps over the next first half of January.
Yeah, this weather. I saw yesterday that it was warmer in Cleveland, Ohio, than it was in parts of Georgia. I don't know. I don't know what's going on.
I drove through Cleveland once. It was like 1 a.m.
We'll have to learn more about that at another time. Sounds like it's either a very interesting or very dry story. We'll move over to currencies in the interim. The commodity currencies are the ones that are suffering a little bit more today. We do have New Zealand dollar futures on the platform, which, while there are no futures options, you could trade it outright. If you were to go long or short at thinking about the buying power here, a position is only about $350. Thomas, I point out the New Zealand dollar, I point out the Canadian dollar, the Australian dollar on a day like today because of their sensitivity to the metals. And they really had been beneficiaries of this metals run-up in recent weeks. The dollar is finding some semblance of footing here the last few sessions, although, we had that big sell-off on December 23rd. 3 days of gains have not retaken that move yet. The dollar is still in a downtrend, technically speaking. With all this agita going on right now in the world of metals and everyone's attention there, I can't help but notice on a day like today that the Japanese yen is firming up. Metals off, treasury yields down, stocks lower, and the yen's trading higher. That's nostalgic, Thomas. We haven't seen that in a long time. But this is something that might be working out for us because when the market washed out a few weeks ago, last week, into those lows, we did put on our potential FX intervention, our yen intervention hedge for the holidays, which is long 66 or 67 call spread. It's not doing much of anything. It's made us $12 here, Thomas, so far. This is something that could expire worthless if there is no intervention. And quite frankly, if we start to make our way into January, I think the odds of a yen intervention go down because it becomes that much more difficult to prosecute in the market given the increased liquidity. So we'll see what happens here. But the dollar trying to stage a recovery. I mean, even the euro today only up by 0.13. What's your take on the dollar for next year? Is this the end of the line for dollar selling?
I mean, yeah, it is. Or I mean, I think it is. I would like to, go long dollars in 2026 by short euro or short the pound. But I don't know. Things change. My view on currencies from the beginning of this year, I didn't think we'd see the dollar where it's at right now. So I don't know. I got to really get a game plan on how I'm going to trade currencies. I haven't put too much thought into it versus other things, staying busy with all the fun that metals has been giving us and everything else.
Fun. It has been fun. Even on days like today with getting punched in the face a little bit here. Just brings us back to where we were last Tuesday. And maybe we needed to scare the kids a bit, Thomas. Maybe that's been accomplished. What's next on the calendar? Tomorrow, FOMC meeting minutes for the month of December. That's an interesting curveball. It's an important curveball. Let's see what the Fed really thinks about a January, February, March window, the first quarter for a potential rate cut. Are we really going to have to wait into a new Fed chair? They did upgrade their growth forecast. They did upgrade their inflation forecast. They upgraded their employment forecast. They were really optimistic. What led to that optimism, Thomas? That is what I want to know. And I think the market's going to take interest in it tomorrow. Likewise, tomorrow evening, Chinese PMI data, which is interesting and important and noteworthy, particularly for the commodity currencies. But we'll cover that all more later. We're going to talk about that A.G. Campbell note, again, former head of commodities trading over at Bridgewater and Citadel. Obviously, a very sharp guy with interesting insights. I retweeted the thread in my feed this weekend. I'm going to retweet it again right now. I've been tweeting interesting silver stats all weekend. So definitely follow me at CVECUFX to get more of that as we make our way through one of the most interesting days in the metals market history, Thomas. There's no other way to put it, given what we've seen in the trading volumes coming through. Other than that, though, Futures Power Hour is powering down for now. I'll be back later on with Ilya on Overtime. Be sure to catch that. Otherwise, you're going to take a quick break, and then you're going to come back because Dr. Jim Schultz is here with From Theory to Practice. You're watching Tasty Live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Schultzen, this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Now, welcome to the Monday edition of what it is that we are trying to do. Welcome to one of the final episodes of 2025 edition of what it is that we are trying to do. Man, I'm glad that you guys are here because it is only because of you all that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion if it is live, if it is real time, if it is December 29th, right around 2:30 Eastern, give or take a few hours. Pop in the chat and communicate with your brethren who are also watching the show. Man, I mean, can you celebrate if you're a silver bear today? I don't really know if this is victory lap worthy. I mean, I'll find a way, but I'm not exactly sure that you yourself, sir or madam, if you're short some silver, if you can be taking too many victory laps today. But man, what a 12, 18-hour span in the metals market. So Paul, bring us into the market. Let's take a quick little look at what's going on here. Let me grab, I've been doing a little bit of research on silver. You know, kind of trying to figure out the damage, figure out the wow, man. Silver down $5.82. But that doesn't even tell half the story. I'm not even sure that tells a quarter of the story because, man, this thing was up over 80 overnight. You've got gold down 200. Please, somebody check on your neighborhood local shifty because today is not the day. So we'll get to all that here in a couple of minutes. But some housekeeping really quick. So number one, I am going to be, we're going to the Carolinas on Thursday. So we're driving up to the Carolinas. We used to live in Charlotte for like 7 years. That's where we lived. That's where I started teaching as the beginning of my career back in 2000 and, oh man, is it 2009? That's crazy. Yeah, it was 2009. So it's Charlotte before we went to Chicago to join Tasty, obviously at HQ, and now we're down in St. Petersburg, Florida. But my sister-in-law still lives up there with her husband. They have their 1-year-old son. He's going to be 1 in like a week or so. And so exciting times for the family. So we're driving up there on Thursday. So I'll be gone the whole next week. So from January 4th, I guess, through the 9th, I will be gone, and we will reconvene on January 12th. So right around the time that silver hits either, 110 or 27, like it's basically going to be one of those two outcomes. But I wanted to remind you guys that is coming on down the chutes next week. And of course, if you have any questions for me today, I would drop them in the chat box and I'll try to get to as many as I can here in the next little bit. But man, look at this, man. So yeah, even the S&P's down 26. You got the risk-free instrument down 142. You got the boomers down 214. You got the Russell 2000 futures index down 16. And so, market's a little bit weak today. You got volatility is probably up a tiny smidge, of a titch. I mean, it's not up too much. You got, volatility futures are actually down 30 cents. And then spot volatility is up 50 cents. And so, is Vixpiration on Wednesday? I can't remember. I can't keep track of the Vixpirations and the volatility curve. Like I don't trade volatility directly too often. I'm doing it indirectly through short premium or even long premium. And so I get plenty of volatility exposure indirectly through the options, much like many of you do. But I know a lot of traders like to trade the volatility curve. They like to trade the volatility curve like right on the curve. Like they're trading, volatility futures. They might be trading the VIX. They might be trading like, VXX or UVXY. I don't even know if those products still exist. Do VXX and UVXY still exist? Hold on. Are these guys still around? Or did they take them out the pasture, just like my boy Philip Rivers? Man, over 3. Yikes. VXX, okay, it still exists, down 45 cents. All right, so it's hanging on by a thread. UVXY, $35, down 94 cents. I mean, these are the levered volatility products. Because volatility likes to contract over time. I mean, these things just get ground down to a fine dust over time. And then they have to do those crazy reverse splits, like 10 for 1 reverse split, 15 for 1 for reverse split, whatever. And so I remember that from having kind of looked at or traded the volatility products a little bit back in the day, but that's not really it's not really my cup of tea, or even my oat milk latte for that matter. Like oat milk latte is definitely going to be the go-to here for good old Dr. Jim. So okay. But let's go ahead and, man, I see you guys. Man, look at you guys in the chat, man. You guys have not lost a step at all. I mean, you look a little slower than usual, but you're there, man. You're there. You're doing it. Man, Samuel's in the house. Samuel, I know I owe you an email, man. I appreciate you so much, my friend. So very much. James Bond, Org Denu's here. Brian Dowdy's here. Margin Walker. Man, Rets Media in the house. Man, look at N1C. Look at Emmett Morrison in the house, man. I appreciate you guys so much. Don't forget, guys, nothing has changed and nothing will change, right? 2025, 2026, 2029, doesn't matter. We are all here for one reason and one reason only, for the love of the algo, right? That's the only reason we're here. That's the only objective that we have as a team, as a unit. So I need you guys to get on your horse and get in that YouTube chat to pump this guy out to more people. So, all right, let's go ahead, though. Let's do a quick little, we'll do a lay of the land. So here's what I want to do. So obviously Thursday and New Year's Day, and I mean, we're off anyway, but I'll be gone. I'll be traveling. What I want to do is today we'll do kind of a normal day. We'll go through the portfolio. I'll offer some comments. We might even put on a couple of new trades in like the February cycle, like 53 days to go. That's a really, really long time. Not something I'm be super concerned about, going on vacation. So maybe we'll do that. Tomorrow, I've been talking about this for the last probably few weeks. I've mentioned several times, like, man, we really need to do fill in the blank. Like, I really need to take some time and do, fill in the blank. Tomorrow, I think we're going to do it. Tomorrow, we are going to roll up our sleeves. We are going to put on our hard hats, and we are going to figure out the Starbucks basis. Because, man, look at this Starbucks position. Like, this thing is absolutely crushing it today. Oh, wait, that's SLV. No. Starbucks only up $100, still kind of crushing it today. No, SLV was crazy, and we're going to look at that here in the next couple of minutes. But I just wanted to give you guys a lay of the land for the next couple of days. I actually want to go into the activity page, and we are going to wrangle up every penny. We are going to wrangle up every debit and every credit, and we are going to figure out what is my basis on this trade, because it's been a really cool little year-long case study. Like, I think we did our first trade in Starbucks like December 27th or 28th of 2024. And so this has been a full year's project in Starbucks. Let's figure out where we're at. Because, I mean, if you look at, if I open up my Starbucks position, you can see that we originally bought the shares at 92, and they're currently marking for 85. So you would reasonably conclude that we're down money on the position. But I'm not so sure that we are. Like, I'm not so sure that we are at all, because not only do we have a ton of premium that we've picked up along the way, but also we've got this little leap option that's kind of helping the cause a little bit. And so we'll talk about this. We'll talk about all those things later on. I think we'll do that tomorrow. And then Wednesday's the day. So Wednesday, last day of the year, of course. Probably going to be a crazy, crazy market day. I mean, silver 110.27. I'm thinking when that's going to be when I get back from vacation. That could be Wednesday. Like, that could absolutely happen in the next 48 hours. What we're going to do, though, we're going to go back. We're going to check the tapes, and we are going to go ahead and look at my predictions for 2025. We are going to see how good I was at predicting the major market indexes. I'm pretty sure we did SPY. I know we did QQQ. I know we did GLD. I may have even thrown some TLT in there. I may have even thrown like a VIX prediction in there. I can't remember exactly, what I may or may not have done, but I know I did the major market indexes. So we'll do that. We'll do that on Wednesday. And then, of course, I will give you my predictions for 2026. So you have fadeable content all 12 months of the year. It never expires. You don't even have to roll it. Like, it's just there. It's like long shares. It's like just holding long stock. It's like, it's still here. I can't get away from it. That's what it's basically going to be for you guys. And so that is going to be on Wednesday. And so tomorrow we'll do Starbucks. And then on Wednesday, we'll do the the 2025 results and then the 2026 predictions. So it should be fun. And then, of course, I mean, come, if for no other reason than for the love of the algo, but come and offer up your predictions in the chat box. Like, don't do them today. Or actually, no, what? Do it today. Do it today and do it Wednesday. Because, again, the algo loves that kind of stuff, man. And so, all right, let's go ahead and let's see. I want to... I see Mikos is here, man. Look at you guys, man. Sergio's in the house, man. I appreciate you guys so much. Let's go ahead and let's go through the positions here. I'm going to open them all up. I think I can fit them all on my screen. Yeah, let's open all these guys. Open all these guys up, I should say, and let's go through each one. We only have 5 positions on, so this should be fairly quick. Okay, so first and foremost, we've got our MCL Strangle. Right, you've got MCL at 57 and some change. We have a 50.61 Strangle already in February. We're up about 20 cents on the trade. So what are we going to do? If this was in January or basically any cycle other than February, I would take this off. I would take it off and be like, hey, it's a small green. It's basically a scratch, whatever. But it's like, hey, I'm going to be out of commission for, essentially, 10 calendar days or like 11 or 12 calendar days, but 5 market days. And so 5 regular market days. The futures are probably going to be open like New Year's night and the following day and things like that. The actual stock market might actually be open on January 2nd. Is the stock market open on January 2nd? Somebody help me out in the chat. Is the stock market regular trading hours? Is it open on January 2nd? I know we're dark, but I'm thinking maybe the stock market is open. I thought I heard something about maybe making it a federal holiday and closing it down. I don't know, but let me know in the chat. I want to know. The algo would love to know. And so put that guy in there. And so for MCL, I'm going to sit tight and do nothing. I'm not going to do anything on this trade because we have plenty of time to go. It's 50 days left. And, we're comfortably situated between our strikes. If I was up more money on the trade, I would consider maybe taking it off. But because we have so much time, all the Greeks are softened. When you have more duration and a greater amount of DTE in a given trade, the way things are going to move around is going to be a lot softer than something that's 21 days or 14 days or 7 days. Or obviously any 0 DTEs for the Shooter McGavins that might be watching the show. And so I'm going to sit tight and do nothing. And those are all the reasons why for MCL. So MCL, over and done with. All right, let's close that guy up. Costco, man, this thing just can't get out of its own way. So we've only got 18 days to go on Costco, and we are down about $2 on the trade. So, we have a $10 wide vertical spread that we bought. So we bought this call spread for $5. So it's basically a classic risk one to make one scenario. So this is a classic risk one to make one scenario. We have an 880, 890 call spread, long, of course. You've got the stock at 867. Unless something drastically changes in the next 2 days, I'm just going to leave this on. I'm going to leave this on through vacation, even at 18 days to go. And there's essentially 2 reasons, well, basically just 1 reason why I'm going to leave this trade on. It's defined risk. It's a defined risk strategy. So I don't need to go in here and feel like I need to, control risk and take positions off and put myself in a position where an outlier move is going to, not be super, super damaging. When you have an undefined risk position, that obviously is always on the table, right? Some scenario where you get this outlier move and some scenario where you have to deal with, I read something like, guys, help me on this one too. Friday's move in silver, when it was up like 11% or whatever, like the day after Christmas, that move in silver was a 4.5 standard deviation move. It was either 4.5 or 5. Somebody check me on this. 4.5 to 5 standard deviation move. I also read the likelihood that you get struck by lightning one time in your life is like a 4.5 standard deviation move because it can only go to 6, right? Like 6 is the max. Like 6 is the tippity top or the bibbity bottom, depending on which way you want to look at it, right? So you get struck by lightning, 4.5 standard deviation move. Silver's move on Friday, 5 standard deviation move. That's crazy stuff, man. Like that's super crazy stuff. And so for Costco, I'm not super worried about that because, it's a defined risk position. So maybe it'll work, maybe it won't. But for right now, I don't really feel the need to go in there and kind of override the process. Let's just let it cook. Now, that might change in the next 2 days if Costco rallies, if the Santa Claus rally is back and everybody's excited again, it's strawberries and sunshine and, that Costco drip, then maybe I'll take it off, the next couple of days. If we do have some kind of economically significant profit, then maybe I'll take it off. But if nothing radically changes about the the situation of this spread, I'm just going to leave it on. And so that is Costco. Okay, so Nike, This is an undefined risk position, but this is a short put that's slightly in the money. We have the stock at 61 and we have a 62.5 put on Nike. So what are we going to do? Well, this is where I like to tap into, in my opinion, the biggest benefit of short puts. The biggest benefit of short puts, in my humble opinion, is the simple fact that if it comes down to it, you can just take the stock. If it comes down to it, you can just take the stock, you can hold the stock, and you can play it for the long term. And so you don't necessarily need to go in there and override, the process, even if you're going to be out of commission for a couple of days. Not to mention, we're talking about a short put in Nike. This is not Snowflake. Right? This is not like the silver miners. Like this is not like, Tesla. Like this is Nike. Like, yeah, sure, it could still be down $10 in a couple of weeks, of course. But is it going to be down 20 or 30 or 40? Probably not. Right? So are we going to have a 30, 40, 50% move in Nike in 10 days? It's very unlikely. Is it zero? No. Probabilistically, it's not zero either. But I'm willing to kind of push my chips in the middle on the simple fact that that's not a super high likelihood event. And so I'm okay sitting on Nike. We sit tight, we do nothing, and we're long-term investors in Nike now. And that's just the way that it is. And so that's Nike. Starbucks, I already talked about Starbucks a little bit, and we'll talk about this a lot more tomorrow, of course. But I do want to point one thing out that I think is super interesting. Take a look at this, this long call that ended up being, this thing is really, really helping us out significantly. It's intended to be kind of, some extra shares. And so I'm not really in a huge hurry to take this position off. We've still got 55 days or 53 days to go. And so this was intended to be kind of like a longer term play from the beginning. This was not like an in at 45 out of 21 type of deal because I wanted it to match the general spirit of the Starbucks position from the beginning. But take a look at the extrinsic value in this position. So I think this is really interesting because and then you can even look at the theta on the position too. This really illustrates how beneficial it can be to use something like a leap option if you want to have some substitute or synthetic directional play that doesn't require all the buying power that long stock does or even short stock does if you wanted to compare it with like a deep in the money long put. Generally speaking, when you're that deep in the money, like we can even, I want to bring this guy up on the chain. Let's look at the 55 call on the option chain. So if I go into, I'm assuming it's like a 90. Oh, it's only 80 delta. Wow. Oh, wait, hold on. That's Nike. No. Let's look at Starbucks. I was like, that's not right. Yeah, let's go to Starbucks. Ooh, Starbucks has earnings on January 27th. Interesting. Okay. Yeah, 95 delta. Yeah, I was like 80 is way too low. Yeah, here you go. 95 delta. So essentially what I had, and I don't know what it was when I bought it. You could actually go back and you could see. In fact, here, hold on. Let me bring up my, let's move and migrate from the option chain over to the Allison chains, which some people would refer to as the order chains, but we know it's the Allison chains. Let's open up this man in the box. And you guys can see that we did this trade on November 3rd. And so again, one of the things about the show, I don't plan on changing this for 2026. I've gotten lots of great feedback about this component of the show for many years now, so I'm not going to change this. I try to do all my live trading on the show, especially all the trade entries. From time to time, we have to exit a trade off air if it's a butterfly or something, but I even still try to push those guys out until the showtime, and that usually burns me. Like that usually ends up kind of punching me in the kidney one final time. But November 3rd, we did this trade at 223, so you can see I did this trade during the show. So this was back when the show was at 2 o'clock, which is the time it was at for the longest time. And then with all the scheduling changes and the programming changes, we moved to 2:30, which I don't know if that's an uptick or a downtick. We're on the janky strike now, so it's probably an uptick for that reason alone. Like we were on that whole number strike for a while. Then when you move off to a janky strike, it's got a bit of newness to it. Like it's got a whole new novelty to the thing. And so that's kind of nice. But if you go back to November 3rd, you will see me put this trade on. You can see for yourself what the delta was at that time. And it was probably around 85 to 90, I would imagine. So now some time has gone by and Starbucks, has gone up, I think, from the time that we put that on. So what is happening to that delta? It's growing. That delta is strengthening. That's the charm on the position. But still pushing very hard to get charm on the platform. But, I've been doing this for 3 years now and it's fallen on deaf ears. So I don't know if 2026 is going to be any different, but I will keep pushing for it. And so that charm is causing that delta to strengthen for an in-the-money option, just like it causes deltas to deflate or weaken for out of the money options. And so charm works both ways. It's quite charming in that regard. And so if you look at, that was bad, man. Hey, I had a little time off, and the dad jokes are still right there at that C+ level. Some of the other humor might actually tick up to B-, but that guy was very, very, very C+. So anyway, not much extrinsic value bleed off of the deep in the money call for Starbucks. So that's nice. I mean, that's what you want on a position like that. And so, all right. And so lastly, silver, you know, we've got 53 days to go. I mean, this guy is, so if you're looking to trade high IV rank, I mean, this is it, man. Like this is what you've been wanting to trade. Silver, gold, maybe the miners, whatever. Right. And if we do a new trade, I might do a new trade in the miners here, but we're getting kind of close to the halfway mark. So I don't even know if I'll do that. But silver, so this is tricky, right? Because it's silver, right? And like silver lately is like, I mean, it's crazy. Like if I look at the silver chart, the futures chart from last night, it was over 82 last night, I think, right? Like if I go to the chart of silver, yeah, look at that. Ooh, man, that is the final boss. Bearish candle. By final boss, I mean, that's just the little dip before the mega rip. But if you look at SI here, 82.67 last night. 82.67 last night. Man, that's really something. I mean, they gapped him up and then they pushed him to 82.67 and then they just totally reversed course. And I think everybody lost money on this move. I think the longs lost, the shorts lost, and all those kinds of things. Obviously, if you bought silver back at like 25, you probably at least broke even on the trade. But man, last night's move was vicious stuff. And so, obviously silver can move and silver is pretty crazy, but this is only a one lot. It's a one lot in SLV, right? It's got 53 days to go. So the Greek, exposure is still kind of muted. I think I'm going to leave this trade on. So I think I'm going to leave it on because it has so much duration. Again, if I was in January, if I was in anything other than February, I probably would take this off or roll it out to give myself more time and kind of soften those Greeks. But I'm actually in a situation where if we get silver to just calm down a little bit and tick a little bit lower, like if this thing ticks down to 61, 62, we're going to be in a really, really good spot. Now, what if, if you go to SLV, I think it was over 70 last night, maybe 71. Yeah, so this guy was, the high for SLV, 66. No, that's not right. Hold on. The high was, 71.22. Yeah, so if it goes back up to the high, 71, 72, 73, then we're going to be hemorrhaging some cash on this position. But still, you have to, apply the proper filter here. You're talking about maybe $10 or $12 on the option contract, which is, there's nothing to sneeze at. Like, don't get me wrong. But it's not going to be something that's going to be totally catastrophic for like a $30,000 account. So you want to be mindful of, the sizing, damage control, what does an outlier move look like in terms of the dollar amounts for the actual account value? I think that can be really, really helpful. And so for SLV, I'm actually going to sit tight. I'm not going to do anything. So we're not going to take anything off today. Again, I reserve the right to change my mind tomorrow or Wednesday if the winds should blow us in that direction. But for right now, we sit tight and we do nothing. And so, all right, let's go ahead and I see you guys in the chat. Man, I appreciate you guys. You guys told me that January 2nd, it's open. Thank you so much. I see you guys. Nicholas Visone, Visone? It might be Visone. But I don't see the little thing over the E, so I'm going to say it's Visone. Vizone. I think that's right. Nicholas Vizone. Thank you there, Nicholas. Margin Walker, James Bond. Appreciate you guys. M.M. Morrison. Appreciate you guys. E-Media. Appreciate you guys. Let's go in here, though. I want to do a little, I'm going to do GDX. So one of the gold miners, we don't have any position on gold right now, and I feel a little bit incomplete. I'm like, man, we got the silver deal going on, but we need a little gold action too. Gold's been very much in play. And so, gold, futures down 200 points today. This morning they were down to, were they 4,300 at one point? Whew, man, look at that. Yeah, 43.16. So that's 35 points lower. Yeah, man. Wow. So that could have been, it could have been. It was, but that was 230 points, 235 points down on the day. I was looking at this. I'm like, man, I'm getting ready for obviously the show with Tony and Nick. And, I'm like, man, is this thing going to drop 400 points today? Like, are we going to see gold down 400 points, silver down like $14 in one day? I'm like, man, that's crazy. That's some wild stuff. But let's get into GDX. And I think for this trade, the IV rank is 77, right? You've got market VIX at 14. You've got slim pickings across the board. You're like, man, I can't do anything. I can't find anything to do. Like everybody's crying. Everybody's just hugging each other. Like it's going to be okay. There's going to be greener pastures on the other side. And that, of course, means the VIX is going to 11, 12, whatever. Look at gold, 77 IVR. Look at silver, 83 IVR. Like this is where you want to be. Like this is what you want to be trading right now. Now, again, right, you got to be mindful of size. You got to be very mindful of what it is that you're trying to accomplish here. And so for GDX, I'm thinking let's go to February and let's not reinvent the wheel, man. Like let's just sell a strangle. I don't know, maybe a 17 delta strangle. Like I grabbed this 17 delta put right here, 74 put, right? So we'll do that guy on the put side. So I sell a 74 put. I go to a 17 delta call, and that's going to be, looks like there's a little bit of upside skew. That's going to be my 103 call. I sell that guy for $1. The markets are pretty wide, actually. 279. Wow, those markets are super wide. Were they wide on the put side, too? I mean, look at these markets. Are these some Vinny Batista holiday markets? Yeah, you know he's going to rip you off on some Vinny Batista holiday markets. Like he's taking after his dad, no doubt on that one. But man, look at that. Is it like that on the put side? Or are they just going to jam it to you on the call side? Hang on, I'm curious now. The 74, where's this guy at? No, the markets are much better on the put side. And so more like 5 to 10 cents wide, generally speaking. There's a couple guys that are over 10 cents. But I mean, this is, the gold, gold spot, gold ETF, gold futures, gold miners, right? Like gold infomercials, like all these guys are going to have super, super wide markets. Just because, there's a lot more activity, and this always happens. I mean, this happens to like SPY around a Fed announcement. Now, again, it's SPY. So it expands from 1 cent wide to 4 cents wide. So it's not really that big of a deal. And a lot of times we don't even notice it, but the same thing is happening when something is really moving or something is in play. And it's kind of like, there's a lot of information that's happening. And, there's just a lot of different things going on in that specific market. It's very common for the bid-ask spread differential to widen out. But I still want to do the trade because, I like the trade. The buying power is very reasonable. It's under $1,000. You can see that guy right here. Under $1,000. My pop is 75. That's pretty solid. My P50 is 85. That's also pretty solid. My credit collected 279. That's not bad. Max loss is negative infinity. That would happen, of course, if the gold miners printed positive infinity, which I did check Polymarket this morning. That's an 8% probability in the next 53 days. And so it needs to be factored in accordingly. But I like the rest of this trade. And let's try the mid price is 270. Let's give it a shot. Famous last words. What could possibly go wrong? So let's go ahead and do, 262 maybe? We might get a little, all right, so we got filled at 262. Okay, perfect. Market's rallying a little bit. You got EMA S&P's down 19. Got silver on the move. Silver only down 539 now. Got gold on the move. It's down less than 200. And so, man, let's go. Let's go. All right, so I'm ready for you guys, though. Man, where are you guys at? Let's see here. Let me try to surprise and delight somebody in the middle. If I can find, man. Here we go. DTM Lao. This might even be closer to the beginning. DTM Lao says, Dr. Jim, I have a silver strangle that's been rolled to and out into a 68.5 straddle. I was buying stock along the way to try to hedge the position. So now I'm long 100 shares of silver at 63.75-ish. Do I sit? Okay, so I was buying stock along the way to try to hedge the position. So now I'm long 100 shares of SLV at 63.75. And you have a straddle. I'm assuming you have both of these things, right? Yeah, okay. So you're obviously long some SLV here. A great number for you. It's still 68.5. That's the perfect number for you because that obviously pins the straddle and you're able to pick up, a few pennies, not really pennies, but you pick up, a decent profit on the long shares. Looking at it, you basically you've got a 68.5, you said? Yeah. And so, yeah, 65. This is not a bad price for you either. This is about break even. Right, you've got 100 shares of SLV, 63.75 is your basis. So you're up a couple bucks on that. You're down a couple bucks on the straddle. Well, you're down from the strike. I don't know what your actual credits collected versus mark price of the strategy is right now. So this is probably not break even for you. You're probably down a little bit when it comes to the actual straddle and the rolls. But this is not a bad price for you. And so it all depends on your outlook on silver. Right? Right here, you're still going to be bullish on silver, of course. You would like it to run up and pin the 68.5 level. If it does that, then you're in a really, really good spot. If it expands too far above 68.5, because you have the long shares, you don't really have a ton of risk up there. You may not have any risk up there now I think about it. Yeah, you won't have any risk above 68.5 because the long shares will cover the short call. you've just got, the short put. And so basically this is a great price for you. So you need silver, much like I do with my strangle. You need silver to calm down. If silver can calm down like right at this level and let the credit, bleed off of the straddle, let the extrinsic value come out, then you're going to be in a really, really good spot. And so your initial inclination, like, do I just sit? I think it's a reasonable option at this point. You could consider, closing out certain elements of the trade. I mean, what would you close out? It all depends on, what your bias is on the position and, how you see silver moving, forward, because, you're not in a situation right now where you're overstressed on either side. You're not like, man, like I'm hurting on the downside. I need silver up a lot. I'm hurting on the upside. I need silver down a lot. You actually just need silver to be right here, maybe slightly higher, but this is not a bad outcome for you at all. And so, it sounds to me like your initial inclination is indeed to sit. I think it's okay. I think it's fine if you feel good about the position and you are slightly bullish on silver. You think it might calm down. Obviously, if it crash boom bangs and SLV drops under 60 in the next couple of days or whatever, then that's where your pain point is, of course. And so, but you've got a little bit to work with right now, especially on the shares themselves. And so, yeah, I think sitting tight might be the way to go. And so let's see. Let's go back to the beginning, man. Where are we at? Sam L in the house, man. I appreciate you, brother. Appreciate you so much. Sam L, welcome back, Doc. How did the Christmas party go? Good entry on the daiquiris. A clean exit before the slippage kicked in. Yeah, they didn't have any banana daiquiris, man. It was very, great host. It was a great party. There's like 70 or 75 people there. I mean, there's a lot of people there, mostly kids, because we all have kids around the same age. And so, like, there's 2 parents, right? And then there's like 9 kids, like per couple, right? Now, like, we're on the lower end. Like, we have 3, obviously. A lot of our friends have like 4, have like 5. Like, homeboy rolls in with 6. I'm like, dude is just rolling 6 deep. I mean, they just keep coming in, man. They just keep coming in. I'm like, man, is this going to end? Like, no, this is not going to end. And so there's kids everywhere. No banana daiquiris. I was very, very disappointed. And so maybe next time, though, maybe I need to host my own party. Like, again, if you don't like the way something is done, you do it yourself. Right? You absolutely 100% do it yourself. No, the party was super fun. If for every other reason than there not being banana daiquiris, but yes, thank you there, Sam L. It was a good time. And then Sam L says, Doc, great interview with Nicholas. Didn't know you had a PhD in philosophy. Yeah, I didn't know that either. Explains the deep thoughts in the legendary P- humor. Yeah, that was a really great interview. It was like an hour and a half long. I had no idea how long it was going to be. I thought it was going to be maybe 15 or 20 minutes. And the next thing I knew, like, we just went 90 minutes plus. And like, it was great, man. Nick was great interviewer, like really good questions. And I really enjoyed getting a chance to kind of share more about like how I grew up and like things like that. And then kind of, he wanted to know like the whole story. So we talked about, my PhD work. We talked about, my Mad Minute days, like back when I was just a little guy, like 7, 8 years old. That was actually, that was the first time I kind of realized, I'm like, man, I think I might want to do something with math, with my career. I was in like 2nd or 3rd grade or whatever. And so that was cool to kind of share that story. And then, all the other things, like wherever, like where it took us. I mean, Memphis, Charlotte, Chicago, all that stuff, obviously down to Florida. And so, yeah, it was awesome. So check it out. I posted it it should be right there on the Tasty Live Show timeline, because I retweeted it and I tagged them. So if you go to Tasty Live Show, their timeline, or you go to mine at Jay Schultz F3, you'll find it either place. And then go over there, check out Nick's YouTube channel, give it a subscribe. He interviews a lot of really great traders. He even interviewed Tony Batista a few weeks ago. And so, so there you go. But I appreciate you there, Samuel. So James Bond is in the house. Happy Monday, Dr. Jim. Do you get short selling calls or call spreads in SLV? Has a juicy IVR. Do I have any thoughts? Well, yeah. So for me, I'm a little bit short. I'm like baby short with the strangle. But I have both sides obviously working for me on that strategy. I mean, obviously the time to get short would have been Friday on the close. I mean, that was the time to get short, but that looked like, this thing was going to gap up to 82. And that's basically what happened. And then, of course, it just pulled the rug out and it reversed course, but it could have just as easily gone to 90 or 91. And it may still be headed to 90, 91, right? And so it's always clear and obvious after the fact. But I'll just say this. Whatever direction you want to play in SLV or some other, silver product, you can do AG or whatever. This is the time to do it, man. I mean, you've got IVR north of 80. right? So it's like, man, if you want to be neutral, be neutral. You want to be bullish, be bullish. You want to be bearish, be bearish. I mean, there's so many reasons why you could choose one side of the market relative to the other. I mean, you've got the China ban that's coming on January 1st. I mean, the internet just took that and ran with it. And they were like, man, this thing is gapping up to 100 on Sunday night. I'm like, that's probably not going to happen. But it did look like it was going there, like gapped up to 81. And then it was on its horse up to 82, 83. I'm like, wow, are the internet bros correct? They've never been correct not one time in their life. Is tonight going to actually be the night? And of course, it was not. But you could, you could be neutral. You could do whatever. And so again, this is what we want. This is what we train for. This is why you do all those extra sets of walking lunges when you don't want to do that. It's for moments like this. And so I would, I would give it some consideration for sure. Or Daniel, hello. Excuse me. Hello, Dr. Jim. Hope you had an amazing Christmas. Wishing you all the best. Thank you for all the good things that you do, man. I appreciate you so much, my friend. Thanks for being a part of the mission, man. Thanks for being a part of, the mission, being a part of the network, and obviously my show and the other shows. And yeah, we just couldn't do what we do, man, without you guys. And so I thank you guys so much from the bottom of my heart. Like, it just really, really, truly means the world to me. And I'm very excited for 2026. I think it's gonna be a year to remember. And so Brian Dowdy, hello, Dr. J. What does the schedule look like this week for you? So I went over that earlier. Hopefully that you caught all that, Brian. So thank you, my friend. Oh, Brian says, looks like your video is working again. Yeah, I don't know, man. It's finicky. But they sent me some new like chords and stuff. Ryan, thank you so much in production. Sent me a few new things that should help the signal flow from like my camera, my microphone, and the other audio interface. And I may be going to get a new modem today at Spectrum. I'm going to try to get it. I don't know if they'll have them like on hand. But we're trying to do a couple of things just to try to reduce the probability of lagged videos, because there's no reason why I should have lagged videos. It's really, it frustrates me to no end. The camera's a decent camera. It's not amazing, but it's decent, right? I mean, I've got a gaming laptop. It's like, man, this thing should be able to handle, 500 horsepower, and I'm just asking it to do like 3, and it can't do it. So anyway, hopefully it'll be better. But Margin Walker, what's going on? My man, what is happening? Let's go get it, man. Let's do it. I'm here. You're here. We made it. Very exciting time of the day for both of us. And so thank you. Thank you so much. Let's see. Samuel, yo, Algo, market's red, market's green. Doc still wins by narration. There you go. There you go. I appreciate you, my friend. Thank you so much. Let's see. James Bond, by the way, who do you like tonight? Rams versus Falcons. Rams and Falcons. Man, I mean, the Rams are like, aren't they still playing for the number 1 seed? I think they still got a shot at the number 1 seed. And maybe Seattle has it locked down in the NFC. I'm not sure. But I'd have to be all in on the Falcons, man. Kirk Cousins has been my guy from the beginning. I mean, you go all the way back to like 2017, 2018. Like, you will see me wearing Michigan State Kirk Cousins jerseys on my show. I'm not making this up. Go check it for yourself. It's all there. It's all on tape. I mean, I'm going to have to go in and doctor some of those tapes, but it'll be there in the next few hours, right? Kirk Cousins, Michigan State. He's my guy, been my guy from the beginning. So, yeah, I'm all in on the Falcons. And so let's see. Brian Dowdy, would you feel comfortable going long silver? Sure. Feeling uncertain if it's going to drop further down or if it's just a dip from low liquidity. Yeah, I mean, everybody feels that way. Everybody feels that way. And so right now I feel like silver is kind of in a weird spot, right? Like, I mean, if you're looking at SLV or you're looking at the silver futures, you essentially arrive at the same conclusion, in my opinion, where it's like, okay, being a short-term contrarian, which I understand some people are momentum traders or whatever else, like this, that, and the other thing, silver high 70s, silver 80, I was like, okay, if I'm going to play this directionally, got to play it short. Defined risk, whatever, that's fine. Or undefined risk if you don't want to sleep ever again, that's fine too. Again, that's what makes a market. You've got to blaze your own trail. But I was like, okay, it looked a little bit more slanted to the short side. Now I feel like, I don't know, man. Like, it's kind of like right in that limbo space. Like, okay, is it going to rip right back to 80? Or are we going back to 65 on the silver futures? Like, that would be crazy. Or is SLV ripping right back to 70, 71? Or are we going to 60, 61? I mean, it's 50-50. It's always 50-50. So the fact that I'm highlighting it now doesn't really mean anything. But yeah. And so that's kind of how I look at that. And so, I got back to the surprise and delight. Yeah, that's always a big milestone for me in a given show. And so there's DTM Lau. I appreciate you, my friend. CML says, Doc, you nailed the top on SLV. Did I call the top? I don't remember calling the top. But if that's the way that you remember it, like, don't change that. Like, if you remember me calling the top on Friday, or I guess it would be Wednesday, whatever. Man, Wednesday. Where was silver on Wednesday? Wasn't silver like 67 on Wednesday? Yeah, hold on. Let's go back. Where's Wednesday? December 23rd, right? No, that's wait, that's Christmas Eve. No, Christmas Eve is 24th, obviously. Christmas Eve was Wednesday. December 23rd was the last was our last show. And silver, yeah, look at that. Silver was at so it was at 70. 68, 70, 69. I mean, I don't know. I mean, I'm going to take a victory lap since you just served one up to me. But it's like, okay, if I did call the top then, which I may have done that. I don't remember doing that, but that does sound like something I would say. No one calls this kind of top better than Dr. Jim. Hey, silver's not going any higher. It's at 70. Like, this is it. It's over. Silver goes all the way up to 82 and some change and all the way back down to 70, right? And I'm taking some victory laps. That sounds exactly like something I would do. And so thank you there, Samuel, for reminding me of that. But that's pretty funny. Somewhere the Hunt brothers are checking charts and wondering what went wrong again. Yeah, apparently they're going to raise margins today. The CME has decided to increase margins. I think it's in effect at the end of the trading today. I don't think it's going to be a huge change, maybe like 10% or something like that. From what I understand, because I mean, you couldn't exist on the internet this weekend without hearing everybody's take on silver. Like, you could not venture out into cyberspace and make it more than 3 feet before you are met with the silver bulls, the silver bears, like people that just bought their first silver coin. Like, they were all coming for you. Like, they needed to make sure that you knew their thoughts and opinions, and you couldn't avoid it. But one of the things I think I remember hearing was back in the Hunt Brothers days, the late 70s, early 80s, when they cornered the market and drove silver up to like 50, 55, whatever. I think the CME, or the artist formerly known as the CME, whatever was the governing body at that time, I think it was the CME, but they raised margins like by like 50 or 60%. And so, I mean, just think about that, right? Like, if you're a futures trader, and even if you're sizing responsibly and, you know, you're not over leveraged and leveraged to the hilt and whatever, you're just doing things like the way that you would normally do them. If you come in one day and your leverage is X, and then you come in the next day and your leverage is 5X, man, that's going to be really hard. Like, that's going to cause you to make trades and to adjust your positions that have nothing to do with your thesis or the actual, you know, structural demand, supply, whatever. And so I think that at that time, you know, that could be part of the reason why the silver market went down so much. You know, obviously it's all obvious after the fact, but again, I don't know that this little 10% deal tonight is going to make that big of a difference. But don't worry, the internet bros will let you know their thoughts after it happens, of course. And so it will all be crystal clear. And so let's see. Oh, Rets Media says, please don't go long silver. I'm already long silver. I got you, man. I'm a little bit short silver, so you should be good there, Rets Media. I'm a tiny little bit short silver, so you should be fine. Emmett Morrison, happy Monday, Dr. Jim. What's going on there, Emmett? Appreciate you, my friend. Rats, I sold some pets. I got to pay for my steak for January 1st. Dinner help. Dictation stinks. I sold some puts. Oh, I sold some puts. I sold some pets. I'm like, hey, man, like, you just got to make it happen right now. Like, this silver move is crazy. You got to sell some pets. Sell some pets. You sell some pets. Like, you got to sell your birds. You sell your birds. Like, you got to, you know, just toss a kid on Facebook Marketplace. Just give it a shot. You don't have to accept the offer. Just see what's out there. Just kind of throw some feelers out there. Like, hey, man, you know, you got to do what you got to do. And so I understand. But, oh, man, I got to go. I'm out of time. Wow, this is so fast. It's just as fast as it's always been. So that's crazy stuff, man. Crazy, crazy stuff. And so, guys, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80.
Hello, hello. Wow, how are you doing? It's been a little while. Tim Knight here, and we're doing charts, of course, as we wind up 2025. I last saw you, I guess, on the 23rd, and it's been pretty quiet until now because of what's going on in the precious metals markets. And I've got an interesting relationship with these. Those of you who read Slope kind of know this already, but put it this way. Like, I remember some weeks back, Liz and Jenny had me on their show, and they said, what is your one top pick? And I had said palladium. And I felt a little bad after that because palladium had already gone up like 40%. I thought, well, that's kind of a dumb thing to say because it's already run that race. But it actually, that was just about when it was about to go flying higher. And I had sold my own palladium stake shortly thereafter, thinking I'd done just a crackerjack job. But of course, that's when it was just starting to cook. And I've been beating myself up about that nonstop. So in a weird way, even though I was absolutely right about palladium as far as an opportunity, I was so relieved to see it basically plunge over the past few hours since basically we opened Sunday on the futures. So precious metals have gotten white hot, and I've been thinking they're getting kind of long in the tooth on this rally, especially when you see the likes of, rich dad, poor dad guy finally come out and say, it's time for silver. When the real pop culture types begin to get on board, it's probably over for the moment. And that seems to be the case. So we're going to look at some of those together. To be clear, I still think long-term precious metals are going to do great. I also think that today is not a one-hit wonder when things get cheap and you can just get back in again. We're probably in for some form of selling for weeks to come. The last time this happened, it took a good 4 or 5 weeks to kind of shake people out and get them bored again with precious metals. So hopefully that'll happen again this time. Anyway, let's jump in and look at the charts. We begin with the spider, which is down a little bit. I don't know how much precious metals have to do with any equity weakness right now, but we are red across the board. Not by much, but the important thing is that there's been no follow through. We had a breakout here, and then it followed through the next day, and then today has undone all that. So we have it's pretty minor, but we do have a failed bullish breakout on our hand. So things are not looking too crisp for the bulls. The cubes, that is the NASDAQ, it's even more weakly configured. In this instance, whereas we were at lifetime highs just the prior trading session, this time with the cubes, the lifetime highs were months ago, a couple months ago. And since then, all we've managed to achieve is a lower high here, which did not even seal the gap, and then a lower high here. Right, like so. And so we're getting, it's very modest, but you are getting just a slowly downtrending market, or at least you can say that the highs that are achieved are lower each time. So here's the peak, lower high, lower high. So definitely a degradation in the mojo they were showing through this state. This was just relentless powering higher. And we're not going to bother with XLP. As far as the precious metals goes, that's where I'd like to spend a little more time than equities today, because it really merits observation. I've been talking a lot about precious metals the past few months, particularly the last month. So we're starting here with gold. It's down hard, 4.23%. It has also failed its bullish breakout. So we can see here, we have this cute little cup with handle patterns here. There's the cup and the handle, and we got a breakout here, and it just goes flying higher. And more media attention is placed upon precious metals. And today undid all of that. It undid about 7 trading days of gains. It has put us back to prices that we saw in mid-October, and we have broken below this breakout area. And, as I say, this is a failed bullish breakout. I don't think it's the end of this, but the last time we had a good wallop was right here. And it didn't fall one day and then reverse. It fell and then went, it was sloppy, but lower and lower and lower. And finally, it's going to take at least a week or two, at least, I would think, to shake out the weaker hands out there. And so after the last time we got hit, which is kind of a similar drop, we bottomed right along here a couple of weeks later and slowly began to heal. And it was kind of tentative and hesitating because a lot of people got hurt in this and they didn't fully trust the market again. Same deal in this instance. Now, as far as GLD itself, the ETF, obviously the chart looks the same, but it merits a glance because we still have the same phenomena of a wrecked bullish breakout. So here was the former high. We just leaped right over it, and then it was up, 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 finally peaking here. And if you were watching, as I was on Sunday, it continued. Gold shot higher, silver really shot higher, palladium really, really shot higher. But at the time, and I did a quick little post on it, and I said gold looked wobbly, not a very sophisticated term, but it seemed tired. And gold is vastly larger and vastly more important than the other metals. And minutes after I made this wobbly remark, things got sour fast. And so here we have GLD down 4.28%. And the situation you've got in this is that you have a lot of people trapped in a manner of speaking, at those high prices, at those recent high prices. Some portion of them are dying to get out already. This is a mistake. I want to just trim my losses or maybe get out flat. Just get me out of this thing. And so you got to cut through that selling pressure before you can resume any sort of resumption of the rally. So, again, I think today is the beginning of something that'll probably go on for some number of weeks before the media stops talking about precious metals because everybody's so disgusted with it, and then we can start to kind of base again. Here is SLV. And to the point I was making about people feeling kind of trapped, this is an abandoned, there's a number of terms for it. It could be an island reversal pattern, abandoned baby pattern, if you want to get, anthropomorphic about, a little histrionic about it. But the fact is that all this trading here, which ended on a high, everybody here has a losing position. And they want to get out, some of them. And as we back away from this, you can see that the last good base was like so, and we went up tremendously since then, almost uninterrupted, like so. But this is a pretty nasty reversal on that, and there's a lot of people scratching their heads about what happened. What was the source of this? The one that gave me the most personal relief, as I've said, was palladium. We traded today at the same price as we were trading way back in the middle of October. And in terms of the last time this happened, very similar to here. So notice this was a peak. Then we had a gap down, big red day, and then weeks went by, just grinding away and grinding away and grinding away. And it finally bottomed here on November 21st. And now in retrospect, we can see that that was a great time to buy because it had a steady ascent. And then things just went bonkers around a month later, a couple of weeks later, around December 11 or so, where it really accelerated. And you would have 4%, 5%, 6% up days day after day. But that's all gotten undone in a big hurry. And we'll see how long it takes to heal. Platinum, same deal. Not as big a percentage drop, but substantial, over 12%. So that's PPLT. And of course, with all this going on, the miners are down 5.7%. They are testing their own support here. This could well break, but that hasn't broken so far. But we do have a tumble back down to the same levels we saw in mid-October. And naturally, anybody loony enough to about dust, it's doing nicely today, up 11.4% on the leveraged bearish fund against miners. I didn't have positions in any of these except for XME. I think I mentioned this in passing last time. And so I'm short XME and just tightened up my stop on this. And this is down about 2%. Not very dramatic, but I'll take it. The crypto crowd's been getting really exasperated with the precious metals folks because the precious metals folks have been kind of rubbing it in their face. They're not getting, crypto's not getting much in the form of relief today. I'm sure they're glad to see metals getting clobbered, but BTC is barely changed. It's down about 0.25%. Interestingly, MSTR, which is basically just a Bitcoin holding company, is down percentage-wise over 4 times as much as that. So they've had a dreadful time, of course. So that's our whirlwind tour of precious and crypto. I've got, just peeking at the time here, a hodgepodge of short positions, most of which are down today. Here's just a few, just to kind of thumb through a handful of them. One that I got back into a few days back, so far so good, is Chipotle, CMG. This is down today about not quite 2%. We've got CrowdStrike, CRWD, we're just down about 1% and just about to complete this very good looking topping formation. Like so, it hasn't completed it yet, but it's getting tantalizingly close. Here's ON Semiconductor, ON, which is down about 1.71%. Our old favorite Oscar, which ugly as the chart is, best percentage performer for me amongst all these shorts. It just keeps slipping. And so today helps almost another 3% sliding off of Oscar Health. Royal Caribbean, RCO, this is down about 1.5%. And that continues to look good. We completed this pattern a while back. We fell hard, retraced, pooped out beneath this pattern, and are starting to resume that weakness. ALB, nice down day on this one, over 3% down. And this is a very long-term pattern. The pattern itself is finished years ago, but charts have a long memory, in my opinion. So that's going all right. And a couple of energy-related ones. Now that the AI bubble's being called into question a little bit, the nuclear power companies, the new nuclear power companies that were built to power all those chips, looking a little bit ratty. One is Bloom Energy, BE. This is down about 1.33%. Has completed this rather nicely formed top here. And then I continue to be short Sam Altman's company, Oklo, OKLO, having a nice down day, about 3.5% on this one. So just to wrap things up, as we look at the NQ, we've got it's nothing dramatic. All the drama's in precious right now, but we are down a little on NQ. And as I said, the rallies that we have had haven't quite mustered enough strength to match the prior rallies. And then lastly, just to wrap things up with the kind of most headline-worthy drama, silver. We've got an enormous bearish engulfing pattern on this, as you can see by this long shadow and this strong open. Lifetime highs on this, well into the 80s, and that got reversed in a big hurry. So this is the biggest reverse we've had maybe in years on this, certainly in nominal terms. So quite the shocker for those late to the silver game. Okay, I think we've just got a couple of shows left this year, and I'll be here tomorrow at the same time. Thanks for swinging by. Good night.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, boys! Turn up the charm.
Jamal, we are back, my friend, for the last call. Thank you so much for joining me and me joining you. How are you, my friend?
Doing well, man. Doing well. How was your Christmas? Everything go well there? Family, all that? No fights? None of that?
Yeah, I said it this morning. No drama. We had a drama-free Christmas. Last Christmas, my dog bit Nick
I didn't know
in the
this.
face. So that kind of put a damper on Christmas and New Year's, spending it in the ER room.
I don't remember this at all.
Yeah, we didn't talk about it too much. A little bit of a ticklish situation at home. You know what I mean? With one parent loving the dog and the other parent loving my son a little bit more than the dog. Yeah. So we were well, let's just say we didn't talk about it much. But anyway, no drama. Little babies running around more than anything. Got a 2-year-old now, 2-year-old grandson. I got a 2-week-old granddaughter.
Yeah, it's awesome.
So it's a much different party, man. Much different party.
Yeah, it is. We didn't
Now, what about you? You probably your clan probably got crunk or something like that. What'd you guys do?
Actually, you know what? It's winding down a little bit. I mean, because again, we got the 22-year-old, we got the 20-year-old, and then my 13-year-old, and I mean, he knows what's going on. I mean, as a matter of fact, he said, "Can we open up presents on Christmas Eve?" And we laid them out, and they were all laid out. Where'd we go? We went and did some putt golf. We did one of those putt shack things, like the fun putt golf. And she set it up like I had the boys outside before we left, and my daughter, we were all outside before we left, and she went back inside, put them all up. We come home, and it's like, oh my God, Santa showed up, and they were all like, oh cool, and nobody opened a gift, and my wife was like, I can't believe that they're not attacking the gifts. I'm like, yeah, that's where we are. So yeah, that's basically what
I'll
happened.
tell you where I am though. I mean, the wheel is definitely round because my 15-year-old is teaching the 2-year-old curse words, which is good because he doesn't like really the 2-year-old like he talks, but he doesn't talk like it's more like open, or more like and he knows hockey, like he knows Vinny plays hockey because we've taken him to hockey games, so he calls Vinny hockey. So when he goes to get the hockey stuff, Vinny said, "Let's go get the hockey shit." So he keeps
and they're sponges at that age too, right then. Like they're sponges, right?
Yeah. And the mom, my daughter, thinks he's saying stick. Because he doesn't pronunciate perfectly. So it's been we have that going on for us. So that's basically our Christmas. This is kind of probably the worst Christmas rally that we've had. I know you a little bit more, and Chris Vecchio and some of the other guys are all looking for this Christmas rally. Even the S&P, this is the worst 2-day Christmas rally I've ever seen. What do you think?
Yeah, I mean, well, prior to today, I mean, it was kind of headed in a positive direction, but it's almost not surprising that there's at least a little bit of red here today. 40 points at one point seemed like, it might be heading for something, but volatility has never really budged. Matter of fact, it's gone the opposite direction. That's been the day. But look, I mean, we all know who the star is here today. The 2 stars, 3 of them, as a matter of fact, the metals, man, the gold, the silver, the platinum. I mean, it's been a heck of a move here. I think you and I both were tweeting about stuff over the weekend that might have alluded to the fact that there was probably a turnaround coming here real soon. And boy, has it ever been the case.
Yeah, I mean, I was hinging more on past performance of when the CME and span margining, which I think is one of the best ways to margin something. They margin it on its volatility. As the product's volatility changes, the product itself changes, right? I mean, if something has an expected move of $2 in a month, and all of a sudden it has, a $2 expected move in a day, you're going to need more margin to hold those positions. You needed a lot less margin when there was a lot less volatility, and volatility, as we can see, although it has gone up, and it's gone up a lot. Gold was 100 and something volatility over the weekend. It was about 68 or so shortly after the opening. It's 64 right now, but we haven't moved really since we made that initial. We opened, and then we made that initial move down, and then we've been sitting. I mean, GLD actually is starting to get a little bit softer right now. GLD was down 4.5%, like gold is down 4.5%. 4.5%. I'm just looking at /GC.
Mm-hmm.
But sitting down here 4.5%, down around 18, 19, $19 or so, $18.50 to $19, pretty much for the last 3 or 4 hours.
Yeah, pretty much. They've kind of all been in a similar spot since, like you said, since the open. And again, they opened higher today. Initially opened higher, I think, when the futures opened, and pulled back, strong pullback today. So, that's probably been the biggest thing going on. Again, it's nice because you can trade a lot. You talk about GLD, you talk about SLV. SLV, I ended up doing a strangle and Jan against my longer put. I had a long put. That's literally all I had, the 75 strike put. Into this, and again, it all started last Friday, right? I mean, it's been starting for a while, but I thought Friday was like the day where it's like, okay, it's a little extended. You kind of figured a turnaround was coming. On top of the news, like you said, you saw what happened at the clearing, at the exchange level. So it's almost not that much of a surprise. I think from here is the interesting part. What happens from here? I mean, does it bounce tomorrow, and then is there more like a couple of days of sell off? But I think the interesting thing is I don't think. So
let me put you on the spot since you're thinking about it right now. What? Give me your silver. Give me your gold. Let's just call it 72 on silver and 43.50 on gold. Above or below on both of them? They're probably going to move in tandem, right?
Yeah. For when? For the rest of the week, you're saying, or for tomorrow?
Tomorrow's close. Above this price or below this price?
I think above this price. I think maybe 74 tomorrow. Not by much, but I think there's a somewhat of a bounce back tomorrow. My guide on this, honestly, Tony, is like October. What just happened in October, I think, is going to be a similar type situation. You get a bounce maybe tomorrow, maybe a little bit more sell off, but not by a whole lot. By the end of the week, maybe. It's just kind of weird to say because we got such a weird week in a way. We're missing a day, but I would expect by the second, we might end the week down. I think we're going to end the week down. I'll say that. I think silver and gold are going to end the week down.
So I asked Nick this earlier this morning. Even the S&Ps were down around here, maybe down around 25 or so, and gold and silver were doing exactly what they're doing right now, down around 6 or 7% on silver and down around 4.5%. On gold, and even the S&Ps were down maybe a 0.5 percentage point or so. And I asked him, which one is phony? Like, is the market, sustaining itself, holding itself up, or is gold too far down, or does the market have to go lower to kind of catch up to gold and silver? And we both thought, and I thought that that volatility would not come in by 30 cents today. Matter of fact, I thought volatility would be over 17 on /VX. And if you look at VIX, I mean, you're in the 14 handle now, 1404.
Yeah.
But you really have a very low implied volatility here. I thought the market was going to sell off with the metals the way they're selling off. What is your take?
I would concur with that. I'm actually, I think maybe in any other day, in any other type of week, maybe we'd be down more, 50, 60 with these metals. And I mean, and being down look, they're the best performing assets on the year. And they've kind of been moving. I just feel like when you have a big move like this in these big assets that a lot of people have been trading more recently, sooner or later, people start probably getting out of equity stuff to try and get back into these a little bit more, So it's just, however it may be, I'm agreeing with you. I think I'm a little surprised that the market did not sell off more. But again, I think it's just I don't know. I guess it's because it's such a light volume week. I'm not really sure. Maybe we see what happens come. I do wonder if this is like a precursor for like next week. Like, do we get a similar thing again, or does these metals do a little bit different than what I said? Do they end the week a little bit higher and flat? I don't know how much, not higher than last week, but higher than what they've done today. And then next week, this same thing really happens again, but with more volume, I wonder. I mean, that's the thing, dude. The amount of options that were traded in SLV today, I think it's number 3 overall, just behind SPY and Qs. The volume is huge in these names today. So, and this is a week where a lot of people aren't really trading. So I just wonder if this type of thing happens next week. And if it does, it's a little more serious.
Yeah, you were talking about a lot of people not trading. You look at the futures, 729,000 is just a little bit heavier than Friday, not that much. And Friday, we really went nowhere and did nothing. And as you can see here, there's not a lot of flashing lights going on with these changes. SPX it's really been, it's 69.08 right now, but 68.50 or so seems to be all of December so far. Where are we? We're wrapped around 68.50. We haven't gone anywhere. The prior 2 weeks or so, we were a little bit below 68.50, and starting the last week into this week, we're a little bit above 68.50 or 69.07. We haven't gone anywhere, and that's why volatility hasn't gone anywhere, and it's gone lower. 16.55. I did not think we were going to get under 17. I've said that a few times already today. I really didn't think we were going to get under 17. As a matter of fact, I have some short premium in SPY. And a moment ago, I was positive on my P&L with SPY down around $2.40. So you really on just the premium portion of it, you really do have you're really getting a mulligan here. You almost want to close and go home, but where do you hide, right? I guess you can hide in a GLD or something like that if you wanted to, but completely different animal. I mean, you might be seeing. Well, I'm going to ask you, would you rather be directional in gold? You said you're going to be higher in both, you thought. I kind of echo the same feeling with you, but I really think it's a premium sell now. You look at GLD, and all of a sudden, there's a market there.
I never like selling premium in the metals. I think you actually have the opportunity.
It's my worst subject.
I think you have the opportunity to do it now, particularly in SLV, obviously GLD to some degree too. But yeah, I think you actually have the opportunity now. Again, like I have this. I just had a long put. I had the long 65 put heading into Friday. And then because of the big move that happened on Friday, I was like, I'm getting a little more short delta on this. And I got a long 75 put, rolled it. And these are in Feb. And then with this move today, I feel like I have some options, a couple of things to do. And then I looked at Jan. And it's funny, we were sitting on the show, OTCL, we're talking about it, and I was like, yeah, I don't know if I want to sell vol. And then I looked and I was like, wait a minute. This vol's like 70-something like vol. Like, oh, wait, hold up. We might have to sell a little bit here. So I sold the strangle. Yeah. Sold the 62.70 strangle because it is high. And that's the one thing that we always love, right? The fact I love when these moves happen because there's just so many different things you can do. So yeah, I think you have an opportunity to do a bunch in there now. Unlike, like you said, the actual market right now, I looked at some of these names, Tone. We were looking at Palantir today, looking at Microsoft, Meta. Those names are they've like dead in the water. NVIDIA, somebody asked about a trade in NVIDIA today. We put on this diagonal, but these names are just so quiet. And by that I say, as we had Palantir up, that name started at $75 to begin the year, by the way, $185. So it used to move so much. We used to trade it so much, but now it's really gotten quiet. NVIDIA, same deal. Microsoft, Apple, they're all really quiet. But hey, the GLDs and the SLVs of the world are trading. I saw something over the weekend, which I never really thought about, but I know it makes sense because of the way that they're made up. I forgot that basically GLD and SLV are some of the huge, largest assets in the world because of what they hold, just by size, right? Like they're like in the trillions or whatever. I mean, they're way in the trillion. Like they're big. I forgot how big they actually are. These are massive things, man. When you really look at it.
Yeah, no, I totally agree with you. And we've had pretty much back and forth action. When you take a look, and again, I just have the high option volume list here. You got Tesla down, $13, $14. You got Costco, down $6 and change. Costco's been one of the weakest of the group in quite some time. Caught itself a small bid last couple of days. But Costco down $6. Meta down $4 and change. JP Morgan down $4.
Wait, what's
Banks
MRUS?
A little bit weaker. The whole rumor about some bank going belly up because of silver. You look at the upside here. It's not the usual suspects. I mean, I know you got Reddit up $8, but I mean that traded all the way down to 223 this morning. But then when you go through this, it really is like the oil-related stocks, your Walmarts of the world. This is not your leaders to the clubhouse to bring you higher. So you've got stocks that are a little bit beat up today that have taken us to the promised land. If you're going to go with your thesis that maybe gold and silver are going to be a little bit higher in the coming 24 to 48 hours, there might be some room here in some of these NASDAQ stocks too. Just playing devil's advocate, what do you think? We haven't had 2 days of action and really in especially to the downside in quite some time.
It's true. Yeah, you really haven't. And I think that does give you somewhat of if you call it advantage, you're right. It does give you that to some degree. But I mean, outside of that, you're right. These are the only things I've really looked at today. I think if you retraced all the times I typed in tickers, most of them are related to probably gold and silver today. I really haven't typed in many other tickers today because there just really isn't much of those that are interesting, otherwise. I mean, SLV.
But aren't you a little disappointed in the volatility in gold and silver today after the opening? I mean, you had like the first hour, and that was really about it. I thought it was going to rock and roll all day long, and I really thought it was going to wag the tail of the market, kind of maybe even making the market a little bit depressing, 50, 60 handles to the downside. Matter of fact, when we signed off, I told everybody to be careful. What I should have said to everybody was sell the crap out of all the premium you can find because it's just going to collapse. And it did.
It did. Well, look, I mean, there's some people listening to you. This thing, SLV, I said it was number 3. It's actually number 4 on the trending options list. SPY, SQs, SPX, and then SLV. 2.3 million contracts a day. I don't think this thing trades more than 150 to 200,000 contracts a day. Easily 10 times the volume, dude. That's enormous. GLD, only 728,000 BT dub. I don't know if that's a function of this thing just being that much more like bigger in size, $300 versus $70-something.
Yeah,
but
probably.
It probably is, right?
Yeah, I mean, you look at selling a put in SLV and, you're looking at a couple $100. I mean, it's not even, both sides, calls and puts, a couple $100. It's not a lot of buying power. You certainly got a lot of, there's 4 times the amount of volatility as you do in SPY and SLV. And it's been trading like it's more than 4 times.
I mean, should that be higher? Is that a glitch in the matrix right now?
Trading like it's more than 4 times, right? I don't know if it should be higher or not, but it is what it is, right?
Well, look, $3.84 it's saying plus or minus for the rest of the week. What do you think? And that's LV.
Yeah, it's a big one. I'm going to take a look right here if I can, real quickly, if I can get my calculator out here. I'm going to try to take a look at what this gold silver ratio is. 4,353 divided by 72.15. It's trading about 60.33. It got up to about 61.5. It got down to around 56 or 55 over the weekend. Nick and I took it off today at the higher end of the most recent range, around 61.25, 61. So it's moved a point, which is $1,000 on the gold silver ratio, meaning that gold is down 4.5%, almost 4.5%. You'd have 2 of those. That would get you almost 9%. And silver's down 6%. So that's where you get that 1.25 or so difference between the gold silver ratio. So that still continues to collapse. So if you liked that trade in the 70 handle, you got to like it flirting with busting 60 here.
It's late 2013 is essentially what that goes back to. So that's 10 years. Late 2013 was the last time it was around this level. It's over 10 years, almost 12 years.
All right, so
that's rare. I mean, that's kind of
right now.
Rare.
I think it's an interesting pair. Buying 2 gold, selling 1 silver.
Yeah, it is. It is. What did you ever get caught up in this? Somebody was asking me about this recently, and I was telling them I couldn't remember the story. I know Tommy used to talk about it all the time. Obviously, Frankie did too, about some dude that used to have a bunch of silver. You guys would take delivery on a gang of silver. Were you involved in any of this or what?
Yeah, back in the day, but it was a long, long time ago. I try to block it out. I mean,
but I remember you guys talking about it. You saying the guy basically screwed you over. But I mean, if you kept all that. Right?
Yeah, I don't try to remember the bad things. Like, I don't even remember what year my father or my mother died. You know what I mean? I put that in the same, not in the same love, but it hurt. It hurt. You know what I mean? It hurt. It was one of the more painful things in my life. Yeah, we were buying silver as it was going lower. And since it was going lower, he was happy to sell it to us higher on delivery day. It was not a problem. And then when we basically pegged the bottom and he had a sell it to us lower, significantly lower than where it was trading, we couldn't find him anymore. Yeah. That's basically how that Ponzi scheme worked.
Oh God!
But we took delivery.
Yeah. I mean, is this just a classic? It's just been bought up too much, and this thing is just it was time to fade some, or is there a bigger issue here? Because there's all these theories. I'm sure you've seen them. There's all these conspiracy theories, which again, we typically debunk stuff like that, but there's a ton of them out there on Twitter. I mean, Chinese are limiting the sell.
I mean, I love it. I mean, I read all these reports that now Twitter, you get more news from Twitter than you do any place else. We don't even call it by its right name. It's X, right? It's no longer Twitter, but we still call it Twitter. But that's where we all get.
I refuse to.
That's more fake news too, right? I mean, it's a cesspool. I mean, it's funny. I mean, like I love it for its comedic warmth that it has, and you do get good information disseminated quite quickly, in a nanosecond most times. But you got to weed out the BS. You got to weed out the AI of the big fat person falling out of a pool into a Grand Canyon kind of thing. You know what I mean? And you got to weed out, when they say like a bank went belly up, and then people go, is it JP Morgan? Is it Citigroup? Is it Goldman Sachs? I'm sure there'll be some story about some. I'm just going to throw Wichita under the bus. Some Wichita bank that had to come up with money that it didn't have and had to go to the Federal Reserve for something like that. I'm sure there's some truth to that rumor. I don't think it had any bearing on what the metals did today. They just went too far too fast. When they went up 6% or 4%, nobody cared. There didn't need to be a story.
There didn't need to be a
because
story.
the public is typically long, right? When it goes down, the public wants a story, and it's the same way on the way up. Yeah, more aggressive buyers, things go higher. More aggressive sellers, things go lower. There's certainly the background story about, the Tomahawk missile allegedly using a pound of silver, and we're going to go to war. I mean, you know what I mean? So like, people start getting crazy, man.
Yeah.
Sometimes it's just supply and demand, and sometimes it's just price action.
Yeah.
Don't always need to have a reason. Doesn't have to be a aha bell ringing reason. The aha bell ringing reason right now, I think, was because the margin change.
Yeah, I think you're right. I think you're right.
You had every opportunity overnight. We were open to higher, as you said. We traded higher for most of the session at night. We were just a little bit off of our close. You had everything that you wanted to do if you were a futures trader to get out or reduce position or something like that. And even this morning, you had a chance too. So it wasn't like it was a layup. But I think that's what today's action is. I think premium selling in gold, silver is probably the way. And if you can do it with a directional bias, maybe like a 1x2s or something like that, or even 1x2s on both sides, if you don't want to pick a direction. I think there's some money to be made there. I think it's going to be hard pressed to make money directional in like the equity markets, like the ES and such. Maybe some individual stocks, but I think the equity markets are dead going into the end of the year. And by the way, the end of the year, we got our guess the market, right? We got to give away some money. I know this is it says submit your guesses by January 2025. Maybe we'll do this again in 2026. This is just up here because we've got a $2,000 cash prize going to be given away to somebody on the SPX closing price on Wednesday, the 31st, on this show. So if you submitted your pick and you forgot where it is, well, we'll have 2 pages of names there. Maybe your name will be in there. I'll be on the show on Wednesday. I think Chris Vecchio is my MC. Is that correct?
I believe it is, yeah. Mikey and I are going tomorrow, and yeah, I believe you and Chris are going Friday. I would have been. I know I'm nowhere. Not that I was going to get us a prize on this, but I was way off. I was not expecting 6,900 in SPX for this year.
You'd be surprised how many people were. I think I was 68 and a quarter, which I guess is not. I mean, it's not out of here, but it would be a 3-time the expected.
Listen,
move.
I'd love to mess with you, but I got to give you props. That's pretty damn good, man. Like, I think I was like, well, I don't know where did we start? We started. Where did we?
You don't want to know where SPX started the year?
Yeah. Oh, 5,900, 5,800, around 58, 59. Okay.
Yeah, we started around. like you said, around 58.
I mean,
59.
1-2 was the first day, right? So the open on 1-2 was 59.03. So
the more important thing in August was you got under 5,000, and here we are at almost 7,000. I mean, that's a big move. You don't. Now here we go. We want to grow your trading community. Everybody, earn $100. You got to run up to the screen real quick right now with your phone, and if you're watching on a computer, a little bit easier. You can hit that QR code. There you go. Get you right there.
you know what annoys me even more is when you see something, when you have your phone and there's a QR code in it, and it's like, how the hell am I supposed to scan that? What am I gonna do?
It is a little. You can send me an email. I'll send it to you. Bad@tastylive.com. You got it. You got a guy.
I do. Yeah.
And
That's
your guy is stumbling into the close here. Even the S&Ps are down 27, NASDAQ down 130, Russell down 16. Holiday volume on the E-mini S&Ps, NASDAQ, Russell, and the Dow down 260 and change. Volatility actually up a little bit off of its lows, down 20-ish cents. Gold is sitting down just about 4.5%, 4.33% right now, and silver down about 6.5%. You can see silver is about $2 off of its lows. Remember, that's a $2,000 move or $20,000 move in /SI, and gold is about about $40 or so off of its lows for the day. Jamal, give me some parting words. We didn't even talk about Bitcoin today. Bitcoin, on the afternoon show, Bitcoin traded up to 91,000 last night, down to about 87,000, and it is sat at 87,500 all day long. No volatility there. Tomorrow, when you come on the show for last calls, E-mini S&P going to be green or red? It's 50-50 coin flip, but
Green.
put you on the spot.
Green.
Green.
There it is.
Why not? Santa Claus rally finally comes.
Yeah, we'll see.
All right, I heard you all 3 times. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Thanks, Jamal.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
The stocks were up a little bit today, but that's not really the story. It's Monday, December 29th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York. He's Elias Spivak in San Francisco. We're here for the next 25 minutes or so as we take you through the rest of this trading day, wind it down. And what was a day for the ages if you have been a metals trader. Silver implodes, touches 82, 83, goes back down towards 70, closes in around, we'll call it 6.5% lower, about $72 here. If you left the market on Wednesday going into your Christmas Eve, you'll note that we basically closed the gap and then stopped selling off. We closed 71.87.5 there. We're currently 72.10. Similar price action in copper today, which was off by a healthy 4.6%, which likewise gapped open higher after Christmas and then closed that gap today and more or less closed there. Gold off 4.4% that self. We'll just do a quick around the horn here, Ilya, because I think that we should be spending most of our time in the macro world on gold, silver, copper, et cetera. Stocks here slightly weaker. Yeah, slightly weaker. 0.4% or so, S&P, NASDAQ. S&P settles down right at its 1 week moving average for what it's worth, bounces off of it. The NASDAQ not quite through former range support, 25,650 or so. Okay, so no harm, no foul so far. The dollar's a touch firmer, I guess you could say that, but pound, the yen do pull out meager gains. Bonds are generally stronger. 116 here in ZB, which is a line in the sand for me personally as a bear. But who cares about all that? Because we have so much to talk about with the metals. Ilya, you and I and Mr. Westwater were exchanging text messages last night at the open, how wild and crazy this market was. Yeah. It was a wild and crazy market on Friday too, when prices were up 10%. So we settled in here and we basically just deleted Friday at the end of today's session. Whatever that illiquid between the holiday and forced market being open because we can't have 4 days closed in the US, whatever that was. Where do we stand here now at $72 in silver? Is this just illiquid holiday crap?
It's that, and it's the CME, which increased margins on metals, which is what the CME does and generally what exchanges do when you get the kind of wild price action that we've seen. This is not unusual. But obviously there were a bunch of weak hands out there in this illiquid holiday period that didn't want to stomach higher margin requirements. The announcement came last week on Friday, and it came with a chance for a response now after the holidays. And here we are. I don't think this changes anything. I think it probably makes things soggy and annoying for a little bit when you get, at one point today, what looked like a 10% face plant for silver. I'm not in it, but I am in gold. And my God, do my gold futures look ugly. They're not net down a whole lot. In fact, they're only down a little. But man, they were up a lot more than they are now. And all of those gains are gone. And now I'm down just a touch. So not a bad overall state for the position, but not great, considering all the gains that were there have evaporated. But I am undeterred because I think the story here, much as it has been over the past year, is the same story. And it's not related to yields, and it's only a little flattered by the weaker dollar. Stocks are much more flattered by the weaker dollar than this is. This has moved separately, it seems like, of those things, and still reflects this kind of emerging polarity in financial spheres of influence that don't get along, namely the sphere around the US, the sphere around China, which everybody seems to be getting ready for the possibility of a butting of heads that's disruptive, on and off. I don't think anybody's really betting on the US and China will decouple, not the least the US and China. But when you look at sort of the de-risking we've seen, in particular from other central banks that have been hoarding gold reserves, China, of course, has been hoarding gold reserves faster than anyone, almost in a bid to say, well, in the event that the US and China, for some periods, I don't think extended periods, but some periods, disrupt payments connectivity and trade settlement connectivity in a common unit, in this case dollars, you need a go-between, a non-sovereign go-between. And that's metals, mainly gold, but also all of the adjacent metals. And so you have, I think, that story going on for at least 3 more years, minimum. And so this is not going away. This looks like a discount.
It's not going away. I think you bring up the margin hike in silver, and it's it's fairly,
and gold and copper and metals just across
the board, right? The margin requirements going up on silver. It's a fairly straightforward process. It now costs more capital to hold the same position. It's not a call on direction. It's a risk management decision made by the clearinghouse. The CME isn't saying that silver is too high or too low. It's letting us know that the price swings are large enough that we want a little bit more buffer. In 2011, you saw multiple margin hikes along the way, and that ultimately helped kill the silver market rally alongside the Euro Swiss floor in the S&B was at September 6, 2011. I think you raise an interesting point. Like, is the margin change itself enough to completely kill the rally? It's at $71.80 here, off 30 cents in the past 5 minutes. If it's fueled by structural demand, central bank diversification, and folks who are trying to put on hedges for various reasons, no, it's a weird occurrence. And quite frankly, I look at the uptrend from the late November lows, and if I'm a bull, there's something ish to hang our hat on around 70 here, if that's where we decide to bottom out today. But the one thing that I did want to ultimately want to discuss today was something that I saw in Twitter over the weekend. It's a thread from a gentleman by the name of Alexander Campbell, A.B. Campbell on Twitter. Mm-hmm. His profile of Macro Stoic undersells things a little bit. He worked for Citadel, for Bridgewater as their main macro person. He now runs a hedge fund called Black Snow Capital. And he posted this 2 days ago. So this isn't coming today, a retrospective on what happened with silver's price action. It was more of a roadmap for what could happen next. And I was curious as to what you thought or what you think of some of the points that he makes, some of the things that could, for example, keep the rally going or kill this thing as we are ultimately in the late stages of a cycle, or perhaps midway through a cycle here. He noted in the next 2 weeks, there are legitimate short-term bearish narrative pressures, which silver bulls will have to navigate, which of course seems very insightful, Prescient, given what happened.
One might say we're navigating them as we speak.
So don't be surprised.
We were talking about this on our text thread yesterday. I was mentioning, I've been talking to civilians around the holidays, and they've been asking me about the silver rally. Surely this is a sentiment extreme. I was saying this at a time when silver was flat on the day, having rallied a lot.
Yeah, no, you weren't saying this.
Came back to neutral, and I'm like, you know what? This might be a sentiment top here, maybe down before up. And then the next time I looked was some hours later, and it was down 10%.
Well, it's interesting because on Tuesday when we were talking, we were looking at that, what happens when silver reaches a 40% return over the past, rolling 13 weeks, a quarter, if you will. And the forward returns weren't great, but that was at 71. And then silver jumped up to 82 still, right? So like, it's not exactly a timing mechanism. So I don't think even this is a surprise, but he said, don't be surprised by a red candle. It's coming. The question is whether you buy it. He talks about his repositioning changes, but here are the bearish pressures. One, tax selling. You're in a trade that's up a lot, like uncomfortable conversation with your accountant a lot. For anyone holding shares bought to exercise long call positions that went into the money, there's serious reluctance to sell them before December 31st, especially if they're less than a year out and looking not only at capital gains hits, but the difference between short-term and long-term tax treatments. So this creates some bullish pressure now, which means bearish pressure is coming around the corner by January 2nd. The dollar rates thing. The GDP print came in hot. There's a lot of two-year easing that could come out of the curve, forcing policymakers to choose between a stronger dollar or higher short-term rates. Neither is great for shiny rocks denominated in dollars in the short term. And then point 3, CME raising margins on metals effective December 29th. That is where we are today. So if you're levered in metals, this matters. Higher margins equal higher capital requirements, forced liquidations for the undercapitalized. This is the playbook that killed silver in 2011. The CME hiked margins 5 times in 8 days. Leverage collapsed. The rally died. So should you be scared? Well, the thing is, to a large extent, the margin on silver was already way up past the part. And so the recent increases have an impact, but must let so proportionately. Much of the demand is, as we shall see, is physical. I thought that to be really, really, really interesting, because when we take a look at the CME margin hike history that Mr. Kamba outlines here, we see that today the margin is 17%. This gives you a 6-time margin leverage. At its peak in 2011, the margin was 10%. So this isn't like in 2010 and 2011 when I could put down $1 and gain 26.
No.
In silver, right? This is now I'm putting down $1 and I'm gaining 6 in silver. So it's a much less over leveraged position to the upside, in my view, taking a look at that. He also brings up a point that overbought is where we are. You're going to see a combination of overbought from every painting astrologer on FinTwit. Feels personal. Technical selling begets more selling. So overbought relative to what? There's a copper substitution.
These concepts, overbought, oversold, they're nebulous concepts. I'm not a big subscriber to the idea that they exist, because the market is going to go where it's going to go, and it's going to go not a tick higher and not a tick lower than it wants to go. And this idea that something is overbought according to some measure, and of course everybody has their own measure, but the idea that if something is overbought, it must then stop going higher is, I think, about as silly as the idea that when something like a currency diverges from purchasing power parity, it should go back. Well, yeah, but it can diverge from that arbitrary yardstick for years and decades. So what's overbought? What's oversold? It's silly. I think the reality is that the market has a tendency not to move in straight lines. And so there's oscillations up and down around a direction. They also clearly find periods of trending whereby those oscillations have a slope: higher highs, higher lows, lower highs, lower lows. The trend in these metals is higher. Can they go higher still? I think our understanding of the thematic underpinnings of the rally, whether they're right or wrong, maybe we're wrong. Maybe sentiment's going to change. But I think if you're operating on the kind of thought process as we are, and this is your thinking for why the metals are up, that hasn't changed. So what do you have here? A discount. Is this the place to take advantage of that discount? I think this list of considerations is a great guideline for why maybe this isn't the time to go and buy everything right now. You still have, to the point here, tax year selling that might be coming in January. You still have a big, ugly red candle with no sign that you're not going to get a further big, ugly red candle tomorrow or the day after. So you don't need to see the price action show you something like it's attempting to bottom. But in my mind, am I chasing this down? Absolutely not.
Mr. Campbell goes through and
points out the copper conversation, whether or not it's actually worthwhile for copper to be used as a substitute. And he points out that you really get into demand destruction territory for silver once it moves up to $134 an ounce. That's where you start to see it makes sense for companies to adopt copper, so to speak, and get away from silver, even if there's a reason, a physics reason, which I got a 3 on the AP physics exam. I'm not going to pretend I know what I'm talking about here, but there's a reason why you want to use. There's a reason why you want to use silver.
No, sir, not for me.
Does this impact the solar industry more than it did recently? Yeah, we're seeing that the newer solar panels are having increased silver as part of their density, as it turns out of in terms of generating megawatts. So, look, those are the bear cases, right? That's what he's saying. It's tax selling. You have technicals maybe getting overbought, which, Ilya, as you know, RSI getting overbought isn't a bad thing. It's once RSI leaves overbought territory, do you start to get bearish? But you don't fade something because it's overbought. Or oversold for that matter. Like, you buy the thing when it leaves oversold territory. Otherwise, it's in a strong momentum market.
Well, and this is the whole thing. When people start talking about, chart art and whatever, it's all very cute and all, but if you understand the mechanics behind something like an RSI, it's simple arithmetic. And you don't need to be a believer in some sort of voodoo. All RSI is a ratio of closes higher to closes lower over a period, usually 14-day running average. If something is going up and its capacity to close up is rising, then it has momentum relative to its capacity to close down. So high RSI in a rising market just means there's momentum. You want that momentum to break, which is why what I look for in RSI it isn't some sort of loony notion of overbought or oversold or whatever these arbitrary lines are. I don't care. What I care about is if something is going up but is losing the capacity to close up relative to down, or if something is going down and is losing the capacity to close down relative to up. That is to say, if the price is making higher highs and RSI is not, if the price is making lower lows and RSI is not. And those divergences tell you there is a change in momentum underneath whatever the price action you're seeing. That's meaningful from a second grade arithmetic level. It doesn't require any sort of voodoo, any kind of crazy thinking or any kind of indicators. It's second grade math.
If there's a bull case here, there's a few narratives going around, and I'm not even going to get into the whole bank that was short went under, and there's 31 pounds of silver in every Tomahawk missile. So last week was the fact that we were gearing up for World War III, and then today is due to the fact that World War III is canceled. I kid you not. Some tweets with thousands of likes just... Anyhow, China's weaponizing silver. They're saying that China's an exporter of refined silver. It's now trimming this export licensing. Listen, China exports most of its silver to India and the UK, so whether or not it impacts U.S. prices. But it's another sign that maybe the metals market is getting constrained. If you're a bull, you have to like that the physical premium still exists. You're seeing that on the streets in the Middle East, in China. Physical silver is selling for north of $85, $90 yesterday. People are willing to pay that price, even if they can buy the futures at market at 77. Is the paper wrong? Is the physical wrong? Ilya, you frequently point out to me when we see big moves on Sunday. Oh, gold's up 4%. Yeah, but Chris, spot's only up 0.5%.
Yeah, look at the spot.
And then
hold on a minute
back
now.
in. You did it, right? Fantastic. Otherwise, vol has replaced. We're seeing that there's a ton of call skew in here, and the call skew is staying there, and the market continues to move up with volatility. It's not necessarily a crowded trade at all. That's another bull position. ETFs are just catching up right now. Solar continues to eat everything. This is the most interesting chart that comes out of this, though. Right? If I'm really worried about silver, just some levels to look at. If I'm thinking about, oh, well, silver's going up too much and we have to get to a copper break-even level, that's probably 125. if we're getting to a place where it kills the solar industry, it's probably 134. So, is there headroom above is the question. I mean, in theory, yeah, I guess this thing could run up more, Ilya, before you have to make legitimate substitution effects.
Sure. And
but
also,
is that why I just want to take a step back here on the bull and the bear case for a quick second.
Sure.
If silver doesn't have the Friday that it has, and it doesn't have the Monday that it has, and it's still sitting around 72 to 73, it has another 1-2% day. Friday, today, it's meandering back and forth. Are we getting all these crazy stories out here where people are retroactively trying to backfill narratives to justify the price action?
Yes. But that's the way things always work. That's not unusual. This is the way every single major market move is met with by the peanut gallery, as it were. The collective sort of voice of people watching the markets begins oftentimes with some major move happens and everybody comes out and goes, well, this is happening because this, and this is happening because that, and this is happening because this, no, that. And it's probably a combination of a lot of those things. And some of those things are utter nonsense. My personal favorite is when people come out and say, well, something has crossed a technical level and therefore the move. And go, no, that's not how that works. But that's okay. Somebody needs to read John Murphy. Technical analysis does not cause things to happen. But there are legitimate conversations out there saying, you know what? The move was long in the tooth in the sense that it attracted a lot of speculative interest, especially into the end of the year and especially in thin liquidity. And then the CME told everybody that in order to stay in the casino, they need to ante up more than they thought. And people said, well, if I have to ante up this much, I wasn't here for some sort of thematic idea. I was here because the thing was going up. I don't want to ante up this much. But does that change the story? No, it just shaves participation from some of the more speculative, more opportunistic folks. And that's fine. That doesn't do anything except maybe make the rally more resilient as it builds from here. And maybe it'll build with less hysteria and slower. This is the kind of healthy washout that can sustain a rally longer as opposed to undermine it. And so has anything changed is the thing I always go back to. Like, everybody can have this story or that, blah, blah, blah. Has anything changed? Has the trend changed? Is the price action telling you anything differently materially? No, it isn't. The trend since even November, forget the rest of the year, since November, the trend hasn't changed. So
the trend has.
Is this the place to get worried? I don't think so.
We'll see what happens. And I mentioned this on Futures Power Hour earlier, but I think it's worth repeating here now. What makes this such an interesting time is that you can really cherry pick information, as it were, to fit your narrative. And it's what makes this so dangerous. It's a Hardy Boys choose your own adventure kind of story.
You can even tell AI to choose the narrative for you now and go, hey, give me 5 narratives. Now pick the one you like better. You could even outsource it.
So what we see on Friday, a few occurrences here. Both of these come from at Subutrade, who it's a great follow on Twitter. On Friday, SLV's volume hit a record of 9.6 billion. It was only the 7th time in history that we saw SLV volume exceed more than 7.5 billion in a single trading day. On average, one day later, the market was lower 3.62%. SLV lost 7.14% today. A week later, SLV was lower by 10.5%. A month later, 12.76%. 3 months later, 6.65%. A year later, 27%. So there's your bear case. You have your silver volume spike on Friday. It is your capitulation, your exhaustive move to the upside. What if it's the other side, though? Silver, after it makes a 1-year high and then falls at least 6%. This is also the 7th such occurrence in history for silver.
Okay.
1 day later, that would be tomorrow, average 2.12% higher, 67% of the time. A week later, higher by 7%, 100% of the time. And 3 weeks later, higher by 11.2%, 100% of the time.
Mm-hmm.
So I say choose your own adventure, Ilya. If you're a bull, there's things that you can look at and feel pretty comfortable about. A rising uptrend, a fact that this type of action after seeing a new 1-year high and falling at least 6% in a single day typically occurs, well, before the uptrend resumes. Or you could look at the volumes that we saw at the end of last week and tell yourself that this is the top. And today's price action with that enormous bearish engulfing bar on that daily time frame, that key reversal, that is indeed the top. But Ilya, we're out of time here on overtime. Hopefully silver bounces back. We will be back tomorrow and Wednesday, I believe, as we wind down this trading year. Final 2 trading days of the year here, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya in San Francisco, I've been Chris in New York. We'll catch you tomorrow. But make sure you stick around here for now because Ilya is still here. He's with Macro Money up next on Tasty Live.
You're there, everybody.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The money match event starts now, exclusive to new tastytrade customers.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk.
What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
We are back. Hope everybody had a lovely holiday. This is Macro Money. I'm Ilias Pivac, head of global macro here at Tasty Live. And shock of shocks, those of us in macro land are going to be focused on about the one thing that stands to impact markets this week from our macro perch. And you'll be shocked to hear it is the Federal Reserve that we are focused on, as we often are. And what we're going to take a look here at to see, of course, in trying to figure out what might be coming next as we gear up for 2026 and what interesting things it might bring after this rowdy year that we've just experienced, is minutes from the Fed's most recent meeting in December. And of course, this is not going to necessarily change the market's thinking, but it's also not going to be passed over without impact. And it seems like we're looking at the very essence of that dichotomy in markets here as we come back on this first Monday since the holiday closures. Of course, we still have some holiday closures this week. We're only here for a couple of days until we get into the New Year holiday. So we're not through the thin liquidity period just yet. But nevertheless, we did have a major holiday already passing us by. And as we come back here to open trade today, what we find is one of the most sharply aggressive rallies that we've seen, and really one of the most sharply aggressive moves that we've seen in any direction across markets. That of metals going into the holiday is facing violent reversal. And it's very easy to look at it and say, oh, well, this is because the CME raised margins on the metals, or it's because of this or that. The move was this or that level of overdone, et cetera, et cetera. But the simple thing here is trade is not over for the year. Catalysts do emerge. And in this kind of thin market action, those catalysts can be much more impactful because you need, simply put, less money and fewer people to move the price around. When there are generally fewer buyers and sellers out there. And so if one were out there making a sizable move, or if a catalyst were to come out and were to inspire some sort of a sentiment hiccup, as clearly we see here today with gold, silver, platinum, palladium, then that can look like an outsized move. And the move, especially in silver today, which at one point was a loss of as much as 10%, even more, that's certainly something to be paying attention to. So what we're going to do here is we are going to treat this week's minutes release with the seriousness that such a thing would command, and maybe even more so, because although it's probably not going to change the Fed's calculus near term, it might certainly be inspiration for sentiment to do this or that thing. So let's start here with a look at where we landed last week, for these markets. And what we see here is a generally positive kind of vibe. We can see here that stocks had a decent week of gains, 1.3% for the S&P, 1.1% for the NASDAQ. In fact, tech has been a little bit soggier in general recently, and we can see this sort of slight underperformance here. Yields down, but small across the board, 10-year down 2-year down, crude oil consolidating, euro and yen a little bit higher against the US dollar, Bitcoin still soggy, and that gives you a sense of just how the current environment is perhaps not as uniformly risk on as it might seem. You'd think that in an environment where sentiment is buoyant, you would have a situation where Bitcoin as a kind of out on the spectrum risky asset, further to the risky side of the tail than, let's say, the S&P 500 or even the Russell, let's say. You nevertheless have sogginess and a sense that maybe you are not quite as into La La Land and all things rosy as maybe appears elsewhere. But nevertheless, not a terribly impactful week, barring that major move that we see in gold. And that, of course, is to some extent an avatar for moves that we saw in precious metals more generally. So we're looking at a situation now, of course, as we start this week, where those moves are being reversed, but only just. We're not seeing a break of the longer-term dynamics, and it looks more like what we just talked about, the kind of back and forth gyrations of an illiquid market. So with that in mind, what are we looking at in the week ahead? Well, as we've just mentioned, it's kind of all pinned on the Fed, and we are going to get a little bit of Chinese manufacturing and service sector PMI data. We're going to get the official numbers from the NBS, that's the National Bureau of Statistics, in conjunction with the CFLP, the Chinese Logistics and Purchasing, let's call it research hub inside the government. And what they're going to tell us ostensibly is that China's economy remains in contraction mode. We talked about this in detail last week about how China's economy looks deeply anemic going into the new year and maybe makes for a meaningful risk. Definitely check out our conversation on this last week. We'll link it to this video if you're watching it on YouTube. Otherwise, just check out tastylive.com. We have show archives there, and you can see the show from last week where we talked about China in granular detail. And so here, as ever in the logic of PMIs, 50 is neutral, above 50 is growth, below 50 is contraction. And as we can see here, all of the expectations for these numbers are pointing to readings below the threshold here. And so we are looking then at a situation where we're still in contraction mode and the story continues to be of anemic performance. And of course, the upshot there is that the global economy still largely needs a buoyant U.S. if it is to give us continued growth, because of the major engines of global demand. Really, the U.S. is the one that's still looking relatively perky, whereas Europe looks still sluggish, despite something of a recovery last several months, and China still looks like it's in contraction mode. And therein then comes the focus. So we're going to get minutes from this FOMC meeting, and that, of course, is a critical input into whether the U.S. economy is, in fact, able to be that engine of global demand. Here's what came out of that December meeting. This is the summary of economic projections that was updated at that time. And what we find here is the Fed still is looking for just one rate cut next year. It was 3 for this year, and the Fed delivered on that. over September, November, and December meetings. For next year, still only sees one cut. For the year thereafter, one more. We can see there were slight downgrades in inflation expectations, coupled with slight upgrades in growth expectations. But in all, no big controversial changes here. But this bit here is something that has been sticking in the market's craw, as it were, for a while. Because if we look at what the markets think is coming next year, they're at 47 basis points over the next 2 years, whereby next year is at least 2 rate cuts. We have 59 basis points on the board here, and that's moderated with now about a 50-50 chance for a rate hike in 2027. So what we're looking at is at least a single rate cut departure for next year. Of course, what happens in 2027 is far enough away now that it's tough to really hold the markets or the Fed to anything exact. But whereas the Fed is calling for a cut, the markets are not seeing it. And so maybe we're starting to approach something like balance here between the markets and the Fed, if not on the timing, then at least on the trajectory, because at 47 basis points over the next 2 years, that's 2 cuts by the end of 2027. And of course, if we look at what the Fed has, it has 2 cuts by the end of 2027. They're just not quite spaced the way the markets have them. So are we in a place where this still matters? Is the market going to move on this? Well, we've seen that the markets are responsive and have been responsive. This is the relationship between the policy expectations view and the S&P 500. We can see here, once we stopped getting meaningfully more dovish on 2026 policy expectations, and we started to turn the other way. And in fact, this anchoring occurred in the cumulative count. The S&P 500 stopped rallying and is now basically sitting here stuck since late October. It's gone down, it's come back, but overall hasn't gone very far and is generally idling. If we look at what's going on with the US dollar, it had a very ugly start to 2025, and for the better part of 6 months was going nowhere but down as you got this very dovish adjustment in policy expectations over this course here from the start of the year really until about the middle, where policy expectations started to anchor, and so did the dollar. Now we can see here it has started to decouple somewhat from the short-term gyrations. So here, the dollar stopped falling long before the policy outlook bottomed. And more recently, it's pulled back to the bottom of its range, even as the outlook got less dovish, which normally would be the kind of rate increase situation that would be supportive for the currency. So the dollar has seemingly gone into some sort of consolidation mode, as have policy expectations. So the question then becomes, well, what is going to happen in these minutes that's either going to break the log jam here or break the log jam here? And which way will these log jams actually resolve? Are we going to get a significant adjustment to this, and so stocks might resolve higher into year end, or are we in for disappointment? Well, when we look at the statement here from December, doesn't particularly look very controversial. Obviously, it reflects the idea that there has been a loss of confidence temporarily in the data because we have a government shutdown that derailed a lot of it. And we have that reflected in some of the phrasing here. We likewise see that really the big policy difference here was the introduction of these asset purchases meant ostensibly to make sure that the disconnect between the Fed's target and actual overnight borrowing costs is closed. That disconnect has been spiking basically going into the fourth quarter of this year, and at one point got as high, the difference between effective Fed funds rate and the secured overnight financing rate, the SOFR, which is a measure of actual interbank borrowing costs overnight. We've seen that at one point going into the fourth quarter, that disparity got as high as 36 basis points, which is in excess of a whole rate cut. So things have quieted down since, but in no small measure because the Fed ended quantitative tightening, that is the reduction of its balance sheet, and then decided that it is going to essentially paper the way to abundant liquidity, at least through the April tax season, to quiet the markets down. So we have a situation here, not necessarily where there's more easing, but there was a technical adjustment made to make sure that the markets don't get weird and illiquid, as it were, and borrowing costs don't spike for very good reasons, or don't spike for not very good reasons. That essentially policy continues to be calibrated not only at the Fed as a target, but in the markets in practice. But really, that was it. Now, the real interesting bit came, of course, from that forecast of only a single rate cut and from the commentary from Fed Chair Powell, where he said that we are now in a plausible range of neutral, and the committee is now in a state where they don't need to be in a hurry, where they can wait and see. The labor market, according to the Fed, is in a state where the real numbers look like an average loss of 20,000 jobs a month. That's with Powell coming out and saying, well, the overcount on headline NFP numbers is about 60K. So if we're running at about a positive 40K on average, reduce that by 60K because that's the average overcount, you're running at about a loss of 20K jobs a month. And when you look at the most recent update to employment figures, you end up with a story that is, depending on how you look at it, either worse or better, which of course compounds the fact that the Fed looks at this and is sort of scratching its head and saying, well, if we don't have to move in a hurry, let's not. Because if you look at the 4 months that were updated in this most recent catch-up release for jobs data after the shutdown, you end up with a run rate of 50,000, not 20,000 in job losses using the Fed calculus. But if you look at all of 2025, it's only about a 5K run rate. And that's after the revisions to August and September that we just got this month, as well as the NFP numbers for October and November. So is it worse? Is it better? Tough to say. And so what you end up with is a situation where if you are the Fed and you have the opportunity to not make a leap quickly, maybe you take that opportunity. When you look at the situation on inflation, we can see underlying inflation shows mixed signals. There's evidence that services inflation is moderated. Goods inflation is being driven by tariffs, but if those were removed, well, then we don't have as big of an issue. In fact, we're into the low twos for inflation and so close to target. The CPI numbers that we've seen seem to bear that out. We have inflation that came in weaker than expected. Expectations were 3% across the board. We're down to 2.6, 2.7. But as we've learned from what Fed Chair Powell was telling us, these numbers might well be distorted. because we don't necessarily have all of the data that we needed. And while consumer spending remains solid, CPI numbers might be a little wonky. And no surprise there, we see some disconnect. Here were the GDP numbers that we just saw updated for the third quarter. And indeed, consumer spending came back in a meaningful way. It was quite soggy in the beginning of the year, but has since meaningfully improved. And that, of course, is easily the most important part of the story here, because, as we can see, consumer sentiment is by far the most important input into overall dynamics here, because, of course, what we have is 68 or so % of overall demand being shaped by what we see on this front. And so with that in mind, this is the most important thing. But what typically happens when you get strong growth is you also get some pressure from demand on inflation. And so as we look at this, we end up with a situation where the overall story starts looking somewhat suspect. And this would be the disconnect that the chair is talking about. So you get this rebound that should be inflationary, but the inflation numbers are relatively weak. And maybe that's just incongruous data. Maybe that's going to get worked out as the data is revised and updated over the coming months. The sort of baseline case for what the Fed is saying seems to be there. Goods inflation is evening out. So perhaps they're right that the tariffs are going to get rebased out of calculation by the time we get around to April or so, when the meat of the tariffs will have been through the year-on-year calculation window. Services, the biggest part of overall inflation, as we can see right here, it still makes up the lion's share of what goes into this. So of the 2.7% inflation rate, 1.84 percentage points is services. Goods are now positive, having been negative for much of the run-up into these tariffs, but modestly. And in fact, they've ticked down a little bit from the prior month, and things are relatively stable elsewhere. And indeed, we get that here. Services inflation moderating. But the disconnect in this most recent CPI data, especially on the core number that the Fed cares most about, and the realized results when we contextualize them with the Cleveland Fed nowcast, probably the most widely looked at forecast for inflation, is at this point the greatest it's been since the data counting errors of the pandemic, when everything was closed. And so collecting data was very difficult. So can we take this data at face value? Maybe not. What then of these minutes? Well, they are likely to highlight these very issues. They're likely to tell us, look, we gave you 3 rate cuts, as we said in September. By December, we made good. But now, we're not going to commit to much of anything. We're going to give you a symbolic sense of what we think direction is, but we're not going to commit this way or that. And frankly, we're going to stand aside. And perhaps that's why this short-term financing facility magically runs through about tax season, because not only is that the liquidity crunch that the Fed is talking about, it's also where the tariffs roll over largely into year-on-year inflation calculations. So perhaps the Fed just intends not to do anything between now and perhaps going into the middle of next year. And for markets that generally seem to want more rate cuts, this may well be disappointing. At this point, we've got an 83, almost 84% chance of no moves in policy, certainly no easing, but no moves in general in January. We can see that's only calcified over the recent weeks and months. So the likelihood of no change has strengthened relative to a week ago and a month ago, whereas the likelihood of a cut has declined. And so the message really is going to perhaps be around just how disappointed are markets that the Fed is not more dovish. And if they are in fact disappointed that the Fed isn't prepared to do all of this, seemingly, into next year, well, then the response from stocks and the response from broader sentiment may well be negative. Positioning-wise, I am begrudgingly still sitting in my long gold exposure because I don't think ultimately that this margin change does anything beyond the episodic readjustment, and that eventually the sell-off that we see today, sharp though it is, will turn into a buying opportunity. For now, I'm willing to continue to entertain that idea. I'm still short the dollar, long the Canadian dollar, the euro, and the pound in the current version of this exposure, and still short risk, expecting for the haircut there to continue. So still short the Russell, the NASDAQ, and the S&P, which is seemingly working today, but it's a long ways to go yet, through put verticals across all three. And with a little bit of a kicker, still short a little bit of Bitcoin through an IBIT put vertical there. And that is macro money for today. We're here for a shortened week this week, 3 days of the usual 4. So we'll be back tomorrow, as ever. If you're watching on YouTube, like and subscribe. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. Happy trading. Keep in mind liquidity is thin, so be careful. And macro money, we'll see you tomorrow. Happy trading.
Come on, you know we can't